You need to know so that you don't fall for any April Fool's Day pranks today. Let's start with the headlines. Indian markets open the first day of the financial year with a strong setting. You'll get all of the action, insights and intelligence right here. Asian markets mostly higher on China's better than expected manufacturing data in February. Infosys is set to get a tax refund of over 6,300 crore rupees. That could have a positive bearing on profits in the fourth quarter. Adani Total starts production at India's largest bio-waste power generation plant. Gas prices from deep water exploration are cut by 1% for the next 6 months, and onshore domestic gas prices, meanwhile, are up by 3% for April. FMCG companies faced cost pressures as prices of wheat, sugar, coffee, cocoa, and inputs for detergents continue to rise. A special analysis on NDTV Profit. And it's a major setback for Erdogan in Turkey. His political opponent is likely to win the mayoral election in Istanbul. Now, US prices have increased moderately in February based on data that was released on Friday. The rise in input costs or cost of services rather outside of housing have slowed. That's according to the Personal Consumption Expenditures Index that was released on Friday. The reading came in at 0.3% compared with a revised 0.4% in January. The understanding is that prices are moderating, and that gives some credence to calls for a rate cut. Though some argue that with the economy continuing to show signs of resilience, there's really no need to jump the gun. In international markets this morning, you had 2 of the 3 early rises that were trading, and in fact, you had the Japanese Nikkei that was flat. It is now down by as much as 0.7%, and you have reasonably strong gains in the Chinese markets. Of course, the Hang Seng in Hong Kong gaining by close to 1%, but we talked about that manufacturing data from China that is leading to a shot in the arm for the Chinese onshore markets as well. Big news in Turkey as the Turks dealt President Recep Tayyip Erdogan and his party a big electoral blow on Sunday in a nationwide mayoral poll or vote. The election has reasserted the opposition as a political force and reinforced Istanbul Mayor Ekrem İmamoğlu as the president's chief rival. With most of the votes counted, İmamoğlu led by 10 percentage points in the mayoral race in Istanbul, while his Republican People's Party have retained Ankara and gained 15 other mayoral seats in cities nationwide. All right, now it is the start of the new financial year and effectively also the time when auto companies are going to be posting their volume data, wholesale data for the previous month. Let's set you up with everything that you should know before the start of the day so that when the numbers actually do come through, you will know how they stacked up against expectations. Puneet is joining in to give you some perspective on that. Puneet, what are the key numbers to focus on this morning? Morning.
Yeah, good morning, Alex. Now, do know that this is the start of the financial year, and March is generally a good starting point for getting a view of the next financial year. Now, as we look at the sales, there is a couple of things that you need to know. Now, in last year, March 23, there were festivals such as Navratri as well as Gudi Padwa that has seen some seasonal effect on sales for all these automakers. Now, since we start with the two-wheeler makers, we see that there has been roughly 15 to 19% growth for the top 2 players, Bajaj as well as TVS. Now, these guys have been doing really, really well this year, and that has transcended them into finishing the year on the strong note. Despite there has been, the sales has been across regions, while we see for like the likes of Hero and Eicher is low single-digit growth for them. They see that EVs is also one of the key segments that has worked very well for TVS, upwards of sales of roughly 150,000, while for Bajaj Auto as well, with the new Chetak, it has done really well. Moving on to the passenger vehicle or the four-wheeler space, we see that all players have done really well, upwards of 12 to 16% of growth for this particular month. Now, specifically, they see that the CNG as well as the SUV segment has done really well for all players, including the likes of Maruti with the Grand Vitara, and M&M and TTMT, which Tata Motors take forward their momentum from the previous year as well. Moving on to commercial vehicles. Now, this is where you see some seasonality of the festivals moving forward in the month of April. We see Ashok Leyland and as well as Tata Motors, the two big players. We've seen that medium and high commercial vehicles are affected somehow, but the light commercial vehicles are flat. Do note that the monthly volume is one of the key indicators here. This has risen tremendously, and all automakers in the commercial vehicle as well as the LCV space end on a really high note. We've seen sales of roughly 18,000 for players like Ashok Leyland on a monthly basis, and they're ending March on a really good note. And finally, we see for tractors, Escort as well as M&M, this has been a really tough year for tractor in the tractor segment for these two players. They see a retail demand decline of roughly 7 to 9% on this. Now, agricultural demand appears to fare better vis-a-vis the non-agri space. While the agri space has seen some declines, it's expected to end the year on a good note.
Right.
Back to you, Alex.
Thanks so much, Puneet, for laying that out for us. And over the course of today and tomorrow, you'll get those numbers, so you know what to expect. Let's move on to some stocks that you should be watching out for heading into trade today. We've got Varsha joining in to give you some perspective on the likes of Aurobindo Pharma as well as RVNL and more. Morning, Varsha. What's on your list today?
Good morning, Alex. So, few of stocks which should be on the list today, starting with Aurobindo Pharma, wherein they've commissioned 4 state-of-art manufacturing facilities for few of their products, which includes penicillin G, then 6 APA and injectable products and granulation. Then we have RVNL, wherein they've emerged as lowest bidder for 3 of their projects worth almost 300 crore, wherein first project is from railways for order of upgradation of electric traction system, which needs to be executed within 18 months, and the second order is for EPC project for electrification, for which contract value stands at 95 crore, which needs to be executed within 240 days, and the third order is from EDCL for installation of transmission lines. Now, this is a JV contract. The contract value stands at 58 crore, that is $7 million, wherein RVNL shares is almost 49%. Then we have Torrent Power, wherein they've received a letter of acceptance from their distribution unit for 150 megawatt grid connected wind solar hybrid project, for which the contract value stands at 1,800 crore, which needs to be executed within 24 months. Then we have Garden Reach Shipbuilders, wherein the company has notified that company's turnover touches a new high. So they've recorded year-on-year growth of 33% in their annual turnover for FY24, and they've achieved annual turnover of around 3,400 crore. Now, Q4 FY24 revenue stands at 823 crore, which is a growth of almost 37% year-on-year. Lastly, we have Canara Bank, wherein they've accorded approval for initiating the process of diluting 13% stake by listing its subsidiary Canara Robeco Asset Management. Now, this Canara Robeco is Canara Bank's JV with Oryx Corporation Japan, wherein Canara Banks hold almost 51% stake. Now, if you see the mutual fund's average AUM stands at almost 79,000 crore in October-December 2023 quarter, and currently 6 AMCs are listed on exchanges, which includes HDFC AMC, UTI, then Aditya Birla, Nippon, Shriram, and ILNFS. So these are all the stocks that we have got for today.
On your list, absolutely. Thanks so much, Varsha, for getting us those details. More stocks to watch out for, in fact, and we've got the likes of Infosys. There's a tax refund that could be in the offing, and there's Adani Total to talk about. Mika is joining in to give you some perspective on those. Morning, Mika. What are we talking about today?
Good morning. So up first we have Infosys, which has received orders from the income tax department for 4 different assessment years, and they expect a refund of 6,329 crores, like you mentioned, from the income tax department. Now, this is 1% of their current market cap and 28% of the annual net profit figure of FY23. Now, they on the back of this, they've also received assessment orders, which are basically tax demands to the tune of 3,058 crores. So when you do the calculations, the company could stand to have the net receivables of 3,271 crores. The company is currently evaluating the accounting impact for the current financial year. Then we have Adani Total Gas, where the Adani Total Energy Biomass, which is a subsidiary of the company, has commenced the production at the Barsana Biogas plant, which is situated in Uttar Pradesh. Now, this starts the phase 1 of operations, and the project is supposed to have 3 phases, and the plant will have a total capacity of 600 tons per day of feedstock. Once the 3 phases are complete, and they'll generate 42 tons per day of compressed biogas and 217 tons per day of organic fertilizer. And on completion, the plant is expected to be India's largest agri-waste bio-CNG plant. Then we have Indian Oil, which has entered a binding term sheet with Panasonic Energy, and this is to formulate a joint venture to manufacture cylindrical lithium-ion cells in India, which are lithium batteries. Now, they're going to form a joint venture given the growing demand of the 2-wheeler, 3-wheeler EV and energy storage systems. And according to estimates, the EV boom is expected to increase the domestic lithium-ion battery market from 20 gigawatt hours in 2022 to 220 gigawatt hours by 2030, which is an annual growth rate of 50%. And lastly, we have MOIL, which has hiked the ferrograde manganese ore prices by 3 to 6%, and the fine and chemical grade prices by 3%. And they've also hiked the prices of electronic manganese dioxide for the month of April by 2,000 rupees per PMT. And the impact is the price hike will lead higher revenues for the companies. However, steel producers could see some pressure due to increased costs, as manganese is a key material for steel production.
Right. Mika, there's also an update on gas prices from deepwater exploration and the pricing of onshore gas as well. And that's going to be significant for the exploration companies, right? What can you tell us about the latest?
Yes, so the PPAC and the ministry have informed that the gas price ceiling, which is applicable for gas discoveries in the deep water, ultra deep water and high pressure, high temperature areas, has been set at 9.87. Now, this is a 1% decrease from the previous $9.96 per MMBTU. And now the ceiling is applicable from the period of April 1st, which is today, to September 30th of 2024, which is the next 6 months. Now, ONGC, Oil India, Vedanta and Reliance Industries are all 4 exploration companies that are engaged in deep water exploration, so they would see some impact. A lower price ceiling basically means a smaller profit margin per unit sold. However, on the domestic natural gas price side, which is a blended price, it's now for the month of April, from April 1st to April 30th of 2024, it's at $8.38 per MMBTU, which is up from the $8.17 last month, which is a 3% month-on-month increase. And the PPAC has also notified that for gas produced from ONGC and Oil India nomination fields, the APM price ceiling has been maintained at $6.5 per MMBTU.
Got it. Thanks, Mika, for getting us those details. So certainly watch out for those stocks. We have to slip into a very quick break. There's more on the other side, so do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade,
Or a long-term investment
all you have to do
is ask Profit.
Welcome back. You're watching All You Need to Know. It's time to get you a little bit of perspective on the global trends that are playing out in economy as well as markets. My colleague Neeraj Shah is in conversation with Citi Research's Robert Sokin, the senior global economist at Citi Research. Listen in.
A bit better than anticipated, and Europe in the recent couple of months has started to show some bit of green shoots.
Yeah, this is a great question and something where we're grappling with in real time. Going into this year, we were expecting a pretty substantial slowdown in the global economy. The reasons for that are interest rates still remain high, and we see a lot of lagged effects of that in the system. Fiscal policies likely be less supportive than last year. The momentum within services sectors that we saw power growth last year, we think is fading, and the manufacturing sector was likely to remain soft. But now that being said, what we found is that even though we're still holding on to that view that growth is likely to slow, we've been marking up our global forecast over the last few months. The US has been holding up better than expected, as you noted. We've marked up the euro area over the last 2 months, still looking for soft growth there, but better than we had expected a few months ago. And then if you look at the range of emerging markets, there's a lot of positive news there as well. We just marked up our growth forecast for China from 4.6% to 5%. Korea, a lot of other East Asian economies are showing strong momentum as well. And India closed last year very strongly, and we're looking for a solid year of growth in India for 2024. So even though all those reasons lead us to believe that growth is likely to slow, I have to admit that over the last few months, we've been surprised to the upside as Q1 data have generally come in better than we've expected.
Would this therefore lead to a slightly higher inflation expectation than otherwise believed? And could therefore the global asset uptake party be disrupted by slower and lower or both action from the Fed or the other global central banks on interest rates?
Absolutely. And this is the key question because, as you said, growth has been surprising to the upside. That might also mean that inflation surprises to the upside. And we've seen a fairly mixed inflation picture at the beginning of the year. Now, there's a lot of seasonal volatility issues to deal with in the data, but in general, you're still seeing fairly high services inflation in most major economies around the world. And that's really the key is can you get services inflation to come down without a bigger slowdown in growth? If you can't, and the history would say it'd be very difficult, then, as you said, this resilience in growth may mean resilience in labor markets and services inflation. And that in turn would probably mean a slower pace of easing from major central banks. Now, that doesn't mean that you can't, this time couldn't be different, and you could get inflation coming down with growth being resilient. We're seeing a lot of improvement on the supply side of the economy. As supply chain pressures have unwound, labor markets are healing. So you still may be able to get that services inflation down without a big cost of growth. But I think that's the big question mark for markets and central banks. And if you're in that world where growth is resilient, but inflation is also coming down slower, that means you're going to get less cuts out of the Fed this year. And that means you're going to get less cuts out of other central banks as well.
So what does that mean, Robert? I'm very inclined to understand from you. What does all of this mean for flows? Hitherto, I've been given a barrage of opinion that unless China growth picks up, flows into EMs will not pick up as well. Now, contrast that with the fact that China growth is picking up, but if the world growth is picking up and if inflation is higher and rates cuts are slower, that may have an impact on flows as well into emerging markets. So how do these two juxtapose in terms of what happens to asset classes by virtue of flows as well as natural valuations because of growth?
Yeah, it's a great question. And I would say to your second point about natural valuations, this would be a broadly positive story in general if the global economy was able to weather the amount of shocks that it's seen and continue to perform at a strong pace. So I think, that's first and foremost would be good for asset classes more broadly, and risk as the global economy can continue to perform at the solid pace we saw last year. Now, to your point about EM versus DM flows, I think it raises a really critical issue, which is, you've seen emerging markets in this cycle, they hiked a lot.
All right, so that was Robert Chalkin of Citi Research speaking about various aspects of the global economy, including flows. Of course, we'll have that up on the site over the course of the day, and we'll also play it out later in the day in case you want to watch out for that. Let's move on though and talk about the brokerage notes that you should watch out for in the morning before the start of trade. And Harsh Saita is joining in with some details of what Motilal Oswal is saying on ICICI Lombard. Harsh, what are you picking up? Morning.
Hi, morning, Alex. What you're essentially seeing is key takeaways coming in from the analyst day that ICICI Lombard has hosted. And, what's being suggested is with regard to two big shifts on the business front. One is on the tech side, which I will come to. The other one is on the traditional business side of things. With regard to market share on the health front, they're increasing, or they're set to increase their market share from the current 3% in health to 4.5% over the next 3 to 5 years. This can be substantial, and this can also have a knock-on effect on Star Health, which is largely a 30% plus market share in the health insurance space. So watch out for both of those on the back of this commentary. The second one is with regard to motor. Now, motor has faced a lot of headwind with regard to pricing. They are expecting motor market share to remain in the 9.5 to 11% band. So they're continuing to be bullish with regard to the way in which motor will move for them. Growth is expected to sustain now, and pricing, they believe, has gotten better. So that's on the business front of the business side of things. A lot of commentary coming on the tech side. There's plenty happening on tech. They're leveraging on AI and machine learning to try and push tech better. They're expecting tech synergies to start to trickle through. Motilal Oswal gives it a target price of 2,000 rupees, 34 times EPS. FY26 is how they value ICICI Lombard.
All right, thanks so much, Harsh, for getting us those details. Shifting focus, GST authorities have urged the IT ministry to block 60 offshore online gaming platforms as it seeks to restrict entities not complying with India's registration laws. We've joined by Janani, who's a reporter on this story. Janani, what are the key details here?
Good morning, Alex. Indeed, the IT ministry has been asked to block 60 more offshore online gaming platforms. This actually brings up the tally of platforms that have been asked to be blocked at 170. Now, a quick recap, the 51st GST Council meeting noted that a 28% levy would be charged on online gaming, and offshore entities would have to register with the government and also pay this 28% taxation. Now, in the event that they do not register and comply with Indian regulations, they would face the likelihood of being blocked. Now, this action by the GST authorities is a direct follow-up of this particular announcement that was made way back in October of 2023. Now, these platforms have been recognized as non-compliant, and they've already had over 110 of apps that have been sent over the last 2 to 3 months. Of that 110, 60 were blocked. The balance is being reviewed by I4C, which is a cybercrime unit headed by the Home Ministry. So we expect more will keep coming on this front, but authorities are swiftly on this, is what we're getting to hear. Back to you.
Thanks so much, Janani, for getting us those details. Let's, as we wrap this show, hear from SEBI Chief Madhavi Puri Butch, who was speaking about the T+0 settlement that is currently being tested. Listen in, and thanks so much for watching.
I have a long list of colleagues, as well as bosses, who would testify to the fact that I'm not only a very difficult boss to work with, but an almost impossible subordinate to work with, because I just won't give up. Until a problem has been dissected to the last degree, I will not give up. My colleagues often tell me that problem solving with me is like peeling an onion. It makes everybody cry in the process. But by the time you are done peeling layer after layer after layer of the onion, you suddenly realize that there's no problem left. So when India became the first large market in the world to move to T+1 settlement, and just 2 days ago when we went live with optional T+0 settlement, the process felt pretty much the same. Lots of onion peeling happened to make for a global first.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome to India Market Open. I'm Smeena Nalwala, and joining me is, as always, Tamanna Inamdar and Neeraj Shah as we gear you up for trade on the very first day of the week. Good morning. Neeraj, I believe we've got lots of excitement lined up. It's a new financial year. It's the brand new week. We're coming out of a pretty solid week of trade as well. And there'll be a lot to expect in this week as well, from auto sales data to PMI to RBA policy meet. A quick look on implied Nifty, also indicating to a positive start this morning.
Yeah, and just before we get to the whole roundup of the global picture, and good morning, Samina. Just before we get to that whole global roundup, just a brief update of what's happened thus far in the March series and how April could hold us in positive vein. So I think that is to be watched out for. So look at what the March series did. For example, the Nifty index futures rollovers were at 69%, which is lower than the 3-month average, of course. But there was weak market breadth. 46% single stock futures rose versus 66% in February. So we had market breadth which wasn't the best in the current series, in the series gone by. But the implications for April, and if history is to be believed, there is probably very good times ahead or good times ahead. Let me put this into context. Of the last 16 years, 11 of the 16 times, there has been an average gain of 4.81% for the Nifty on the 11 times that there has been a gain. But even if you count the 5 other times when there have been losses, so 16 times, 11 times we've gained, 5 times we haven't gained. If you take an average of the total 16 times for the month of April, the overall average returns are about 2.95% for the Nifty. Samina, from 20 to 400 or 500, if we get 2.95% on average, or if we have a positive month like the 11 times have been, and if we get an average of about 5%, I don't think too many people will be complaining.
No, I don't think anybody is complaining. And if you just put this in, just looking back to what we'd had a glamorous, phenomenal 2024. We ended the year, interestingly, quite well. March was a month of consolidation. Most of us were expecting the markets would cool off. Interestingly, the last few days came through really well on healthy volumes, right? You did have the Nifty, the Sensex gaining, broader markets resumed the outperformance. And I was looking at some of those numbers from F524. Neeraj, Tata Motors, Bajaj Auto, Adani Ports, Coal India and Hero MotoCorp have all vaulted over 100%. These are Nifty 50 large companies we are talking about. I think barring HUL and HDFC, which concluded the year in the red, declined 10%, every other Nifty count has actually gone home with pretty solid gains. As we go into this brand new year, the excitement is there. The FIs are back after a short hiatus. 35,000 crores of equity was bought in March. So all in all, I think we're setting ourselves up once again for a pretty solid April.
Yeah, so that's the romantics within us which love talking about what the year has gone by, but the focus should also be on how the year shapes up and what are the global cues in store as well for us.
Yeah, absolutely. Hi guys, and
good morning. We've swapped sweets. How are you?
It's quite nice here, actually.
You're enjoying it good.
So it's I think global cues have been pretty positive. Q1, calendar year Q1 for global markets has also been pretty good, and I think that's an important data point to look at as we look at what's next, because obviously all of this historical data we're talking about today is in the context of what's coming next. The big factor for India continues to be, one maybe important point at the end of the week with the RBI not expected to change much, and then you have elections. Up to there, maybe a bit of a pause in FI inflows, a wait and watch on the markets, and after that, things could really change and zoom up. But having said that, let's take you through what has been happening across the world. US markets have closed on the positive on Friday. S&P and Dow, in fact, have closed at record highs once again in Friday's trade. And we were talking about the, how the first quarter calendar year has been for the US markets, and it has been stellar by all historical accounts. So, for example, the S&P 500 was up 10% in the first 3 months, the Dow up 5.5%, the Nasdaq up 9%. Nvidia was the big star, of course, 81% on that stock in the first 3 months of this year. So what has been happening over the last few days? And, we had a truncated week with 2 sort of long weekends bookending. So let's say you're back to business today. What has been happening? The data you need to look at is US payrolls will possibly hit the 200,000 mark for a 4th month. That's making those who are hoping for a quick Fed cut a little uncomfortable. You're seeing that in the bonds as well. So the 10-year Treasury, for example, was 4.21% on the back of that jobs data. Inflation data came in on Friday. It was Good Friday. It's in line with what was expected, 2.8% year on year, 0.3% month on month. Brent and crude continues to be a little bit of a bother. OPEC Plus and now even Russia coming on board with the idea of extending production cuts. So you are seeing that $87 sort of mark on Brent. It's not going to bother us too much. And guys, this was a conversation I had managed to have with Hardeep Puri, the petroleum minister. And I asked him, 87.90, does it bother you? And he's like, no, not really yet.
Not until we hit 100.
Not until we hit 100, because things are sort of changing, and our push on renewable is, of course, the long term.
But that's more long term, right? And just talking about crude, crude is up 6.5% alone in the month of March.
Yeah.
It's up 10% year to date. So while that number may not be scary, if you just look at the percentage gains, they're actually pretty phenomenal and almost scary, I'd imagine now.
It is.
And there is no concerns on the geopolitical front, and you can weigh in on whether the concerns are for crude to be pushing up so much more. This is largely supply driven.
Yeah. It is
Deep
these
insider.
OPEC Plus, these
Crude is
OPEC
a
Plus
deep insider
companies.
of what happens to geopolitics. Somehow, if it's not really
Is it a
perking up too
precursor?
much. I don't know. I mean, I usually believe that crude markets get it more right than wrong. And if the crude markets are not quite moving up.
But 7%, 6.5% in a single month?
Still, I mean, it's refusing to go above that $87 on the Brent, right?
So far.
Despite everything. So far. Yeah, of course.
It's
so we'll know when it moves.
So that was the perspective I also got, that it's a bunch of producers who are now deciding that we need to, it's a bit of a cartel in that sense. So that's the story on crude.
Just one important thing on the global piece before we move to the local as well, that Jerome Powell's comments on Friday Post, when he's saying that, yes, the inflation data is exactly in line with estimates, which is great, but doesn't mean that we need to do a series of rate cuts soon. So that was the other interesting
June is
piece.
soon or not is something we'd have to wait
I think
and
there
see.
should now be a separate course in understanding what Powell is saying and what he really means to say, because you have these very cryptic messages. At the end of the day, you have to watch out for what he does, because that's what really matters. Just a quick roundup of what Asia is looking like in the open, and important data coming in from China, which is positive. That's why you're seeing green over there. Leave the Nikkei out of it for a second, but Shanghai up 1%, because your manufacturing PMI for China has come up slightly higher than expected, and that will be seen as a positive. So you're seeing the Asian markets largely perhaps looking positive. Just a quick look at what flows have been like last week on the last, I would say, markets day of the week before, which was Thursday, and perhaps also reflecting how tepid overall volumes might have been on FPIs, but DI is lapping up, maybe year-end or financial year-end quotas to fill up. But now, forward and onward, Neeraj, to what it's looking like right now.
Yeah, and I mean, it was, I think we spoke about this partly on the trade setup in Thursday's session as well, that what if there is some bit of short covering seen in 22,000 and 22,200, because that is where the call positions were completely jammed. And I think some bit of it was on evidence in Thursday's trade, wherein with the index moving up, a very strong set of short covering happened both in 22,000, 22,200 calls. And that kind of led the indices slightly higher, in addition to everything else that happened. And remember, banks actually did well. I mean, you had private banks participating, you had FMCG participating. And very likely that this momentum or this positive bias could continue. It's very rare that Bank Nifty has shown momentum in the last couple of months, led by private banks, in addition to SBI, of course, and faltered immediately the next day. So most trading commentaries that I read, including Dr. C.K. Narayan's over the weekend, seems to suggest that the positive momentum in the private banks might well continue. So that is to be kept in mind. There's a bit of a tricky call here on tech, because tech by far has been underperforming 2 series on a trot. Can it make a bit of a comeback with the global mood looking okay? And there being some brokerage uptakes that have come in. Morgan Stanley, for example, has given a positive target on HCL Tech and a few others. So, and there is the preview notes that have started to come in. So if tech performs slightly better than anticipated, who knows, there might be a trading uptick on tech. So that's to be kept in mind. And lastly, I mean, I'm guessing we'll talk about it in detail, but just from amongst everything else, we saw auto stocks, consumption by and large do well on Thursday, FMCG, auto, and two-wheelers in particular because of the expected momentum. So it could be interesting to see what two-wheeler stocks do in the session today. So from a sectoral perspective, banks, autos, maybe a bit of tech, who knows, might all be in focus this morning.
Yeah, a tech rally is going to be interesting. If it does even kickstart, I think with Infosys reporting earnings, will be the first to be reporting earnings. It'll be interesting to see whether it's going to be buy the rumor, sell the news. It's expected to be a benign quarter once again for IT players. So even if you do see a pullback, it may be largely technical as opposed to low level or value buying any of these tech stocks will be seeing for now. Well, in terms of another important data point that came in before we went into the long weekend was India's core sector growth came in at 6.7% for the month of February. This growth, of course, the sectors that it covers is coal, crude, oil, steel, cement, electricity, fertilizers and refinery products. And for the month of January as well, it was revised to 4.1%. So that was a data point that we had in. India's forex reserves continue to soar for the fifth straight week. Again, for the week ended 22nd of March, India's forex reserves stand at $642.63 billion. Important because we've seen what's been happening to the dollar-rupee pair in the last couple of days of trade. The rupee has been on a bit of a downward trajectory, largely because of dollar strength. And a few days last week, we even saw the RBI conspicuous by its absence. So enough ammo. If the rupee corrects further, you could see the RBI actually intervening, as always being the invisible hand supporting the local currency. But let's quickly move on to stocks and sectors that you want to watch out for. Auto stocks, Neeraj indicated that two-wheelers will be in focus. Remember, analysts are expecting double-digit growth for two-wheelers, single-digit growth for commercial, for passenger vehicles, and commercial vehicles growth is expected to remain subdued. Auto stocks will be in focus on back of those numbers that will start rolling in today. So stocks like Tata Motors, Maruti, Hero MotoCorp, M&M, TVS, Ashok Leyland, Aisha, Escorts, and Bajaj Auto is what you want to watch out for in trade today, or rather for the rest of the few days. Two of my stocks that I keep seeming to catch over the last couple of weeks is RVNL and HAL. RVNL is once again a big order win. They've emerged as a big sort of winner in lowest bidder for the upgradation of the Gorakhpur electric traction for about 148 crores. This comes in after they've also emerged as a lowest bidder for the project worth 95 crores for the NFR Construction HQ Electrical Construction. They're in a JV with Salsa Technology Engineering, and they've emerged again a lowest bidder there too for a $15 million project. So lots of order wins. RVNL has been in focus over the last couple of weeks on bagging multiple orders. Hindustan Aeronautics not too far behind. It's another morning, another order win for the defense major. They've signed a contract worth 1,173 crores with Cochin Shipyard. So both these counters will be what you want to watch out for in trade. HL has already seen a very sharp up move last week, but those gains and momentum could continue on HAL as well.
So a couple of stocks on my radar, and we were talking about IT. I love the story for Infosys. Have any of you ever got a huge tax refund and felt very excited about it?
Not to the tune of 6,000 crores.
I mean, wow. No matter what else they do this quarter, and yes, they will be kicking off the whole, season of results. For the quarter, this is going to be one highlight. Refund worth 6,329 crores from IT department. They really need to look at who's doing their books and did somewhat mess up there. But anyway, it's good news.
Yeah. We should find out who their HR accountants are.
So they have got this assessment order for the annual year 22-23 with a tax demand as well of 2,763 crores. The idea is that this will help. This will help one way or the other in this quarter. So you might see an up move there on Infosys just on the back of this. Of course, the larger IT story is a longer term kind of play that you'll have to assess.
Yeah. So which is why I was saying today that watch out for IT today. Morgan Stanley on HCL Tech target price raise, Infosys this guidance uptake. We are entering a season wherein the brokerage notes will start coming in, previewing the IT companies.
Infosys is not a guidance uptake.
Not a guide. No, HCL Tech this thing, and Infosys getting this revenue.
Yes, yeah. Infosys
right?
is a windfall.
So
they
today,
did nothing to
it'll be a today's move, but could be an interesting.
Yeah. So Infosys done nothing great to deserve this. This is either luck or maybe poor accounting in the past. But anyway, Infosys one to watch. Torrent Power, another one. Samina was talking about all of these orders. They have a LOA for a wind solar hybrid project, and it's a fairly big one. So you could see some move on the stock. 150 megawatts with a cost of 1825 crores. You will see revenues coming in the first 24 months. So Torrent Power is another one. Adani Green Energy is the other one that I wanted to talk about. Now, their Khavda plant is really going to be a game changer in terms of the amount of solar power it's going to produce. So it's operationalized an additional 163 megawatts of solar projects at the Khavda plant in Gujarat. And now the total capacity has gone up to 225 megawatts. A lot more because, typically after a long weekend, you have so much news coming in, but I'll stop at these three and then see if we have time for more.
Yeah, no, we'll find time for more for sure. There are 2 or 3 names that I want to highlight and then we'll do the second round. So top of my list, NMDC, watch out for that one. Iron ore futures have slumped to a 10-month low, and therefore I would watch out for NMDC in the session today. Let's see if there is a bit of a negative reaction on this one. There is a note from Jefferies on GAIL. They have maintained and underperformed with a target price of 150, which is a downside to the tune of 17%, if I'm not wrong. The point that they're making, there's no change to the PNGRB newly notified unified tariffs for the months of April and May, but the order does not take into account the higher costs for GAIL. And I think there is where the problem might be. They're also saying that the risk reward is unfavorable with the stock trading at about 1 standard deviation above long-term averages. So watch out for GAIL in the session today and 2 downticks. And then I'll watch out for Indostar Capital. Cohesion MK Best Ideas, which is a Madhusudan Kela entity, has bought about 7.6 lakh shares at 186 rupees a piece. Now, usually this name would evoke some response. The stock is not too far out from the levels at which the purchase was done. So watch out for Indostar Capital. Could be an interesting mover in the session today, in addition to IDFC First Bank, of course. But yeah, I'll stop at these 3 and then come back because there are more stocks that we need to talk about as well, guys.
Yeah, so we've got a couple of brokerages, and I know you want to talk about. You want to start by talking about Jefferies and GAIL, and then I'll take the other ones.
Yeah, so I just mentioned that price of 150, so downside.
So you've also got Citi that maintains a buy on Ambuja Cement, 645. Is the target price. There's a 44% promoter warrant converted inspires confidence is what they've said. They've got an underperform on GAIL, like Neeraj mentioned. Apart from that, you've got a quick small one. We've been talking about payments being received in PNC Infratechs. Relatively small, but nevertheless worth a mention. They've received a payment of 250 crores in terms of a settlement agreement that was executed between the company and the National Highways Authorities of India under Vivad Se Vishwas to dispute the dispute that was under the scheme of the Government of India. So PNC Infratech could be one to watch out for on back of the 250 crore payment that has come through.
Yeah. Just a few more on my list. Canara Bank is one of them where you might see some price movement. They will be diluting a 13% stake in Canara Robeco AMC via IPO. They made that announcement subject to regulatory approvals, of course, so watch out for that. Honasa is another one. They have been diversifying and launching new lines and new product categories at quite a bit of speed, and now they've gotten into color cosmetics. This will be one to watch because that's really a tough space. You have multinationals struggling over there. So let's see what Honasa does. And Ultratech was another one. Actually, there are a couple with the tax notices of various kinds. Zomato's also got one. But Ultratech Cement has got a demand order of about 21 crores from Chhattisgarh government. This is not a tax notice. This is an order for failing to meet a minimum production target set, which is essentially when you have a partnership with a state government, you're given a minimum target that you need to produce, and prima facie on the basis of this order, Ultratech Cement seems to have failed that. The company though has said that they will be contesting this order on merits. So those are some of the stocks that you want to watch out for as well.
Very quickly on Zomato, because you mentioned that they've got an order of GST for about 11 odd crores, including the interest and penalty. It stands at about 23.26 crores. But again, they, as like you said, Ultratech, this one too will be defending themselves in the court, and they do believe they have a strong case. So let's see how that plays out.
Yeah, it just becomes difficult to call for a stock reaction on stocks audits on back of these order wins, or rather tax notices or other notices. So Ultratech and Zomato could be negative reactions, but difficult to pencil that in. What is
they're
easier?
Slightly different. They're slightly different.
Completely different.
Yeah.
But
one is IT department.
Which a lot of people have gotten. This one is slightly different.
Again, they're also wrapping up
this is slightly different, so could be interesting. The one which is easier to predict is Infosys. On that 6,900
All news is good news, and if the tax man smiles on you, why not? I love
But you know what,
story.
guys? There is good news as far as India macro goes, and that's something that I'm going to be talking about on the editor's cut today. But Alex, over to you, because there is good news for India macro, maybe not so much for staples.
Yeah. In fact, I was going to start, Neeraj, by saying to all the economists and to all of the students of economics, this is not an April Fool's joke. You've not seen this ever, but you might just see it for the first time ever. If I'm not mistaken, the current account deficit turning to a surplus in the fourth quarter.
Okay. Yeah.
We are starting with that because how big of an update is that for the Indian economy, which has been seeing its deficit narrow over a period of time with the advent of IT services and various other exports that are taking charge, as well as the inflows that the country is seeing, particularly in the fixed income space, bond market inflows coming through. But is that the clincher? What is pointing towards this surplus?
Yeah, so from the dark days of CAD numbers being so low, as both of you would remember 10 years ago, if somebody would have said at the start of this decade that India will be CAD surplus, you would have mocked, scoffed, smirked, what have you. And you're right, this is not an April Fool joke. We don't know if it's a done deal as yet, but here are two notes, and I'm essentially standing on the crutch of two notes which are saying that this could happen, Nomura as well as Citi, right? And here's what they are arguing. So Nomura says that Q1 24, which is the quarter gone by, may record a current account surplus of 0.5% of GDP. Citi's estimate is slightly different. I'll come to that as well. Let me wrap up Nomura first. They say that the merchandise trade deficit has remained capped unscathed by the Red Sea disruptions, and the services trade surplus is exceptionally strong, reflecting one strong IT exports that are happening and consulting gains that are happening. And in addition to all of this is the strong remittance number into India. Never mind what's happening or what may happen in Middle East because of lower oil prices, the remittance numbers are looking very, very strong. So, and of course in the note they say that they expect FY25 CAD averaging 1.1% of GDP. So they expect that FY25 will be a deficit again.
Will be deficit.
Yeah, it will not be a surplus. The surplus is restricted to Q4. But be that as it may, one, I don't think we've seen this, and two, I think as many people have said in the past, and as you can argue, right, we don't want to be a country which is current account surplus because we are a growth economy. We don't want to remain in a surplus for too long because that will impede growth. So you want a current account deficit, but you want a manageable current account deficit because it will not have any untoward pressure on the INR. So that's the prima facie basic economics. Just to round up what Citi is saying as well, they say that available data shows current account balance likely to turn surplus into Q4, something that Nomura is arguing as well. The numbers are slightly different, of course, and they say it mainly reflects seasonal improvement. You were asking about the cues for this.
Yes.
So one, seasonality impact out here, seasonal improvement, which might have been accentuated by some favorable macros, like growth numbers in India, like remittances, like stronger IT exports, like stronger consultancy exports. So that is two. And they say FY25 CAD could well be below 1%. So Nomura is about 1.1% current account deficit for FY25. Citi is averaging about 0.7 to 1%. So yes, a current account deficit, but manageable. And the balance of payment will likely be in surplus in all 4 quarters in FY25.
Did you by any chance, sorry, before you come to that, did you by any chance look at the estimates for crude oil prices in those reports?
Yeah, so for FY25 that they are penciling in this 0.7 to 1, they are factoring in you would call it benign, 70s. Crude priced in 70s. Now, if crude were to go to 90, 100, then it's a different kettle of fish. The numbers may move from 1 to 1.2, 1.3, whatever the estimates may be. But here's what gets interesting, and I'll make it very quick here. Beyond Q4, Q4 is surplus, great. What beyond Q4, right? I gave you a brief synopsis, but the larger summation is that they believe it will be range bound, 1% of GDP, resilient global growth, particularly manufacturing activity leading to strong export volume growth. By the way, guys, European growth is picking up. And we spoke to Robert Sokin on the morning show. He's speaking about this
Citi
as well.
Research.
Yes, Citi Research. Early 70s, the answer to your crude price, early 70s per barrel oil implies about a $20 billion
YOY fall in the annual oil import bill. So that's factored in when they are taking in CAD at 1% and strong remittance inflow to aid the CAD numbers. So confluence of factors, but yes, I'm thrilled by the fact that something that people would have only mocked 3 years ago about CAD numbers looking very positive for India could actually be turning out to be a reality, even if it's for 1 quarter. And as I said, we are happy with being current account deficit as opposed to current account surplus.
I just wanted to come in on the crude part of it, because you said $70 to $75 a barrel.
Yeah, they're talking about 70s, early 70s.
Which basically means there could be output cut actions coming in this year, if that's the thing, because that's not what OPEC Plus is gunning for, right?
Yeah, but I would believe, Sajid, if global demand picks up, US, Europe, etc.
The price will automatically go up.
No, prices may go up. The OPEC may then not be tempted to do cuts, because some people will say, okay, let's take advantage.
But that, gentlemen, is a conversation for another day, because we're going to head into crude prices and where they're headed. And I don't think anybody at this juncture will be able to decide very exactly, or understand where it's heading. Let's talk about inputs though, because that is going to be the second conversation that we're having today. We're seeing, and we saw the headlines, Sajid, just last week or the week before that, cocoa futures going to what, 10,000?
Yes, 230% up year on year.
And it's not just cocoa, it's all input prices. So what we're effectively saying is that with FMCG companies biting the bullet and saying, look, we're not going to raise the prices just yet, we're worried about volumes, is the time of margin expansion over?
It's more of an underperformance year for FMCG, if you look at that way. In the sense, in FY24, the index went up by nearly 19%, while the Nifty 50 was up 31%. And in the last 3 months, it's fallen by nearly 5%, while the index was up 3% odd. So it's underperforming the index by a big big margin, and it is also now a neutral to underweight in many of the portfolios. For last 6 to 9 months, it's been that way, and it's going to continue that in FY25 as well, as input prices are going to go up. So prices for sugar, coffee, cocoa, edible oil, lab
for detergents
prices,
as well.
Lab, which is used in detergents, and some fatty acids which are used in soaps and detergents have all gone up in double digits.
In March?
In March, and over a period of year on year and month on month and quarter on quarter, they have been going up. So there is a double digit inflation which is coming into FMCG inputs going forward, and that would mean that many of the companies' earnings are going to be hit, because on EBITDA level they've been able to expand the margin, and they've been able to push prices by 5 to 6% last year. Will they be able to do it in FY24? It's very unlikely.
FY25, you mean?
Yeah, FY25 is unlikely, because there is a demand sluggishness which is coming in. Rural is just picking up. That's what we are hearing, that some green shoots seen. Demand in urban are little flat to marginally positive, which is there. So will they be able to push the prices across again in FY25? Is going to be a big challenge for me, because the question is whether you're going to go for volume growth or for margins.
And so far, what they've done is they've prioritized margin growth very clearly. Volume growth very clearly.
Yes, that's it. And they're going to, and many of the top companies are going to ensure that their market share remains the same, which basically means the volumes have to be the priority here rather than margins there. And if that happens, we're looking at earnings impact of 50 to 100 bips on the EBITDA level for many of the companies, and across categories, which is going to come in.
Is it still the case that, and this is my last question on this, because it's really straightforward in that, and I believe we have a report, viewers, on the website ndtvprofit.com by our colleague Sesha, who's spoken to a number of companies, and among them Parle Products is talking about 8 to 10% inflation in their commodity basket.
And they're not willing to pass on
prices. So the question is it what we saw last year and possibly also the year before that, is that domestic unlisted players, very small brands, particularly in the rural area, are pulling market share?
That's going to happen. I think downtrading is going to happen, like we saw in 22-23, where we saw local players picking up a large chunk of the market share, because they've been able to push volumes at a lower price. And because at that time FMCG companies were very firm on maintaining margins, so they lost out some of the market share to the local companies, and then they came into the market with volume pushing volumes there. So we're going to see something of that dynamics playing out again here. It's going to be very, some of the regional players are supposed to, we should be looking out for some of the regional players, especially in the in the FMCG space, not the soaps and detergents also, but some of the snacks and others, because that's going to be something which will be they will be pushing there.
So the final point, does it reflect in the valuation?
Shameless plug, watch out for 9:30 a.m. today. We'll be talking to Abneesh Roy, who will be giving us an insight on this. Yeah, it'll be interesting to see. I think depends on how they are mixing up the ingredients, price targets versus everything, and the commentary coming in for Q1. So I'm really keenly watching out for that. But more than that, I think the results will show, and we'll figure out at 9:30 a.m. today on NDTV Profit. So viewers, tune in for that.
The question that you need to ask is there a runway for FMCG going forward in FY25?
That's one of the questions that will be asked for sure. Abneesh Roy, Executive Director, Nuvama Institutional Equities, will join at 9:30, and they'll be talking about FMCG, so watch out for that. There's lots to talk about at the start of the new financial year. Before we head into trade, do stay tuned. We're heading to a very quick break.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to
Welcome
Welcome back. You're watching India Market Open. It's expected to be a positive start as we gear up for trade on the very first day of a new financial year. Well, the last week of the last financial year ended on a positive note, with the markets gaining a percent and the Nifty comfortably closing above levels of 22,300. Agam is standing by with all the F&O action. Agam, it seems like we've respected and closed about 22,300. And if you do that and stay above these levels, new record highs around the corner. And Bank Nifty's participated,
In
which
fact,
is great.
Samira, we missed out on a new life high by whisker on Friday, on last Thursday. Oh, pardon me, Friday. So it's a Thursday. All right. Yeah. So the last trading session was a one of a kind, because we actually did see a very sharp up move, and eventually we just missed out on making a new life high by just a handful of points. That said, at the moment going in, where we do see about a point of, a near 1% increase in as far as the Nifty is concerned. Of course, the April futures naturally did see a lot of addition, and already at the start of the session, we are looking at about 224,000 contracts in terms of its open interest for the futures. Moving on, then the Bank Nifty as well did move up by around 0.7%. Well, remember that the benchmarks did close off their days highs, at least last Thursday. So, in terms of that, we didn't see as much increase in open interest as far as the Bank Nifty is concerned. How are the option markets looking? Let's take a look at how things did pan out. Now, perhaps on expected lines, as the Nifty advanced, we saw a lot more writing in puts, which is indicated by the red bars. And of course, there was a little bit of more call writing, but I reckon that call writing will have come through in the last hour of trade, when we in fact saw the Nifty come off by quite an extent. Moving on, as far as your overall open interest distribution goes, at the moment we are looking at a 500 odd point range. This is only based on open interest accumulation. On the higher end, 22,500, it was what we're keeping an eye on. That's based on OI and calls, and OI and puts will give you an idea of, 22,000 is where we're seeing that accumulation. We keep seeing the Nifty move in and out of the 22,000 mark. That's been the case, but the real question is, if we can defend this particular mark, can we expect the index to move higher? That's something that we're going to wait and watch out for. Finally, moving on to stocks, where we did see a lot of longs coming through in Cipla and Sale and Tata Consumer Products, and Persistent Systems and Chambal Fertilizers saw shorts. And in terms of stocks which saw unwinding, well, the list wasn't very long, and this was, of course, on expected lines, because, we're just very new into the April series, which means that we saw marginal unwinding in Shriram Transport Finance, Indus Tower, and Muthoot Finance. But what do we do with these cues, and where do we go from here? Let's get an expert opinion here. We have Milan Vaishnav of Gemstone Equity Research, who's joining us on the show right now. Milan, good morning. Thanks so much for joining in. Let's start off with your views on the benchmarks. What are you expecting from them?
Hi, Alan. Good morning. From a technical point of view, and if we take a very, try and take a holistic view of the markets, I feel that Nifty may still take some time before it convincingly move past its previous high. So as of now, I expect Nifty to continue finding resistance between 22,500 and 600 levels. There might be a minor incremental high, plus minus 25, 50 or points here or there. But by and large, I think Nifty will take some time before this all-time high levels are taken out with conviction. On the lower side, I see that 20-week moving average, which is placed at around 177, has acted like a support over the past couple of days, and therefore by and large I expect that Nifty will continue to stay in 22,500 points range, at least until this week's expiry on April 04. So I think that index will give us an opportunity to trade it on the other side. I see it oscillating in 500 odd points range. It might try and give an incremental high, but a convincing high above the previous level of 22,500 plus is slightly unlikely, and I think it will we will stay under a range-bound consolidation. In the same breath, I also don't expect any major downsides to occur so long as 22,000 stays defended.
Okay, Milan, so based on your expectation of consolidation, what option structure are you deploying here in the markets?
This is a bit of a tricky part. When I said that Nifty is likely to stay in a range, I would try and play a short strangle by selling April 04, 22,600 call and selling 4th April expiry 22,000 put. But now that being said, total premium that we will receive would be around 2.5 to 3% premium of the capital deployed. However, I'm not mentioning the exit price here because markets had closed back on Thursday, and it will open today, so there will be significant difference in the option pricing. But at the same point in time, at the time of open, if we sell this pair, roughly we can expect a yield of 2.5 to 3% in terms of premium.
Sure. Okay. So, well, a short triangle there as far as the Nifty is concerned. Milan, what about stocks? I believe you have an idea on ICICI Bank.
Yes. Basically, it stems from a top-down analysis. I feel that even if the market stay in a range, or even if we are under slight corrective pressure, Bank Nifty might show some relative outperformance as despite being placed in the lagging quadrant of the RRG, Bank Nifty is showing some improvement in its relative momentum vis-a-vis the broader market. So within that space, I expect ICICI Bank to do well. I am suggesting a bull call spread by buying April 1100 call and selling 1160 call. Maximum profit that I expect is in the range of 22,000 to 25,000, and maximum loss I expect is in the range of 9,000 to 11,000. Again, I am not specifying the exact net premium that you will pay because there will be a notable difference between what we have closed on Thursday and at the place where we will open today. But still, this is the bull call spread I recommend, and as a part of risk management process, instead of waiting for the entire maximum loss to take place, one can put a protective stop with if ICICI closes below 1070 levels.
Okay, all right, there you have it. That's a bull call spread on ICICI Bank. Milan, taking a moment to thank you for joining us and taking us through your views on the markets as well as giving us a handful of trading ideas. And with that, it's back to you, Tamanna.
All right, thank you for that, Agam. So, a lot of exciting, cues to look out for today, and some of them are stocks that you should definitely be keeping an eye on heading into today's trade. Varsha has that list, starting with Aurobindo Pharma. Varsha, that's a big one, isn't it? The news flow for Aurobindo Pharma may see a stock movement.
Yes, so good morning, Tamanna. So yes, you're right. So if you see the news on Aurobindo Pharma is that they've commenced 4 state-of-art manufacturing facilities in Andhra Pradesh for few of their products, which include penicillin G, then 6-APA, and also some of injectable products and granulation. So yeah, stock may move after opening. Let's see what happens. Then the next company that we have is Garden Ridge Shipbuilders and Engineers, wherein company have notified that company's turnover touches a new high. So they've recorded a growth of 33% in their annual turnover for FY24, which is almost 3,400 crore. Now Q4 FY24 revenue stands at 823 crore, which is almost a 37% year-on-year growth. Then we have Canara Bank, wherein they've accorded approval for initiating the process of diluting 13% stake by listing Canara Robeco Asset Management. Now Canara Robeco is Canara's bank JV with Oryx Corporation Japan, wherein Canara Bank holds 51% stake, and the MF average AUM stands at almost 79,300 crore in October-December 2023. Now currently, if you see, 6 AMCs are being listed: HDFC AMC, then you have UTI AMC, Aditya Birla, Nippon, Shriram AMC, and lastly ILNFS Mutual Fund. Then lastly we have Infosys, wherein they are expecting a refund of around 6,300 crore from Income Tax Department. Refund amount is almost 1% of their market cap and 28% of annual net profit. But they have also received assessment order for tax demand worth 3,000 crore. So net receivable stands at almost 3,200 crore for the company, although company is evaluating accounting impact on the financial statement. So these are all the stocks that one should watch out.
Okay. Varsha, just very quickly, this Suven takeaways and the implication on CDMO. I mean, what is the outcome therefore? Is Jefferies constructive on Suven? What is the thing?
Yeah, as we know that we did have an analyst call from Suven, so the good thing is they are expecting good orders from CDMO, although 2-3 quarters may be, maybe not good because there's some lag effect, but yeah, from H2 current year 2024, they're expecting good orders from CDMO, and India will benefit mainly in small molecules on the back of China +1 and Europe +1.
Yeah. Okay. All right, so a lot of news coming in. Suven, Aurobindo Pharma, all of those need to be tracked. Tax orders are also in news. Not all of them might have any stock movement though, but interesting to mention, we talked about Infosys and its net positive impact, but SBI Life, for example, has a 5,300 crore rupee tax notice, tax demand come in, IOB about 620 crores. So yes, this is probably the tax department closing in and looping up those loose ends before the year end, but one to watch out for. The big story of the day though, Samina, is autos.
It is expected to be an interesting one this time around. Auto companies will start reporting their monthly sales numbers starting today. Remember, analysts expect double-digit growth for two-wheelers. Commercial vehicles though could be subdued, but Puneet is standing by with more on what to expect. Puneet, it's going to be a busy few days with auto companies reporting their numbers.
Yeah, that's right, and we've seen that March is a very important month in terms of sales to end the financial year for all these automakers. Now, do note that last year in March they had a couple of festivals, which was Navratri as well as Guri Padwa in Maharashtra. So that generally is a very big driver for something like a two-wheeler for someone like Hero. So despite that, we'll see that for two-wheelers is one of the most positives across segments of cars, tractors, as well as commercial vehicles. We see that for Bajaj Auto and TVS are the top two where they expect a big year-on-year jump of upwards of 15 to 19%. Do note that inventory levels for someone like Hero is higher of 40 to 45 days versus 25 days for the likes of Bajaj and TVS. This is generally a precursor to higher inventory before festivals, as I mentioned. Now, do note that for TVS specifically, the EV sector has done very well. They have roughly 2 lakh sales for the whole year, and they say that the new subsidy scheme which comes in from today has lower incentives. So before the incentives are higher, and someone like TVS as well as Bajaj has benefited a lot from TVS specifically for iQube and Chetak for Bajaj Auto. Now moving on to the PV segment, we see car makers, all of them have done really well this year, and March is no exception. They expect upwards of 12 to 15% from the likes of Maruti all the way to Tata Motors and M&M. For PV specifically, they have seen certain slowdown in inquiries as well as bookings, but there are for discounts in the hybrid segment from Maruti for the Grand Vitara as well. Moving on to commercial vehicles, and we've seen subdued growth on a year-on-year basis for all players. We see that MHCVs, which is the medium to heavy commercial vehicles, have been on a lower and flat for something like light to commercial vehicles. We see that demand across sectors such as oil and gas has been subdued, and when the ordering picks up something like from the second quarter of the next financial year, that's when the demand for MHCVs will come back. And finally, we see for the tractor segment, this year has been really tough on tractors. Sales haven't picked up all year long, and this year on a year-on-year basis, it's no different for Escorts as well as for M&M. Now, agri demand will, for the usage will decline roughly 5 to 7%, but the non-agri is expected to decline higher by roughly 20 to 23%. So that's the overall picture of the March sales. This is the preview as well, and from in a couple of hours, we will expect all the automakers to report these particular numbers. Back to you.
Puneet, if you can just go back to the tractor numbers. Yeah. March seems to be a very good month. Just March. Year on year, it's poor, but look at March month on month. How do you account for that? Is this inventory management more than anything else?
Tamanna, it seems like inventory management generally on a year-on-year basis, it hasn't done well. On a month-on-month basis, both Escorts and M&M have increased their inventory going into the festive. Now, during the festive period, we've seen that, for the 100cc segment on the lower end of two-wheelers, as well as commercial vehicles and tractors, is a very festival-dominated sales. And that's where we see that, in the month of April, is generally good for these guys as well. So precursor to that, inventory levels do go up for players like Escos as well as M&M.
All right, thank you for that, Puneet, there breaking up all those details. And of course, he'll be back when the actual data is up. But I think the big takeaway is that two-wheelers are coming back, and now the data is supporting that hypothesis as well. Sudeep Shah joining us now. He's Deputy VP, Head of Tech and Derivatives at SBI Cap. He's with us this morning. Sudeep, very good morning to you. Great to have you back on NDTV Profit. Let's begin with the outlook for the markets, actually. We're starting the new financial year. How are you looking at the indices? We've ended fairly decently. I mean, Thursday's trade, or the last trade of the last financial year, was very, very positive. Do you see that trend going?
Yeah, so very good morning to you. See, what I feel is that Thursday's close was extremely strong. 22,300 levels is a strong closing, and finally, after a lot of sessions, say at least 8 to 9 sessions, we have seen Nifty closing about 22,150 levels, which is the 10 as well as the 20-day exponential moving average. So I feel with Reliance, ICICI Bank, L&T, and a lot of these auto stocks looking good, Nifty could strengthen further from here and could head up to 22,550, 22,600 levels. And supports, I guess, would be in the zone of 22,150 to 22,200 levels. If we see the derivative data also, there's a lot of strong put writing happening in 22,200 as well as 22,300 strikes. So this zone of 22,200 will act as a strong support going forward from here on.
Sudeep, as we gear up for trade this morning, what are your top recommendations?
Yeah, so the first stock that I feel could do well in the current series or in the next few sessions is Eicher Motors. Now, this stock has witnessed an 11-week consolidation breakout and has closed at its highest levels post 1st January 2024. And the rollovers also here are very strong. So with a strong undercurrent visible in the auto space, I feel Eicher Motors can be bought with a 39.45 stop loss and a 4150 target on the upside. The second stock that I have is HAL, Hindustan Aeronautics Limited. If we see the short-term chart here, last 6 sessions, we have seen a good momentum in this stock. Higher top, higher bottom formation has been visible on the daily charts. And also on the rollovers front, I guess 94-95% rollovers have been witnessed, and that is very strong considering the stock. So a clean uptrending chart, I feel this could be bought with a 32.70 stop loss and a 34.50 target, as well as if this is crossed, then the next level also could be 3600 on the upside.
Let's get into some more stock-specific news right now, Sudeep. And I just want to talk about Prestige Group. News coming in, and fairly important sort of a new space for Prestige. They've entered into a landmark deal with ADIA and Kotak AIF to capitalize on growth opportunities in residential sector. They're going to be developing projects with gross development value of 18,000 crores across 8 cities. So across 4 cities, beg your pardon. So a big deal there announced by Prestige, and of course we will get the fundamental view on real estate and the Prestige Group, but I'm just wondering if you're tracking this on the charts, and what are you seeing happening here for Prestige, Sudeep?
Yeah, see on the charts of Prestige, if you see the short, long to medium term charts, they are extremely strong. In the short term, we've seen in the last couple of months, the stock was consolidating between 1,000 and 1250, 1230, 1250 on the upside. And recently, in the last 4 or 5 trading sessions, the stock has once again strengthened on the extreme short-term charts. Now it has crossed its 10 as well as 20-day exponential moving average and has been sustaining above that in the last 3 sessions. So I feel overall 1125, 1130 zone could act as a strong support here. And given the kind of news that we are witnessing right now, this stock could rally all the way up to 1250, 1270 on the upside. And the long-term trend is very strong, and the short-term trend chart is reversing. So I feel it's a good pick with an attractive risk-reward ratio.
Sudeep, a couple of stocks that we want to talk about is IT really. Infosys in particular, they've had a massive windfall of about 6,000 odd crores. IT has been an underperformer, pretty much ripe for a technical pullback as well, I'd imagine. how would you trade Infi? If anyone's going to trade this fundamental news trigger, what are the levels to watch out for? Does it look like we could see a sharp gain on this counter today?
Yeah, I see. Firstly, before taking Infosys, let's just see how Nifty IT is placed. So we have seen a structural downtrend in the last few months in the IT index. Lower top, lower bottom formation has been seen. However, right now where IT index is placed is around 34,900 levels, and this is extremely closer to that zone of 34,300, 34,500 levels, the support zones in the last week of December and January. So the IT stocks are approaching their medium-term supports, and I feel 34,300, 34,500 for the IT index could act as a strong support from here on. Now, coming to Infosys, I feel 1450, 1470 zone is a strong support now, and here the 200 DMA zone also is there. So, if there is a pullback, early morning pullback because of the IT news, for me, 1540 levels would be extremely crucial, because there is this gap left on 21st of March on that gap down day. So 1545 levels has to cross, and if this levels are crossed 1545, then we could see the stock extending its rally up to 1585, 1590 on the upside.
Another set of companies that we need to look at very closely, or stocks we need to look at very closely, is the auto pack. We've been talking about the numbers coming in, and two-wheelers at least seem like they will have a better set of numbers. That growth story seems intact. Anything you like in this space, Sudeep?
Within the auto stock, if you see, I feel Hero Moto, M&M, both are looking very strong now. So Hero Moto also, if we see the rollovers were around 90%, and the 3 months average rollovers is around 82%. So here the rollovers have been pretty strong, and the charts have been uptrending. So I feel overall Hero Motors from the current levels looks extremely strong, and the stock is consolidated for the last 1 month after a big uptrend. So from here on, I feel 4650, 4630 positionally could act as a strong support. Until these levels are held, Hero Motors could extend its upside up to 4950, 5000 in the first few sessions of the fresh series.
Okay, so those are, well, the view on autos. Now, guys, this announcement around Prestige is very interesting. So that is a stock to watch out for. Announcement around MCX is pretty interesting, the Morgan Stanley note. So that is something very interesting to watch out for as well in the session today. And a clutch of other newsmakers that we will talk about as well. I'm sure we need to slip into a break as well, but just before that, keep in mind the implied open suggests the positive start. So there are a lot of stocks which might have a negative news flow to it. NMDC, Ultratech, Zomato, etc. Very interesting to see how they start off. Take a quick break. We'll be back with the pre-open session.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all.
All right, it's going to be an interesting morning. A number of stocks that we need to keep an eye on, and let's go through some of the brokerage notes that might have a play. Citi, for example, has maintained a buy on Ambuja Cement at 645 rupees. Target, they say 44% of promoter warrants converted inspires confidence. They expect 4,000 to 5,000 crores per annum for the next few years and expect a favorable swap ratio as well. For Ambuja, should there be a merger with ACC, and the firm will benefit from cost efficiencies. Sudeep with us. Sudeep, I just want to get your take on an Ambuja and Ultratech, the entire cement space, and anything that you're tracking here.
Yeah, absolutely. So if we see the cement space, the rollovers have been very interesting now. Out of all the stocks in the cement basket, Ambuja Cement as well as Grasim, these are the only two stocks that have witnessed above average rollovers. So coming to Ambuja, I feel here the stock is in a big uptrend. There was a minor bump up in the mid of March where the stock retested 550 levels and quickly pulled back up to 600, 615 levels back to its closer to its all-time highs around 620. So I feel from the current levels also the short to medium term charts are looking extremely strong, and 595, 597 zone could act as a strong support until this zone is held. Upside up to 640, 650 in the coming few weeks could be witnessed.
Okay, we should focus a bit on this prestige development. I know we've spoken about it, but just as the flashes are now coming in and getting digested, for Prestige Group to enter into a deal with ADIA, no less, and of course there is Kotak as well, but ADIA, Abu Dhabi Development Authority, and ADIA is big when it comes to money, and we know Middle East is pouring money into marquee Indian projects as well in the last 12 to 24 months. But for them to do a deal with ADIA, a deal which could be worth 18,000 crores across 4 cities, I believe that's not the quantum of investment, that's the quantum of sales that could come in. But it could be interesting. It could be over a number of years, so don't mistake it for it happening over a period of 1 month. But the fact that it is one more deal that Prestige has entered into with a large money bag, presumably for a fixed return structure, I'm guessing, but we don't know the details of that as yet. The company will be best placed to come in. I would reckon that while I thought that Garden Reach Shipbuilders or PNB Housing could be the stocks of the day, Prestige Estates could well be added to that list as one of the top 3 or 4 names that could be reacting in the session today. And just interesting, just last month we broke the story of Prestige entering into a pact with Marriott for 6 hotels across India. Than this, so after selling off their commercial portfolio to Blackstone for reducing debt, Prestige is coming back very, very strongly, I would say, with some fairly marquee developments under their bag. Won't be surprised if the stock reacts positively today.
So last week, where they picked up 60 odd acres of land in
Ghaziabad,
NCR. So that was a big mover. But I think Neeraj, what I'm very intrigued, and I think Tamanna pointed this out, and she said this is for a gross development value of 18,000 crores across 4 cities. Now, whether this is just India focus or are they expanding their footprint across the Middle East, I don't think can be ruled out either. So it wouldn't surprise me if going from the south to mid-India, to cities like Mumbai, Delhi, Dubai, Abu Dhabi could also be on the radar for all you know.
You know what I find interesting about this is that while you have marquee real estate players regionally, there is still competition and space for the big pan-Indian player to emerge even as you are in this real estate cycle. And for Prestige, which has had a great niche in the southern part of the country, now to foray like this, of course, devil in the details and execution, etc. But it would be great to have a conversation with Irfan Razak and understand what they want to do next. So definitely one stock to keep an eye on.
Yeah, just that one clarity, it's 4 cities in India that the press release says, and the deal 18,000 crore GDV, 2001 crores, $240 million deal per se. So that must be the terms of investment or the money that is coming in.
Is there a timeline for this at all? Or that would be one interesting thing to see.
Yeah, it's a good question. No, I don't think right now they've given any kind of timelines with regards to this.
Prestige's record, a lot of this does get executed well in time. So they have managed to at least respect that 24 to 48 months. But for whatever it's worth, remember the management had said that they were looking to close the financial year with a pretty solid top line. So about 12,000, 13,000 odd crores is what they clocked in. And that growth will continue to reflect. We will connect with Irfan Razak at some point over the course of the next couple of hours to really understand what this deal means, what the timelines are, what is the kind of money that's been infused, what is the deal that they have with the Abu Dhabi Investment Authority as well. But Sudeep, of course, you've commented on Prestige Estates already, but Neeraj, you want to comment on anything else on Prestige, or this is...
No, I mean, this seems to be the press release takeaways, yes.
Sudeep, another one, HAL had a pretty solid run in the first half of last week, eased off, saw profit taking on Thursday, but back in the news this morning on back of a big order win. Technically, how does HAL look?
See, HAL has been one of my morning calls also, and I'm very bullish on this stock. Now, if you see the short to medium term chart, it is quite strong. In the last few sessions, in the last 5-6 sessions, we have seen a higher top, higher bottom formation also being formed here on the daily chart. So given this news flow also in HL, which is extremely positive, I expect HL to at least do 3450, 3500 in the next few sessions, and the stop loss for the same could be around 3250 on the downside. So a strong support plays at 3250, and the upside is quite open because it's an uptrending chart, and the rollers also here have been extremely strong.
Right. Absolutely. March auto sale numbers are trickling in. Escorts Kubota has that first set coming in. Total sales at about 8,587 units. And if you'd watched us from the start of the show, you'd see the preview, which showed exactly this, that you would have a drop year on year. About 16% of a drop year on year is what we've seen. Export units have also dropped quite sharply, about 23-24%. So Escorts is one that I would keep an eye on. But in line with expectations, because tractor sales have been muted, rural demand is continuing to be muted, and you'll have to wait and see that improvement coming in right now. Is this a stock that you're tracking, Sudeep?
See, if you see Escorts, Escorts in the last 6 months has been on a downtrend, right? After it hits its all-time high around 3450 levels, the stock consistently has made a lower top, lower bottom on the monthly charts. And I feel still it is in a downtrend, and for it to come out of this and change its trend, then levels of 2850, 2880 would be required to be crossed, which is the 200-day moving average now. So 2880 is the number that I would be looking out for from a positional perspective to spot a reversal on charts of Escorts.
Okay. Well, just mark the pre-open session before we go to Harsh for the key brokerage notes for the day. I wonder if PNB Housing Finance is starting off well. That stock has seen its ratings upgrade, so 3.5% higher for that one. I wonder if Prestige Estates, very close to the end of the pre-open session, is Prestige Estates starting off well, about a couple of percentage points, so watch out for that one. Infosys, and is that starting off well in addition to HCL Technologies? That's the key question. 1.5% up for Infosys, almost at the end of the pre-open session. HCL Tech not so much on that Morgan Stanley upgrade. And lastly, Indostar Capital Finance. Madhusudan Kela's name has come in as one of the buyers, MK Cohesion Ideas. That stock is locked on a 5% upper circuit, not surprised at all. Well, a slew of brokerage notes also coming in. Harsh Sehta, my colleague, joins in with the top brokerage notes to focus on this morning. Harsh, good morning.
Hi, good morning, Neeraj. First off, ICICI Securities initiating coverage on Dynamatic Technologies. Very interesting note. Target price given at 10,250, almost a 37% upside to current market price. This one will definitely be in focus. What this seems to suggest is with regard to the aerospace segment of Dynamatic Technologies, they believe that is going to push both earnings as well as margins higher. Also, with regard to capex spending, they believe that CapEx spending has peaked. It's done fairly well with regard to CapEx now in terms of its divestiture for cash burning businesses, as well as the CapEx which has already been done in Germany is already fully complete, and therefore they believe that margins should improve from here on the back of that, as well as efficiencies kicking in. With regard to hydraulics and metallurgy divisions, that seems to be turning around as well, and that is the other positive they are looking at. Now, with regard to the numbers itself, EBITDA CAGR of 19% expected all the way through to FY27, and margins of 17 to 18% expected going forward. Quite positive on this one. They've based their target price on a 45 times FY26 EPS estimate. Quickly moving on, Morgan Stanley on IT, hard to ignore this one, Neeraj. They believe that growth has bottomed out with regard to top line. Pace of recovery is lower than what was anticipated, but nothing that does not suggest recovery. Investor positions currently are still light, and that's where they see opportunity. Relative valuations also close to the 5-year averages, and they are expecting most large caps to register a revenue CAGR of 7 to 8% from FY24 to 26. EBIT margins also expected to improve. EPS growth to be higher than the FY22 to 24 period. They are overweight TCS, Infosys, HCL Tech, Coforge. They are currently equal weight on LTI Mindtree, underweight on Tata Elxsi, LTTS, Wipro and Tech Mahindra.
Okay. Well, thanks. So there's some interesting names out there, and like we said, the pre-open has settled on a strong note. The Nifty should come up on your screen. You know, the April futures was trading at 22,450 or thereabouts. We are on the spot at 22,455. So we're a stone's throw away from all-time high levels. Any which ways, it'll be interesting to see how the futures shape up. But like we said, amongst the big deals that happened, got announced is Prestige. We are 4 minutes away from market open. So get in Rupesh Sankhe, Vice President Research, Elara Capital, on the phone line very quickly for this. Rupesh, thanks for joining in. What do you make of this deal? 2,000 crore deal for development value worth 18,000 crores. Big shot in the arm for Prestige?
Yeah, definitely, because the Prestige has shown a lot of aggressive move recently. They entered into Mumbai market, now entering into NCR market. So they want to be a pan-India presence with significant growth to capture growth opportunities. And definitely they have a portfolio of commercial assets under construction projects. So they need capital for the growth. And if you look at the organized players are gaining market share significantly from 6-7% in 2004 is now close to 18-19%. And Prestige is going to be the big beneficiary out of that, because they have demonstrated their capabilities and qualities, timely delivery in Mumbai. And I think it's going to be a big the move from the Prestige to garner market opportunity in the residential segment. So it's going to be a good move from Prestige in terms of getting capital for the growth.
Okay. Rupesh, so based on this deal, does this alter your revenue, profitability targets or your rating on the stock in any fashion?
We are positive on the Prestige since 500 levels, and if you look at the GDP they are adding, they have already surpassed their FY24 guidance. FY25-26 we are expecting close to 15,000, 20,000 crore kind of a GDP value addition. So they are on a track to achieve that GDP value addition, and close to 70,000-80,000 crore kind of a target they have in the next 4-5 years. So they are on track. Going by this development, I think they are on track to achieve that GDP value, and definitely the market will reward them positively, because we have just entered 3 years in the residential cycle, and given the inventory days, months which are coming down, the demand which is coming up, I think next 4-5 years we are expecting that residential upcycle will remain, and the large organized player like Prestige will continue to gain the market share there.
All right, Rupesh, just one quick word, and I know this conversation is about Prestige, but when compared to peers, what is your outlook on the Prestige stock price, and what would be your top pick in the space?
Definitely in the Bangalore space, we are positive on Prestige because they have a significant project in the pipeline, and NAV has not fully captured the potential they have in the next 4 to 5 years. Secondly, they have ventured aggressively in the high Mumbai market with a JV and asset-light model. So they have mix of residential commercial assets. So we are positive on the Prestige. In the Mumbai market, we are positive on macro tech developers because they have huge land bank and which is not fully captured in the market price. So we are positive on the macro tech in the Mumbai market also. In the mid-cap space, we are positive on Mahindra Life space because now they are aggressively entering into capture the market. They were very conservative because changing the management. But now again, they have started going for a JV kind of model. So we are positive on these three companies.
Right. Very quickly, one last question. As of about 2 months ago, the unsold inventory for Prestige Estates stood at a whopping 16,000 crores. How important is this when an investor is looking at buying into this counter? And secondly, while I know they've aggressively been expanding their footprint pan-India, any worry on debt? How closely are you watching out on unsold inventory and debt for Prestige Estates?
Unsold inventory, I think they have some unsold inventory recently in the Mumbai market, but the kind of cash flows they will get from the existing projects as well as ongoing projects, I think they are well positioned to meet that debt they have there in the balance sheet and the debt which is required for the commercial assets. So I think once the commercial assets start getting rentals from FY 27-28 onwards, and the existing operating cash flows from the ongoing projects, I think we are not worried on the debt equity front. Yes, definitely they have a slightly higher debt equity as compared to other players.
Right.
But that debt is mainly for the commercial assets.
Got it.
Unsold inventory, I think.
Got it. Rupesh, unfortunately, we'll have to thank you on that note because the markets are about to start, but much appreciate your time this morning. That's Elara Securities. By the way, news flow on Adani Ports as well in terms of cargo handling. Maybe that stock will react. We'll mark that. But here's how the markets are starting off this morning. Strong show, 22,470, about more than 0.5% higher. So good going for the Nifty 50. Bring up the mid caps and the small caps. Banks are, of course, supporting, and I guess private banks and SBI could be in focus. IT, by virtue of what Infosys predominantly is doing, is in the green, I reckon. But mid caps and small caps, well, strong showing. So we're starting off with positive market breadth. First day of the new financial year, 1.2% for the small caps. These guys are coming back. Let's get the heat map up on the screen. Very little red. Maybe an SBI Live not worth talking about. So metals are starting off well. Hindalco, JSW Steel, essentially leading the pack. Infosys, 1.8%, the heaviest weightage on the index, up about in today's session in terms of contribution. And Adani Ports, I saw 1.4% higher, good going for that one. Adani Enterprises, there's a Jefferies note about the copper plant starting on time. And I think that is the reason why Adani Enterprises is also in the green. So both the Adani twins in the green today. HDFC Bank participating, SBI participating. Banks, IT, metals, Adani twins, you have autos, everything in the green. Well, I mean, reasoning notwithstanding, it's a brilliant start to the large caps. But Tamanna, I dare say, the mid caps and the small caps are doing even better. So your list must be even more powerful.
Absolutely. I mean, it's an exciting start for the financial year after what has already been a pretty big run-up. And you're seeing that reflect very strongly. You pulled up the indices, but let's look at individual winners this morning. Torrent Power is one of them. And yes, a lot of them are news-backed. But you are seeing positive momentum in the broader markets, definitely. Torrent Power up about 6% in opening trade. They've received an LOA and was on our list this morning. It's a 150 megawatt hybrid plant that they're going to do. So that's solar and wind, 1825 crore plant, and it's only an LOA, but still you're seeing that pop. Prestige, we've been talking about, that news came in pre-market. They are going to be developing projects worth 18,000 crores in 4 cities across India, and that's on the back of news already. A lot of news coming in from Prestige. You're seeing that stock react and climbing quickly, may I add. Even as we're speaking, the stock is up 4% this morning. Aurobindo Pharma is another one, we talked about it a bit earlier in the morning. 3% up. They have commissioned 4 of their state-of-the-art plants, which are going to make penicillin. Garden Reach, again, newsmakers because of order wins. And their company turnover has touched a new high. That's about 5% up. RVNL as well has got 3 order wins. So look at it. It's a good morning. If you've had a positive news flow, that stock is perhaps going to do well. And it's setting the pace perhaps for a good financial year going ahead, guys. So these are some of my top stocks. But what else are you spotting, Samina?
Interestingly, such a good-looking market this morning. The breadth is good, and that's what I think traders and investors are taking heart from. So while Taman has highlighted a few gainers, what's interesting to note is amongst the losers, you've only got a few losers on the Nifty 500, and the biggest losers only seeing a cut of about 1.5%, which is Aegis Logistics. So while the Nifty 500 usually sees big movements, the biggest loser in trade today is one counter with a cut of 1.5%. So that just goes to show you how the gainers and the losers are stacking up against each other. Apart from the ones Taman highlighted, a few other names that are looking good this morning. You've got PNB Housing, 7% uptick on that one on a ratings upgrade. The counter looks good, is getting excited in early trade with a gain of 7%. We've also got Action Construction, a big move coming in there, 4.5% on the stock on back of news flow from last week. HAL had a big order win. Let's take a look whether the stock is reacting to that news point. HAL is up another 4% after taking a bit of a breather in Thursday's trades. The upward move is resumed. The stock trades with a gain of 3.5%. Kalyan Jewelers looks good with a 4% up move. Adani Group stocks across the broader markets are looking good today. Adani Total, Adani Green, Adani Power are all trading across the broader markets, are all trading with a sharp positive bias. Adani Green is up 3%, Adani Total is up 5%, Adani Power and Adani Ports also seeing a pretty sharp up move. Adani Power up 4% in trade right now. Well, Tata Investments, we usually talk about the stock on a lighter note, but this morning, after a number of days of hitting lower circuit, Neeraj, you'll be happy to know Tata Investments is up another 4% in early trade. No upper circuits there just yet, but the stock looking not too bad. Muthoot Finance, 5% up move. The counter looks good. You've got Welspun Corp up 4%. You've got some of your fertilizer names. So government-focused stocks may resume their rally today as we go into the election play. So anything that's government-focused, railways, defense, fertilizer are all in a sweet spot in trade. You want to comment on something else? Anything else that you're spotting?
I don't know if you mark Dynamatic Technologies, but that stock is up 5% on that ICICI Securities note. 7835 and counting. Very strong start to this one as well. Well, Devin Choksi is also with us, Director of DR Choksi Investment Managers, and Sudeep is with us. Devin, thanks so much for joining it. Good morning. Devin, good start to the year, trading year. What are you watching out for? Auto numbers will start to trickle in as well today.
Yeah, Neeraj. Good morning. Well, I think this year starts on a very promising note on few counts. On one side, we are expecting globally the rate of interest to come down. And that should be, I think, saying a good amount of positivity as far as I think the market action is concerned. On the other side, I think we are seeing some amount of positive development happening also on the geopolitical front, wherein the war-related situation is expected to, I think, find some way on a positive side. So that's where probably I think one is likely to see globally things are going to be much calmer than what we have seen up till now. India per se, the economy, I think we are likely to see the higher amount of growth momentum continuing, largely because of the government's thrust on the spending on infrastructure and also inviting the newer industries into the economy. Particularly, we are seeing a higher amount of traction coming in from the renewable space and largely from the green hydrogen space. Somewhere, I think we are likely to see the positive development coming on these two fronts also. So overall, I guess I think on the macro front, the picture looks quite promising. As far as I think the immediate news are concerned, the auto numbers definitely, as you mentioned, should remain, I think, on a positive territory. Though on a month-over-month basis, I think there will be some small dip happening in some of the larger counters like two-wheelers. But otherwise, overall passenger vehicle segment remains promising and also the commercial vehicle segment. So we remain distinctly positive with the kind of possibilities, earning growth possibilities also going forward in this month and thereafter. We remain positive on all those fronts.
Right, Devane, let's talk stocks now. Prestige Estate, it's the biggest, one of the big gainers in the real estate pack today, up 4%. There's news that they've entered into a deal with Abu Dhabi Investment and Kotak AIA for 2,000 crores to increase their presence and build projects across 4 different cities in India. We don't know about the timelines of it, but the GDV of this deal is to be expected around 18,000 crores. What does this mean for Prestige Estate? It's last week as well, of course, they bought that 60 odd acres of land bank in Ghaziabad.
So, Samana, given the kind of developments that we are seeing across the country, particularly I think in the real estate space, I think the larger the ability to deliver the projects, better would be the possibilities of attracting money, and so would be the market capitalization rising. I think some of the stocks which are showing a good amount of clarity on this particular front, one of them definitely includes Prestige, apart from the other ones which are larger ones in the Godrej Properties and Oberoi's for that matter out here, particularly in Mumbai territory. So we believe that overall the opportunity size is becoming big for some of the larger companies, and that is the happy news from a perspective. As long as we see the commodity prices behave well and they don't show up ugly rise on the other side, I guess I think the margins are also likely to remain protected, and at the same time the demand scenario remains positive. So we remain distinctly positive. However, most of the real estate companies today are adequately priced as we see it. I think the valuation wise, nothing is cheap at this point of time. Maybe the market gives opportunity during the corrective downside. At that time, the opportunity will be once again right for getting into the portfolio.
Is it becoming, Devin Bhai, good morning, Tamanna here. Is it becoming more and more difficult to predict when this corrective downside is going to come? Because, you know, we've been talking about it, and now ahead of elections that might be tough. That, of course, is one question. But another one specifically that I wanted to get from you is your view on the entire auto pack. Do you think that two-wheelers is something that will lead the charge despite your EV incentives and your FAME incentives coming off?
Yeah, Tamanna, good morning. Well, I guess I think more than the timing of the market, I think I would see the possibility of individual stocks giving you the opportunities. Because I think overall market to correct and then possibly expect every stock to find the lower level, I think is not likely to happen. At least particularly because we are in a very strong bull market and which is likely to continue for next 10, 12 years. So given that possibility, we'll have to look around for the opportunity in individual stocks whenever the stock price corrects or the time price correction takes place. At that time, I think there would be a buy opportunity. The name of the game is identify good quality companies and wait for your turn. I think whenever you get an opportunity, I think that is the time to buy into. Never get afraid to buy when I think it is a contra call. That is what the mantra that we would like to follow and we continue to follow. As regards the auto pack, we believe that the commercial vehicle remains absolutely convincing. We are seeing a higher amount of demand getting generated in each and every verticals of the commercial vehicle. And that is where probably we believe that I think this is one space which is relatively less volatile comparative to the auto in the other auto space. In case of two-wheelers, probably I think you might see on a month-over-month some dip in current month. But the fact remains that I think these companies are remaining absolutely very strong, given the kind of higher amount of money in hands of consumer to spend in the tier 2, tier 3 and down at the cities. I guess I think this is the opportunity if at all market gives one to if it corrected prices, I think to buy into good quality two-wheelers. Meanwhile, we believe that April and May, these 2 months, particularly in Western India, are likely to be very strong months for the two-wheelers. So any correction in the price due to whatever the monthly numbers comes out, I think would be a buy opportunity for the traders as well.
So Deep, very quickly, 2 of your recommendations this morning was Aisha and HAL. HAL, of course, has already seen a pretty smart gap up of 3.5%. Quick update on Aisha and HAL.
Yeah. So see, Aisha, I feel it's still positive. It has opened positive and it's trading around 40225, 4035 levels. And I feel till the time it is sustaining above this 3950, 3970 mark, the stock has strong legs to move up to 4150, 4200 on the uptrend. The medium to long term charts are quite strong. So I'm quite positive on both these stocks, Aisha as well as HL for the day as well from here on.
Sudeep, very quickly, are you building on to, if you were not long on the index, would you initiate fresh longs looking at the momentum?
Yeah, absolutely, Neeraj. The kind of momentum that we are witnessing in the first 10-15 minutes here, it's not slipping below 22,470, 22,480, and we're seeing a lot of sectors now coming up. So steadily, I feel the zone of 22,480, 22,500 zone from an intraday perspective will be a strong support. And 22,550 to 22,580 levels can be witnessed till that's what I feel from the current levels.
Thank you so much, Sudeep Shah and Devin Choksi. We'll take a very quick break, but before we head into that break, in case you're wondering, markets are having a pretty good start to the new financial year, rocking start. In fact, Bank Nifty up about 1% now. As Samina has pointed out, 49 out of the 50 Nifty stocks are all in the green, and the broader indices are leading the charge. What's the outlook, though, for the FMCG sector? We're talking about that on the other side, where we are in conversation with Nuvama's Abneesh Roy on the impact of inflation, what's happening with rural demand, and much more. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching India Market Open on a pretty good morning for the Indian markets. But our focus this morning is going to be on the FMCG pack. Now, the face of margin expansion could be behind for makers of staples to soaps as prices of raw materials have started inching up again. Over the last week, we talked about how cocoa prices have gone up, and for chocolate lovers, that's bad news. But there's much more to the story because there are price hikes across the board in terms of input costs as well as commodities. What does that mean for margins of FMCG players? Sesha Sen, my colleague, is joining us with more details. Yes, Sesha?
Right. So if we look at the raw materials, cocoa definitely has seen a threefold surge in costs. But apart from that, wheat, sugar, alkaline, linear alkaline benzene, which is used in detergents, palm oil, even edible oil, all are at a high when compared to the last year. Now, companies, however, would be reluctant to take price hikes, considering two factors. One is the weak demand environment, and the second is the regional competition. So this could pose a risk to the consensus margin assumption. And as companies take price hikes in FY25, that could also be minimal given the intense competition that we are seeing within the industry. Now, for example, the detergent category has seen a 15% price hikes over the last 2 years, majorly in the premium brands. However, as raw materials stabilized, they continued to reduce the intensity of the price hikes, as well as reverse the grammages. But however, in FY25, the price hikes are likely to come back, and this could definitely pose a pressure on the margins.
Right, thank you for that. That was, of course, the word coming in, or the data on why some of these margins of FMCG companies could be under pressure. Well, Abneesh Roy, Executive Director, Nuvama Institutional Equities, joins in to help us understand the current situation for FMCG companies. Morning, Abneesh. Thank you very much for joining in. Abneesh, I'm not sure if you heard Sesha's link about how raw material prices have actually skyrocketed. It's not just cocoa, but even the likes of palm oil have sharpened in the last couple of months. What does that mean for FMCG companies? Do you feel the phase of margin expansion for a whole host of FMCG companies is now behind us?
Yeah, thanks, and good morning to everyone. Yeah, from a this quarter perspective, Q4, we don't see any major issue of margin pressure, because normally the current raw material impacts with a lag. So yes, in FY25, there could be issue more for food companies rather than household and personal care company, because most of the inflation, which you also highlighted, has been more in the food raw material, for example, cocoa, wheat, sugar, etc. But on the other hand, milk, which is also a key raw material, that is slightly down YOY. So you need to take a holistic view and not look at just a few raw material. On the other hand, for household and personal care, the key raw material is generally crude oil or the crude derivatives or the edible oils. Yes, there is some bit of inflation from the lows, but I would say if you compare that with the peaks which we had seen, for example, crude oil used to be almost like $110 or $120, versus that we are still lower. So it will be a bit of a error to just see from the lows. So I'll not be too much worried on the household and personal care companies in terms of the categories. In Q4, I don't see too much of a impact on gross margin. Many of the companies will still see YOY improvement in terms of gross margin. Yes, the extent of gross margins improvement will be a bit lower versus the earlier trajectory, but slight improvement will happen for many companies. Now, coming to cocoa, etc., of course, that's used more in the chocolates. Please note that in chocolates, etc., it is largely 2-3 players pan-India who dominate. It is not too much of a dominance by regional players. So we do expect that price hikes will come back for FMCG sector in general, and chocolates and a lot of the food categories in particular. In FY25 for the sector, FMCG sector, we expect 2 to 4% price hike come back, and we don't see too much of an issue there. I agree with your point that yes, the demand side volume growth is a bit soft currently, more in the rural India. Urban volume demand is still reasonably fine. So after FY24, where the price hike for the customer was in fact negative in many of the categories, we don't see an issue of 2 to 4% not getting absorbed. If you see long-term FMCG pricing, there is a 2 to 3% kind of a CAGR in terms of pricing long-term. So after 1 year of a cut, absorbing 2 to 4% shouldn't be an issue. So that should help the top line also. So net FY25, we see food companies under slightly higher risk on the margins, but we also need to factor in normal rainfall. So what happens is in raw material, we get too concerned on the current trends and not factoring in the normal, in fact, the monsoon is likely to be higher than current expectation. That could cool down the inflation worries in the second half of FY25. So net
Abneesh, let's just break this down company-wise so we have a better understanding of what this will mean for investors in these companies. So stocks like HUL, Marico, Britannia, Pidilite, and some of the paint companies, in my opinion, are the ones that will have to undertake a little bit of a price hike in order to deal with the increase in costs. If that does happen, how constructive are you on these 5 companies they've named, and paint companies as well? We can add to that list because of the increase in crude and palm oil prices.
So I would expect that HUL and Marico and Britannia, etc., the price hikes will come back 2 to 4%. As of now, as I said, in HUL, some bits are of the raw material are in fact down. For example, HUL, tea and the milk raw material will be down, in fact, YOY, while some of the crude related will be slightly inflationary. So I would say that for HUL, not a major concern on the margins bit. It's more on the volume growth where there is a bigger concern for HUL. For companies like Nestle, clearly price hikes will need to be taken, especially in the chocolates portfolio. On the other hand, for their milk business, things are fine. In fact, they should see margin improvement. So that's how I would see that, yes, there will be pockets where in the staples, not too much of a concern for HUL, etc. Coming to paints and Pidilite, I would say that, yes, in paints, because Grasim has also come, and because generally 4% kind of a price cut has been taken, currently, the price hike will come essentially in the second half of 25, not in the first half. That's how we see. So Asian Paints, etc., are sitting on the higher margins also. If you see last 3-4 quarters, the margins has been on the higher side. So in H1, there is a chance that, yes, the margins could be under some pressure. We don't see a big pressure for crude-related inputs currently.
Abneesh, morning. Tamanna here. Since you were talking about Asian Paints in that space, do you expect the competition heating up to have any impact at all? And would it be visible in the next quarter, or would you have to wait about 6 months to see impact, if there is any?
Yeah, we expect most of the impact to be visible in H2 of FY25. Because this is a physical distribution. So currently, not all their factories are ready. They are still reaching out in terms of distributors, etc. So Grasim impact will be more in H2. Already, what we are seeing is a lot of the initiatives which Grasim is doing, for example, extra grammage or 5-10% lower pricing than Asian Paint, is something which has been tried earlier by the other newcomers. It has been tried out earlier. Does it really work too much? We don't see that working too much. So I think Grasim will be more of a 2-year, 3-year kind of a impact on the sector rather than too much in FY25. Of course, there will be some market share loss whenever such a large player comes. There will be some market share loss for the incumbents, Asian, Berger initially. But long term, we see that number 3, number 4 player, essentially Kansai Exo, will be at a greater risk rather than Asian Paints. So we see Grasim also surviving long term, but definitely it will be more from a 3-year or 2-year time horizon where the impact will be not in FY25, especially in H1, the impact will be limited from
Okay, us. So clear. So H2, FY25 onwards, you'll see impact, if any, and everyone will survive. There's enough growth over there. But, Abneesh, I just want to come specifically, and I was going through your report, highlights rural slowdown is persisting, urban still leads growth, in that premium category still leads growth. Putting all of those factors together, what would be then your top picks? If you take away the very temporary election surge that you're going to see on some categories, what would be your top picks, and do you expect this trend to continue of slower rural, higher urban and more premium focused?
So coming to the last question first, rural slowdown, we expect one more quarter of pain in Q1. After that, it will be more a function of how the monsoon is. This currently forecast is that the monsoon will be even better than the normal, which I think will be very important because last 1 or 2 years, there has been either shortfall or floods too much. So we need to see quality of rainfall and how much is the versus normal. So I would say that if that is normal and too much floods doesn't happen, I would say that the rural recovery should start from Q2. Already we are seeing some signs of that, but from Q2 it should accelerate. Coming to topics, currently we'll have Pidilite, United Breweries. In the staples, we have Nestle, Godrej Consumer, Dabur and Tata Consumer. These are the 3-4 names in staples. In the discretionary, we like Pidilite and United Breweries.
Right. Thank you for that, Abneesh. Those are a few picks coming in. The Pidilite is one of the few stocks that Avnish likes. He doesn't think that the current concerns for the FMCG sector are here to stay. Well, in the meantime, the markets have made a new all-time high. 22,529 was hit just a few seconds ago. Currently, the Nifty is looking very well placed. The broader markets also trading from here off the day's high point back to 22,500 now. Neeraj, you want to come in on this one? Significant, I guess, for a few seconds.
Yeah, no, significant for a few seconds, but it'll be interesting to see that if indeed the rates stay the way they are, then what happens to some of those call positions which were written at 22,500 and what kind of covering action comes in there, because that is where the maximum OI concentration was. Remember, the puts are in the money, so there is no problem there. It is the problem for the calls because the trend seems to be good. Remember, we also showed at the start of the trade setup today that April seasonally is a very strong month huge for markets. 11 out of 16 times April has given positive returns. On the times that April has given a positive return, the average return for the market is 4.9%. So if indeed history is to repeat itself, then call writers would have the issues at hand currently, because we are at the start of the series currently and already the calls are way out of the money. So therefore there has to be something that will play on the mind of those option writers.
But Neeraj, you know what I know on Thursday it must have been NAV management, but very soon after the markets hit that record high, we saw selling pressure come in and ease off. Pretty similar even right now. We've not eased off sharply, but the breadth has deteriorated very little. I'm not trying to sort of disappoint our viewers here, but the Nifty is now sub 22,500. So we touched, it was a touch and go, 22,529 was met and we were back lower. Now 40 points off the day's high point. And even the breadth, which was very biased, and it's still very biased on the upside. You've got about 45 stocks that are trading higher. You've got about 4 to 5 counters that are in the red. But it's interesting, 22,483 now. So pretty much at the day's low.
You'd have to be a brave heart not to give in to the temptation of some sell on rally. So
maybe
maybe
stop triggers.
That's what you're seeing in a very short term and specific kind of last few minutes we're seeing. But I think the story also for me is what is happening with the broader markets. Look at the Nifty Small Cap 100, for example. You have 89 advances to 9 declines, and some counters like a Sterlite, Hind Copper, PNB Housing has been on fire since morning. All of them looking really, really good. Media stocks looking good. This morning, and we were talking about how election periods tend to be revenue accretive. Maybe that's why Infosys is a big story this morning as well. For a variety of reasons, banks are looking good. Now, the question really is that how sustainable is this rally? And in the short term, there doesn't seem to be any big cloud on the horizon as of now. Nothing that can really spoil the mood, because you have a big event coming in, in terms of the RBI, and it's expected that they're going to keep status quo as well.
Yeah, so if earnings disappoint, that's a separate thing, but otherwise, guys, think of it, positive CAD numbers for Q4. So the macro seems to be okay, global growth seems to be okay.
Crude is still okay.
Crude is still okay.
Has been good.
Europe recovery has been strong too.
Good, yeah.
So,
and in a case where recovery looks so good, I'm not sure whether interest rate cuts are coming anytime soon. That's exactly what Powell said as well, right? You can't get ahead of ourselves. And that, while you want to look at the glasses half full, no rate cuts or lesser than expected rate cuts may potentially spoil the party. But for now, we're enjoying what we're seeing on the screen. It's looking good.
That's a June story.
Yeah, we'll worry about it. We'll cross the bridge when we come to it for now.
Today on 1st April, definitely not an April Fool's from the market. This is completely, thumbs up. So it's looking good, and certain counters really popping with good stories to build on as well. Pick carefully, choose wisely in a market like that would be the big question. All right, time for a very short break, but on the other side, we're speaking with RR Kabul. Stay tuned for that and more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can account. So pretty solid gains, must say, to a specific set of broader end of the spectrum stocks. By the way, for as much as one may decry about the Torrent Power recent rally, every 150 megawatt order that they are winning is adding more market cap to the stock. If you look at Torrent Power in the last, or YTD maybe, you will just see the kind of moves that Torrent Power has made. Some extremely strong moves by that. This year is about 52% for Torrent Power, so pretty strong show by that stock. 1428 for that one in today's trade too, or in today's trade, and has gained significantly in the last few days. PNB Housing Finance is now up 11.5% on the care ratings upgrading its facilities. So started off strong and has inched up even more on pretty high volume. So pretty strong show by PNB Housing Finance as well. So good markets, solid moves for specific stocks. Manishi Ray Chaudhary joins in to talk about some of these. Manishi, good having you. Thanks for taking the time out. I hope all is well. Surprised with the rally, or did you anticipate this?
Well, I mean, I can't really comment on a day's rally.
Sure.
You know, but
no, the last few days, Manishi. We are at new highs.
Yeah,
so surprised with the new highs?
Right. I mean, if you look at this year, for example, right from the beginning of January, I think the market has been largely flat. It's possibly at its highest, which is, maybe about 3 to 5% higher than the recent bottom. In contrast, some of the other regional markets have actually moved up a lot more. If you look at Hong Kong, China, for example, from the lows in mid to late January, they have moved up about 10 to 12%. So I think it's kind of, the Indian valuation premium, which India always have had, but that had reached kind of a record levels recently, that is sort of getting evened out as FIIs take a slightly more near-term cautious view about this relatively expensive market and pump more money into the North Asian markets, particularly Hong Kong, China, and Korea. Now, having said this, what we're all talking about here are really the near term, what the market discounts, over the next couple of quarters or over the next 1 year or 2 years. if one looks at the longer term, next 3, 5, or 10 years, then India, and this is a point I have always made, it's clearly a core holding in all FII's portfolio. It has a much larger weight today in the benchmark indices than it used to have, which forces many of the benchmark FIIs to pump more money over the longer term. And the fundamental factors in terms of strong growth, in terms of policy momentum, in terms of much better balance sheet that the corporate have, all these have fallen into place, which obviously would drive the market over a long term. Notwithstanding these very sharp up moves or corrections that we have seen over the last 3 months, I think it pays to be bullish on India over the long term, while the tactical concerns or cautions about valuation might persist for some time.
Manishi, my question would be, would you put in fresh money to work currently, or are you on the side which says valuation's expensive, a correction around the corner, let's wait for the dip?
I would possibly have my current positions, maintain my current positions on India when it comes to putting fresh money to work in the Asian or emerging market context. I would possibly be more keen on the cheaper North Asian markets, and not only because of their valuation discount. In fact, there are some pockets, some stocks and some sectors which are ludicrously cheap in these markets right now, but also because if we do see an improvement in the developed economies, if we do see, for example, no recession in the United States and the U.S. economy, the Western economies in general continue to do better, then these globally linked markets might actually do better than a relatively domestic-focused market like India. I would again point out the caveat here is that I'm really talking about maybe the next 2 or 3 quarters, the relative short term. If we do have a narrowing down of India's valuation premium, I think the market would again come back into focus from the foreign institutions' perspective.
Okay. Manishi, where are you most constructive on within the existing positions that you said you will stay invested in? What is the biggest overweight?
Okay. The first would be the private sector banks. Some of these banks, not all of them, have underperformed massively over the last 3 years. And many of these are actually good quality banks with excellent asset quality, with good return on assets, and therefore even potentially good return on equity, which the current price to book multiples possibly not really discount fully. That would be my number one bet. Select private sector banks. Second, I would also focus on the capital goods, engineering, industrials, that universe. That's a broad universe, which would also incorporate some of the power sector, both the utilities and the power equipment manufacturers, the defense equipment manufacturers, even though they have done well recently. Because I think there's a degree of growth which we are possibly unable to see right now, but it would play out over the long term. So these would definitely be my top 2 bets. I would selectively look at, the oil and gas space also, particularly the explorers, and maybe a select few consumer discretionaries, maybe on the autos 4-wheeler side.
Okay, when Manishi Chaudhary speaks about oil and gas, amongst other things, you should definitely listen. As I said, amongst other things. Manishi, thanks for joining us for this very quick perspective. Look forward to seeing you on air soon.
Absolutely. Thank you very much.
Well, that's the view from Manishi Chaudhary. Veteran investor on the Asian equities side, used to be head of equities at BNP Paribas until some time ago. Take a break, in fact, wrap it up on India Markets Open. But up next is Talking Point. Mahesh Patil, CIO, Ajit Vedla, Sun Life AMC joins us. Stay tuned.
people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Thanks for tuning in to Talking Point. I'm your host, Neeraj Shah. Our guest today is one of the largest, even the CIO of one of the largest equity AMCs, and that's Mahesh Patil. He's CIO of Aditya Birla Sun Life AMC. Joins us right now on the show on the first day of the new financial year, on a day when the markets have started off really well. Mahesh, great having you. Thanks so much for joining in. Good morning to you. And is this, I mean, we hit new highs today as well, amidst all the talk of higher valuations, growth concerns, so on and so forth, which have existed for the last couple of months. This market is made in a habit of climbing the walls of worries as they come in. Are you surprised by this up move, or were you always constructive?
Yeah, good morning, Neeraj. And yeah, I think you're right. I think the markets, I mean, there was some amount of correction phase which was there, right, in the last couple of months. And while I think we were still positive on the market, we're still positive on the market, and we think that the market will continue to scale new highs in this calendar year. Our view was more on the large cap space. On the Nifty, we didn't see Nifty correcting much because while the valuations in the broader market, you can say, is slightly ahead. But if you look at the Nifty, there the earnings growth, what we have seen in the last 2-3 years, okay, is in line with the kind of returns what you've seen. If you look at last 3 year Nifty CAGR returns and the earning, they are in line or slightly only ahead. The returns are higher. So I think the actual the large cap space is only marginally expensive, and on overall the outlook there going forward also into this fiscal year as we go in is fairly decent, right? While the strong earnings growth, what we have seen in the last 2-3 years, that is likely to moderate down, but it will still be in the double digits or the low teens or so. And so I think given that, I think the market would continue to do well. Obviously, having run up so much last year, especially in the mid cap and small cap space, I mean, there was a need for some correction. And that's what we were getting into that phase. But I think market seems to have now kind of, again, taken some support and bounced back from those levels. Having said that, I think one would still be cautious a bit in terms of the broader breadth of the market, right? Because that is likely to slightly weaken as we move forward, because the money flow which was coming in, say in the mid cap and small cap, could probably slow down a bit, and if there is any kind of a global markets have also been climbing the wall of worry, you can say, right? Despite concerns about US recession, slowdown in growth, global markets are strong. But if at all we see some weakness over there, I think you will see our markets also possibly reacting to that. But by and large, I think we've remained constructive on the market still. I think we don't see any major big drawdowns in the market. A mild correction or a consolidation phase is what I think one should expect in the near term.
Mahesh, I heard you say that the flows toward the small caps, mid caps may go down a little bit. Are you seeing signs of that? Part one. And part two, would that lead to could that lead to a corrective move, or would you reckon the small caps can, time correct, if you will, because earnings growth momentum might still continue to be strong? Because we were looking at data since March 2020. The earnings growth at the small cap end of the market has been very, very strong.
Yeah, so I think there has been only a slight slowdown in terms of the inflows into the mid and small cap. We're seeing some tilt towards now moving into the large cap and the flexi cap category. But still, I think the overall flows in the mid cap is still fairly decent. So it's not likely you will see a major kind of drawdown or sell-off in the small and mid cap space. You are right to say that this is not a scenario where we are seeing what happened in 2018, right? Where we saw the mid caps, there was a sharp correction also, and there was earnings impact also, which was there. I think this time around, it's the only difference is that as rightly said, the earnings growth is still fairly good, and we think that the mid and small cap also will continue to show reasonably good earnings growth. A lot of the sectors which are where the mid and small caps are there on the domestic side, I think should see decent growth. Even sectors which have seen some slowdown in the consumer discretionary side or the consumer side, I think that could also improve going forward. So in this scenario, I would say that these over valuation in certain pockets in the middle, that needs to be some correction. You might see a time correction or even a mild correction over there. But I mean, someone with a longer term view, with the next, say, 3-5 year view, I think mid and small cap can still do reasonably well and can possibly on a risk adjusted basis give similar returns. So I think it's more of a consolidation, you can say, a sideways correction or a mild correction rather than a deep correction, what one be expecting in the mid and small cap. And again, the flows there are not really turned anything negative. They're only moderated down in terms of the large flows. The skewness, what we saw last year, I think is likely to slow down.
Mahesh, if you were not, I mean, if as a mutual fund CIO, your primary objective would be to beat the benchmarks as well. And in some sense, it's very difficult to go completely astray from what weightages might be there, I presume, on the markets. And that's why my question comes in, that would you be constructive on large private banks at the current scenario, not from a weightages perspective, but purely from an earnings and evaluation perspective? Or would you want to distribute that money into other assets if the weightage issues would not hold you back?
So, I mean, if your question is about whether we are positive on the bank sector or whether it'll be overweighted, that's the what you're driving at. I would say that to some extent, I think clearly the large private banks have underperformed, right, relatively vis-a-vis the broader market, and clearly that's one space where I would say the valuations are more reasonable. Again, if you compare vis-a-vis some of their historical value, they'll be closer to that, or in some of the cases, even it's slightly lower than that. And overall outlook in this sector also is fairly steady. I mean, credit growth could slow down a bit because deposit growth is still a bit of a challenge. But overall, ROAs and the ROEs are fairly healthy. So I would say that, these and some of the large private banks look interesting to us at this point in time where the risk reward looks reasonably good. And this is a time where, as I said, we don't want to chase momentum. And last year was a year where we chased momentum, high growth, or even to that extent, market rewarded risk taking. I think going forward, I think one should be slightly, as I said, cautious. We need to kind of curtail risk in the portfolio. And to that extent, I think some of the large private banks provide that opportunity where there is reasonable margin of safety and possibly steady growth. I mean, it may not be very exciting, but we don't see any kind of a concern on the asset quality, okay, which could really impair the earnings outlook. So, yeah, I think could be a kind of a contra or counter-cyclical call which can take on the private banks.
Okay, and Mahesh, I'm just extending that argument a bit, or extending that conversation about banks, since we've started on themes now, to the PSUs as well. Long argued to be untouchables, they've proven to be wealth creators since COVID numbers, right, relative to private banks as well. And now the only argument that now starts to come in that the valuations are no longer as cheap as they used to be, and they aren't. But bulls argue that even if the valuations are not as cheap as they used to be, they're still reasonably valued, particularly the larger ones in some fashion. I would love to understand, are you constructive on PSU banks at the current valuations from a, say, 1, 2, 3 year perspective?
So I think the PSU banks definitely last year have significantly outperformed the private banks. Again, as you rightly said, there was a valuation catch-up which was there. And obviously, the earnings growth also was fairly strong. I mean, they've benefited from not only NIM expansion, but also significant lower credit costs, and to some extent also recoveries, right, from their earlier write-off loans. So that led to a very strong earnings growth. I think that will definitely moderate down in this fiscal year, right, in FY25, where the whole benefit of lower credit cost is there in the base now. And so we think that now incrementally here, even the re-rating, what we've seen in the PSU banks, they are under kind of valuation which was there, that has also got corrected. So it will be now more stock specific. So I would say from here on, I mean, as I said, we still remain constructive on a few private sector in the PSU banks, which can continue to, which are fairly well capitalized as the most important thing, and which can continue to exhibit reasonably good asset quality, and obviously a strong deposit franchise. So we still not, I mean, as I said, the large underperformance or the large valuation gap between private banks and the PSU bank, I think that is behind us. Now it will be more driven by individual banks, be it private banks or PSU banks. How do they deliver on the earnings side, asset quality side, credit growth side? I think that will determine the kind of a relative outperformance over there. So I mean, to sum it up, I would say that selectively, I think one would now, the macro trade in PSU banks probably is behind us. It will be more stock specific going forward.
Okay. And before we take that break, a question on the macros, Mahesh. There's a Nomura note today, there's a Citi note today, all of which talk about a likely CAD surplus, current account deficit surplus number for Q4. And while it may not extend itself into FY25, but it may still remain within a 1% number in terms of a deficit. Now, how enthused are you with such a development, considering that just 10 years ago, 11 years ago, we looked at numbers which were abysmal, so to say, from there to have come to these numbers? And what are the implications of this, Mahesh, from an investing perspective?
Yeah, so I think clearly the couple of things which have happened, right, structurally, I think, which is leading to a kind of a reasonable or a lower CAD number. See, one is, I mean, obviously, if there is a domestic slowdown, right, your growth slows down, your imports slow down, then your CAD number goes on. But that's not a healthy way of, I mean, one is not too enthused by that, right? But I think what we've seen is that the reduction in CAD is primarily driven by on the export side. On the services exports, we've seen a very strong growth. again, it's not only the IT services. In fact, IT services have slightly slowed down, but the other services which are there, which have, like, for example, the outsourcing work, okay, which is being done in the other industries. There are a lot of GCCs which are being opened up in India, which is the global competence centers by global MNCs, trying to outsource their back-end operations from India. That has seen a very strong one. In fact, that amount will, in the next couple of years, 2-3 years, can be equal to what we've seen in the IT services. So that really provides a strong kind of support to reducing the CAD. And also, I think what we are now embarking on a journey where we are trying to reduce our dependence on imports, right? Especially in the whole electronic side and consumer durable side, which has been kind of increasing steadily. Trying to really now start domestic manufacturing. Okay, it's still early days, but I think structurally, I think that would bring down the pressure on the trade deficit side. So I think these are the couple of factors, okay, which can be structurally positive for keeping the CAD under control. And also on the export side, while there has been some step up in government trying to increase exports and the whole China plus one, but in a weak global kind of a demand scenario, I think that's not really helping at the margin. But I think over a longer term, I think even exports, net exports from India can improve if we're able to get traction in a few sectors where we're trying to displace some of the supply chains which we're importing from China. So I think that is really good from a macro standpoint, from an India perspective, which reduces the macro risk for foreign investors investing into India. And that's what we have been observing, that the volatility, right, on India in terms of the various parameters. For example, the rupee volatility, if you look at last year, okay, would be on the bottom 10 decile, right? If you look at all the currencies developed as well as emerging markets, we'd be in the bottom decile. So I think these things are good from a structural macro long-term stability, and that would also probably mean that foreign investors, when they look at into India, I think they would probably look at the rupee depreciation, which normally is around 3%. In the past, would probably be lower, and could also make a case for the risk premium. Okay, what normally India would require. Okay, I think that will come down. So that means the multiples, right? When a macro stability is there, I think the risk premiums go down. I think will mean that the India will continue to trade at a higher multiples compared to its historical average.
Mm-hmm. Okay. Well, the ideal mix of micro and macro conversation. Mahesh, stay on some more things to talk about, but we need to slip into a quick commercial break. We come back from the break and try and talk about some of the specific themes that could be interesting in addition to banks that we've already spoken about.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Back with Talking Point right here on NDTV Profit in conversation with Mahesh Patil. Before we get back to him, quickly get in my colleague Harsh to talk about one key brokerage note that stood out today because it has got implications for the next set of conversation that we'll have with Mahesh Patil. Harsh, I believe it is a note from ICICI Securities on a defense-led company?
Well, yes, initiating coverage on Dynamatic Technologies. Largely it's what ICICI Securities is suggesting is it's an aerospace-driven kind of story. Of course, they have a very strong foothold in the tractor OEM segment. That is obviously set to continue, but outside of that, what is really going to aid the numbers is the aerospace story. So what they're suggesting is that within the aerospace market, recent order wins for flight critical aero structures for the Falcon 6X for the Dassault Aviation, Airbus 220 doors, rear fuselage, all of that is set to aid some of the numbers that the company is posting. That's one. Second is with regard to the hydraulics and metallurgy division, that also is on the cusp of a turnaround. And the third piece that they're talking about is with regard to returns. Returns are set to improve. Why? Your debt is expected to start to come off. Your fresh capex is expected to be decent between the 25 to 35 crore kind of mark. And with regard to a couple of their divisions, one is the Erla division in Germany. That one has seen a restructure. And with regard to wind farms in Tamil Nadu, that also has seen a divestiture. So on both of those fronts, those are positives on the capital side of things, and therefore your returns are set to improve. Around 18 to 19% kind of margin, 17 to 18% kind of margin profile is what they are expecting, and a 19% EBITDA CAGR is what ICICI Securities is penciling in. 45 times FY26 EPS is what they are currently valuing this one at, 37% upside. 10,000 plus is what the kind of target price that they are putting on this one.
Thanks, Harsh. Thanks for putting that into perspective. Mahesh, I want to come to you on this dichotomy wherein there's this belief that value will see buying, and we are seeing the market not necessarily shying away from giving premium multiples to businesses which are poised for strong earnings growth in the next 2-3 years in newer areas, defense, aerospace, green hydrogen, wind energy, etc., etc. How constructive are you on companies which are growing strong but are priced to perfection on FY24-25 earnings?
So I think, there has always been this kind of tussle between, say, growth and value in the last 2 years, right? We've seen the value stocks do well significantly. There was a good amount of re-rating which has happened over there. On the other side, even growth stock, which have companies which have delivered strong growth or the outlook is good, I think they also continue to do well, right? Where the traditional growth stocks, okay, which were there, like say in the retailing sector, other sectors, which we have seen, their growth has also got impacted. Their slowdown, I think they have seen some amount of correction. But I think going forward, the markets will be equal.
Okay, I think we've just lost that frame a bit. Maybe we'll just, okay. I think we just lost Mahesh Patil's frame a bit, but I think we've gotten him back. Mahesh, sorry, you were finishing your point about what will happen going ahead.
Yeah. So you're talking about the whole challenge between growth and value, right? In terms of how it's playing out. I think the market will continue to reward growth, I think, going forward. I think the big, large value trade in the market has played out. I mean, at least the re-rating, okay, in some of the value stocks. And I think going forward, as interest rates kind of have peaked out and as interest rate correction happens, I think market will start looking at growth. And companies where the outlook, longer term outlook of growth is very strong because of either some of the sectors, okay, where which are kind of emerging, or there are no new growth drivers which are coming in, I think market will lean to give a long.
Okay, I think we're getting a little bit of that issue with Mahesh Patil's link. Maybe we'll try and get that sorted, try and ask him about his top favorites at the current juncture, if we can get him back. But remember, it's happening on a day when the markets have done really well for themselves, 0.74% higher. So still in the upper range, even if you believe that we've come off a little bit from the highs of the day, still in the upper end of the range for the market. So therefore, nothing untoward. It's a strong start and it's staying that way thus far. Mahesh, sorry, we have you back, and we got the construct of how you think about growth and value. Now, I would love to understand, where is it that you have the highest conviction over the course of the next 12 months? Something that you has the highest weightage on your portfolio and you're very comfortable with that weightage?
Yeah, so I think at least in the medium term, I think we are positive on sectors like, for example, automobiles, especially the four-wheelers. While the stocks are run up, I think we see a reasonably decent volume growth and margin improvement over there. We're constructive on the private banks, where we think that the large underperformance last year, I think, provides a good margin of safety over there. Also in other sectors, like other discretionary sectors, like, for example, aviation. Then on the consumer discretionary side, where we've seen a slight slowdown last year, especially in consumer durables, I think we are getting more constructive there as we move forward. There we think that the valuation correction which has happened is a good opportunity to play from a slightly longer term perspective. We also positive in the telecom sector, where we're seeing that we haven't seen any kind of a price increase, but at the post-elections, okay, there is room for prices to move up, and that will continue to drive earnings growth over there. Apart from that, other sectors which have been underperformers, right, in the last year, like, say, for example, chemicals, because of the slowdown and the kind of inventory which is built up in the system. I think going forward, I think as the inventory correction takes place, one can see improvement in terms of the volume numbers, and a lot of companies have set up capacities, okay, in the last couple of years, which would start to now deliver. So these are some of the sectors, okay, where we would be positive in our portfolios or overweight at this point in time. Apart from that, even the industrials and the capital goods sector, especially in the power side, is where we see good demand drivers from a slightly medium to long-term perspective. And that's the area also where we are constructive on.
Got it. Mahesh, last question, because we are at the cusp of the earnings, IT will kickstart this piece per se. Just a slight deep dive there. People are a bit confused because the numbers from Accenture, etc., don't look that great. The hope is that at some point of time, if the US economy, European economy is starting to show green shoots, then order flows will start trickling in. Are you looking at it as a glass half full or a glass half empty?
I think the IT sector has been this is a sector where even a slight change, okay, in expectations or guidance has a larger impact on the stock prices. And it's fairly well researched sector in that sense. But I would still look at this sector as a glass half full, I would say, okay, because while near term there is some amount of challenges, but I think the bulk of the downgrade we've seen behind us in this sector. I think, and going forward from here, it is just a matter of time, probably 1 or 2 quarters, where you will see at least the growth numbers starting to look better than what it was in the last year. And we still believe that structurally, I think the spend on IT and the spend toward digital will only increase. The whole discretionary spend, which have been cut in the back of the slowdown, I think will slowly start to come up. And I think and the IT companies, especially the larger ones, right, and which are fairly well positioned and able to execute well, I think they should be able to see a recovery, at least in the second half of this fiscal year. So while the valuations there are not exactly cheap compared to the historical, that's why you might not see a higher return. But I would say this is the sector which one would want to buy in the dips if at all there is a correction, because there's a slightly weak macro on the US side.
Got it. Okay. Mahesh Patil, such a pleasure talking to you. Thank you for your time and your insights. Much appreciated.
Thank you, Neeraj.
All right, that's the view from Mahesh Patil of Birla Sun Life. And with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Markets extend gains to scale fresh record high. Sensex trades above 74,100 while the Nifty trades around 22,500. It's a sea of green among sectors. Real estate jumps over 3% while media and metals also see significant gains. And Prestige trades higher in trade as the company enters in a pact with Abu Dhabi Investment Authority and Kotak AIF for residential projects. Shares of Adani Group companies soar in trade. Adani Total is up over 4%. The company starts production at India's largest bio-waste power generation unit. Hello and welcome to the FNO show. So myself and Agam Wakil will take you through all the action in the FNO markets this morning. A quick check on the markets. The Nifty made a record high in the first few minutes of open this morning of 22,529. We're off the day's high point, but still trading steady with the broader markets gaining in line with the benchmark index. The breadth of the market's also quite solid with a very clear bias to the gainers in trade today. Agam, it's interesting. It was a great setup on the very first day of a brand new financial year. We made a new high in the first few minutes of trade and we are holding around those levels, and I think that's what's heartening.
Absolutely, yes. Samina, we're looking at the Nifty touching and perhaps testing 22,500. Remember that has been a sort of a resistance through the course of the series of March. And should we cross that and sustain above 22,500, well, next stop perhaps could be certainly higher levels. That perhaps goes without saying. But at the moment, we are seeing a little bit of resistance coming through at that level. And there's a likelihood that there could be, because we must remember that we still have a significant amount of open interest around the 22,500 call. And to take that out, will need some amount of strength as far as markets go. But well, as Samina has mentioned, we are off to a good start to this particular financial year with an advance of around 0.7% and 0.75% coming through. Let's take a look at the Bank Nifty as well. And the Bank Nifty is also up as much as 1%. What is also good about the Bank Nifty is that's also currently trending about the mark of 47,500. Now let's take a look at the future snapshot and see how things are panning out. Now remember, when it comes to the Nifty, through the course of March, we've seen our overall open interest numbers stand at somewhere around 200,000 to 250,000. At the beginning of the April series, we're already at 211,000, as you can see on your screen there. But we are seeing unwinding now declining of around as much as nearly 6% in terms of open interest, even as the Nifty advances by around 0.7%. How about the Bank Nifty? Is that also seeing unwinding in futures? Let's pull that up. Yes, it is. So we are in fact looking at a 5.5% decline in open interest, even as the index continues to rise by around 0.5%. So some cues which perhaps will take some developing through before we actually can make out on trends, because it does seem like markets are looking at a pause, a little bit of a breather. Well, perhaps a little bit of indecisiveness also as well, whether or not in fact they want to see a further up move, because we continue to see that resistance at higher marks. Now let's take a look at the options market. Let's see how things are panning out. And as I was mentioning earlier, we are seeing, look at the 22,500 strike. That's where we are seeing not only enough amount of calls being written, but puts as well. So I reckon it also indicates that a lot of traders are expecting some amount of sideways movement, at least in terms of the first week of this financial year. Let's talk about the change in OI. Are we looking at a big move in any of these strikes? Not really, save for something like the 22,500. Once again, it's the usual suspect there. So I reckon we need to wait and watch as to how things can pan out, and we'll have to find out. But let's take a look at what our experts are saying as far as these benchmarks are concerned. Let's get in Vinay Rajani of HDFC Securities and Sneha Seth of Angel One, who's joining us on the show. Good morning to the both of you. Thanks for joining in. Vinay, your view on the Nifty first. How do things pan out there?
Yeah, so definitely rollover data is okay. It's good only, and we have seen that we are starting the April series in the stock future segment at the all-time high open interest, and rollover data in Nifty was 70%, while Bank Nifty almost 86% rollover is there. The good thing about the new expiry is that the FI's long to short ratio has reached to 0.81, which was 0.46 on 27th of March. So we can say that in the last session of the March series, we have seen significant short covering by the FIs. That also means that the FI did not roll over their short positions, and they in fact cut their shorts in the last session of the March series. And now we have reached to 0.81 ratio. Still, FIs are net shorts because ratio is below 1. But that suggests that we may expect further short covering by the FIs in the coming session, as we are technically placed very strong. Nifty has registered a new all-time high, and Bank Nifty is also improving on the charts. The good thing is that the broader markets are improving. Whatever froth was there in the last series, we saw that many of the mid-cap F&O stocks corrected, and that froth was taken out in the month of March, and now they can retrace their losses. So the real strength is there in the mid-cap and small cap segment. There are many F&O stocks, which are the part of mid-cap index of NSE. So I'm expecting that broader market will outperform from here, because we can already see that Nifty small cap index is up by 2.3%, while Nifty is just up by 0.8%. So as of now, we can expect overall broader markets to do well. F&O mid-cap stocks can perform well. And as far as Nifty is concerned, we have seen that 23,000 is a strike where we have seen maximum open interest and call writing happening in the monthly expiry of April. So that can act as a next resistance. And Bank Nifty is also expected to do well. So overall, I'm expecting that next couple of sessions is going to remain very strong. And as far as stop loss is concerned for the Nifty, I think 22,300 can be utilized as a stop loss in the long positions.
Right. Sneha, are you expecting this short covering led rally to continue, and would you be looking at initiating fresh longs on the index given the current momentum?
Very good morning. Yes, if we see the overall momentum is quite strong, but here I would say that I need to see the follow-up action in today's session. We have seen a recent short covering. The rollovers were decent. FI's long-short ratio has increased to 45. But here on, it is important because if you see the IVs, it is very low at this moment. It is around 12.5. So anywhere if there is a support zone at this current zone, so if any surge in IVs, that won't be a very healthy sign. Apart from that, if we see, yes, 22,200, 300, that has become a good support zone. Today's closing would be important. If we see a closing above, say, 22,500, so that will be a positive thing. Banking index also is doing decent. IT index is certainly not performing, so that would be the zone wherein we can look for any short covering bounce, because the level wise the stocks have been placed at a good levels at present. So at this moment, yes, someone who is holding a long can continue to hold long, but if fresh long, I would say we should wait. In case of any declines towards, say, 22, 300, 400, that zone is the buy zone for me. At this moment, I would not recommend any fresh buying.
So don't take profits off the table if you've got positions on the Nifty, but fresh longs not being recommended by Sneha. Sneha, you mentioned that Bank Nifty is participating. I think barring IT, most sectors are participating. What is the trading strategy for Bank Nifty?
In case of banking index, I believe 47,000, 47,200 should be acting as a support for now. And on the higher side, if the momentum continues, we may expect it to head towards 47,800 followed by 48,000. So that is the levels to watch out in the banking index.
All right, Sneha, thanks for that. Stay with us, guys. We'll slip into a short break. And on the other side, of course, we'll talk about stocks and a lot more. Back in just a bit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back to the FNO show. We take a look at how things are panning out as far as, well, your stocks are concerned. Let's pull up all the stocks which are in fact buzzing in trade and see how things are panning out. So, well, you have it, there you have it. You have Hindustan Copper, JK Cement, ICICI Pru, as well as DLF, all of them looking at about a good 4.5 to about nearly 11% added in trade, even as we see an increase in the underlying coming through. We have longs coming in as far as these stocks are concerned. Then, of course, Apollo Tyres looking at a little bit of weakness, but not too much. In terms of stocks which are seeing unwinding, well, we have Metropolis, Pidilite and NTPC, which indicating a little bit of a short covering and longs unwinding for PI Industries and Godrej Consumers. This is what we have in terms of stocks that are on our radar. Let's see what our experts have on their list of things. Sneha, coming back to you, stocks that you think that could possibly do well, or perhaps some short candidates?
The individual counters, I'm liking Sun TV. If we see this counter has corrected decent and it has been trading around 200-day simple moving average. For quite some time, it was consolidating in the range. Today, we have seen some up move wherein it has managed to surpass 200-day simple moving average, and I think it is up 1.5%. I think we may see a further short covering bounce in this counter. So I would recommend buying this counter with a strict stop loss of around 594, and the target expected will be around 629. Apart from this, I am also liking Apollo Hospital. If you see this counter again, this counter has corrected from 6,800 plus levels and has been taking support near the 89 EMA. And now it has, shown a decent short covering move, wherein it is up by 2% now. So I think we may head towards its the levels which we saw above 6,800. That is the zone I'm looking at. So I would recommend buying this counter as well with a strict stop loss of today's low, that is around 6,372, and the target expected will be 6,777.
Right, that's a buy call on Apollo Hospitals coming in from Sneha. Vinay, what about you? What are your top stock recommendations this morning?
Yeah, so I'm going with the two long recommendation. First would be the Tata Power. So Tata Power seems to have broken out from the last 2 weeks consolidations. There was a narrow consolidation, and primary trend was already bullish. Stock was finding support on its 50 days EMA, and higher tops, higher bottom formation was there on the weekly and monthly chart. So definitely the primary trend was up, and now stock seems to have broken out on the short term charts. Also consolidation breakout is there, and the volume and oscillator indicator setup is also suggesting that price should go up for the Tata Power. So I'm suggesting going long in Tata Power near 406, 407 odd level in the April future. I'm recommending stop loss can be kept at 398. On the upside, I am expecting a target of 416. The second pick I would choose is the IRCTC. So basically, this stock has broken out from the trend line which adjoins the previous swing highs, and this stock has started performing after a long time. There was a healthy correction price wise also and time wise also. The stock has corrected. Now stock has reached above the important moving averages, and reversal setup is there on the chart. So I'm suggesting going long in IRCTC April future around 962, 963 level. Stop loss can be kept at 945, and on the upside I'm expecting a target of 995. So I would recommend Tata Power and IRCTC April future for trading long side.
Power and IRCTC, those are a few recommendations coming in from Vinay as well. Vinay, a couple of counters that are doing really well across the broader markets, and one of them is Prestige Estates. There's also fundamental news flow, and hence I'm bringing this one up. How do you trade Prestige from the real estate pack? The whole sector is looking good, I know. And also two other counters that are gaining on news flow. One is HAL and the other one is Rail Vikas. So these three counters, if you've got a trading strategy, if you've been tracking them, would be great.
Prestige, as you said, that the entire sector has been doing good, and DLF especially has broken out from the previous swing highs of 940 and holding above that level. So the sector strength is helping the entire the stock like Oberoi and Prestige. Though it is not as strong as DLF is, but the setup is good only. We can say that because of the sector strength and the kind of technical breakout which is there, the stock has surpassed the 50-day EMA resistance also now. It is placed at 1, 2, 3, 4. So though in last 6-7 session it has gone up. So if you want to trade fresh on the long side in the stock like Prestige, I would suggest that wait for some dip to come. If you see that stock correcting by 2 to 3% and support I see around 1150, 1180 zone. So if 2-3% of correction is there in the stock, then buy on dips can be done for this strategy for this particular stock. So overall it is good, but in 7-8 session it has gone up a lot. So I would wait for a dip to come, and 1200 or 180, this is the buying zone for the stock, and positionally I'm expecting this stock to do well. And as far as HAL is concerned, I think it has just registered an all-time high, which is at 3454. And the setup is good, but in this also 4-5 days of rally has already we have missed. So for fresh long position, I would wait for support to come at lower level. So 3350 is a support for the stock. So once you see this stock coming to that support, you can initiate a fresh long position. But at this point of time, I would not go long in this counter, as risk reward is not that much favorable.
Okay, well, a whole lot of names out there, and of course Vinay has spoken about quite a few actually. But I did want to take up Hindustan Aeronautics specifically, because that is the other one which is making a new life high. And a lot of traders and investors, in fact, took the opportunity to go ahead and buy when it did dip a few days ago, and it's back at, well, a mark of over 3,400 rupees per share. Sneha, your view here, anything that you find interesting as far as Hindustan Aeronautics is concerned?
If we see the chart structure, it is quite strong on the daily chart, as well as this counter has been taking support around the 20 DEMA, which is said to be very good. If any counter, it is trading, it is managing to trade above 20 DEMA, and is in case of any declines, it is taking support near that. Counter has a very good chart structure. So this is the counter wherein we are seeing same kind of a structure. We have seen a gap up opening. It is hovering. It has made a new record highs, and I think there is a potential for it to go towards, say, 3,500, 550 odd zone. So I would say if someone is already holding it, they can. If someone wish to take a fresh trade, they can do it with a strict stop loss around, say, 3,345. So that would be the stop loss for someone who's taking a fresh bet today, and someone who's holding for quite some time, and they should continue to hold for the target of 3,500, 550.
Yeah, you've been tracking some of these Adani stocks, Adani Power, Adani Total, Adani Green. All of them are up in the range of 3 to 5%. Any trading opportunities there?
We have recommended Adani Ports, which has done quite well. Apart from that, if we see Adani Power, this counter, if we see, it has, given a gap up opening today, up 5%. And if we see the chart structure, I think the chart structure is quite good. It was consolidating, and on the higher side, 584, 585, that is the resistance zone. So I would say, if any, considering the support which it has been taking around the 89 EMA on the daily chart, I think we may head towards those zone. And if we break 580 on the closing basis, I think we may see a very strong move in this counter. So I would say anyone who's looking to initiate any long position, Adani Power is the counter which I'm liking at this zone, especially after a gap up opening today. Any follow-up buying and any move beyond 580, that would be very good for this counter. So if someone wants to accumulate at this zone also, they can go ahead and long this counter.
Right. Vinay, if you can also come in on Siemens, because this one is the other one which is just moving up without any stopping. And in fact, it has gained around 10% in the last 5 to 6 odd sessions. Of course, at a new life high once again, it's up another 2.5%. Vinay, your stance on Siemens?
Yeah, so definitely setup is good that the stock has been rising for last 7 consecutive session, and the continuous follow-up buying can be seen in the entire capital goods space. And the another thing is that this particular stock is a part of MNC index also, which also witnessed a clear breakout last week, and follow-up buying is also registered. So the MNC index as well as the BSE capital good index, it's a part of the Siemens is a part of both these indices. So both indices are performing very well, and because of the leadership which Siemens has taken, ABB, L&T, this entire capital goods space has been doing good. But as of now, I don't see any fresh this levels to take a fresh entry, because in last 7 session it has gone up a lot. So better to wait for some dip to come. If you are already holding, keep it on a trailing basis. Stop loss should be kept at on trailing basis. But if you want to take a fresh long position, then I would recommend to wait for some time. Let it correct. A first 2-3.4% kind of correction should be there, and in that case you can consider going long. But at this price I would not recommend fresh longs, but existing longs can be held with a stop loss and trailing stop loss. As of now, the trailing stop loss should be at 5200.
Right. Thank you, Vinay. Thank you, Sneha. Great having both of you on the show. It's an exciting start to the year. Of course, the last week of the last financial year also, so the markets end on a positive note, and the momentum and the short covering red rally continues on D Street, with the Nifty trading around its life high of 22,529. The breadth of the market also looks pretty solid, with the broader markets outperforming the benchmark, with most sectors trading firm barring the IT back. Stocks like PNB Housing Finance, while not in the F&O space, still turn out to be the biggest gainer in today's session, up 14%. Steerlight Tech is up 12%. Wellspun Living and Action Construction are some of the big gainers. Well, it's April 1st, which also marks the beginning of the new financial year, which also means the updated regulations for the income tax regime, which were outlined in the budget, which will take effect from today. So before we wrap up, let's quickly go across to Janani, taking us through all the changes in your tax slab.
Out with the old and in with the new. A new financial year is around the corner, and that means newer considerations as you begin your financial planning. With an interim budget in February, there may not be newer tax rates, but there are some tax-related extensions, allowances, and clarifications that you might want to bookmark. Allow us to give you a down low on what tax-related updates you need to know about. Let's first begin with the finance bill, which was followed by the interim budget. The new rates for tax collected at source, or TCS, on the liberalized remittance scheme was notified way back in June, and this was subsequently put into effect from the 1st of October. This is now found a mention in the finance bill this year. So your overseas tour packages up to 7 lakhs will attract a 5% rate and 20% rate when it crosses that threshold. Similarly, when the LRS is for other purposes than educational or medical treatment, a 20% TCS rate will be applicable over the 7 lakh limit for a year. The government has also decided it would strictly enforce timely payments to MSMEs from the new year. If you have an MSME customer, the window for fulfilling a payment obligation to that MSME will have a 45-day limit. Beyond this window, the amount will be considered a profit, making it liable for tax payments. Moreover, all outstanding dues are expected to be cleared by the 31st of March. On improving taxpayer experience, the norms around faceless assessment schemes have been extended. Now, the government has extended the time limit for issuing of notification for faceless proceedings, for transfer pricing assessment, for proceedings before the dispute resolution panel, and for also appeal proceedings before the tribunal till the 31st of March 2025. That gives you a full financial year. Continuing on the trend of improving the taxpayer experience, the government has said that it will also withdraw smaller value disputed tax demands, up to 10,000 rupees for tax years of 2010-2011 to 2014-2015. And it will also withdraw demands up to 25,000 for financial years 2009 to 2010. Lastly, let's talk about sunset clauses. Extensions have been allowed on the date of commencement for operations for exemptions by about 1 year, and this will basically extend the sunset period for many tax exemptions in the upcoming financial year from the 31st of March 2024 to the 31st of March 2025. This is an extension on the commencement date for operations for an investment division for an offshore banking unit located in the IFSC. Exemption is also for the cases where a non-resident earning royalty or interest from the lease of an aircraft or a ship that is also paid by an IFSC unit. An exemption will include the deduction of gains that they get from the transfer of such a leased aircraft or a ship. Now, the date of incorporation for eligible startups to avail a tax holiday has also been extended till the 31st of March 2025. An opportunity for claiming an exemption on income from specified investment from specified funds like sovereign wealth funds or foreign pension funds will also be extended for investments made up to 31st of March 2025. While we're on the subject of sunset clauses, one that wasn't extended was the concessional tax rate of 15% applicable to new manufacturing units. The government said that it has given enough time for this to take off and has set up an ecosystem that will support this measure going forward.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles.
Hello and welcome. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Well, clearly a stellar day for the markets. Nifty recorded its life high at 22,529 and Sensex recorded its life high at 74,3254. At present, if we see, Sensex is up about 0.5%. Nifty is also up about 0.7%. Well, top gainers on the Nifty today include JSW Steel, which is up around 4% in trade, Tata Steel, which is up around 2%, Adani Ports up around 2%, and Apollo Hospitals, which is up around 2%. In terms of advance decline ratio for the Nifty, 41 advance and 9 decline at present, and the broader markets are clearly outperforming the benchmarks today. Mid cap 100 is up around 1.3%, small cap 250 up around 2%. But Harsh, what are some stocks that are clearly, taking the index upwards?
Well, yes, it's a secular positive. In fact, closing in on both the Nifty mid cap and small cap at the day's high. Let me also pull up the advanced decline just to show that secularity. Very close to the day's high on the Nifty 50 as well. We're at nearly close to record highs as well. If we can pull up that advanced decline ratio to try, and there you go. Look at that. 1856 advances to just about 177 declines, clearly showing that the market strength is extremely solid. Also, I want to pull up some sectors before I go to specific stocks. Let's pull up something like Nifty Media, up roughly 2.8 odd percent. Nifty Metal also up around 2.8 odd percent. Look at Realty, it's up 4%. And if we can have the constituents of Realty, because that's where I'll start off with. Look at that. Prestige up nearly 5.5+%. DLF also up 6+%. Prestige, mind you, on the back of news as well. Suntech is up 5% as well. Across the board, you're seeing a green in Realty and a good chunky set of gains coming across the Realty space. So keep that one on your radar today. We will also. Let me quickly take it to some stocks on the Nifty Mid Cap 100 which are buzzing. You have the likes of a BSE up roughly 8% in trade today. Almost 2700 plus now. Life high coming in for BSE. You also have the likes of a Torrent Power and Idea, both of which are up roughly 6 odd percent in trade today. There you go, Torrent Power up 6+%. In terms of the losers, far and few, but nonetheless, you have something like a Hindustan Petro, which is down around 1.5% in trade. Sona Comms is seeing a bit of a dampener kind of a day, 1.5% lower on that one as well. Supreme Industries also down around 1.6 odd percent. Let me quickly take it to the Nifty small cap. Well, PNB Housing up and away in trade on that one, nearly 13% higher. Welspun Living up 9% as well. Mind you, an initiating coverage note from Systematics. They have their sights on Welspun. That's the pick of the space for them, and that one is up 9% as well. Hindustan Copper is up 8% as well. So Nifty small cap 100, those are the ones that are seeing gains. Losers again far and few, but Credit Access is the only meaningful loser outside of something like a Sonata Software, which is down just about 0.7%. So that's broadly the texture. A positive day of trade clearly visible, but let me take it across. We have Electronics Mart India in focus. Companies recently commenced commercial operations in a slew of stores across Gurgaon, Telangana, Delhi in the most recent store opening that they have had, but they've also had another slew of stores which they've opened across March. We have with us Premchand Devarakonda, who is the CFO of Electronics Mart India, to join us now to give us more perspective. Sir, just for trying to break this down, correctly, 147 stores is what you were at the end of Q3. You opened 7 stores in Q3, 21 stores till Q3 for financial year FY24. How many stores have you opened in Q4? And where does that take your FY24 tally? And also give us some visibility on FY25 with regard to stores.
Yeah, good morning. And first of all, thank you very much for having me on your show. As we speak, our store count across India, including MBOs, EBOs, and specialized stores, it is around 157. So, and these in the coming year, we are planning to add 25 more stores, out of which 10 stores will be, close to 10 stores will be in NCR, and the rest will be in AP and Telangana regions.
Mr. Devakonda, Mahima this side. I just wanted to understand that at present your presence is in north and south only. Any kind of geographical expansions that you plan in the west and the east?
Not immediately, but we have been exploring the possibility of expanding our operations to this northeast and also other parts like towards Punjab and Haryana.
So then can we expect to expand in this particular northeast region in FY25?
No, not immediately. It will take some more time because it's not so easy because we have to do a lot of homework before we get into any new territory. And the success of this business is purely dependent on the support which we get from the brands. So that we are right now exploring the possibilities, but it will take at least 18 to 24 months.
Okay, so that's on geography. If I can also try and understand this store count of 25 that you've given. You've done 30 plus stores in FY24, if I've done the math right. Is this a more conservative number that you've disclosed for FY25? Is this like a minimum 25 kind of a store count?
It's not conservative. In fact, this year, I mean, in FY24, we have added so many stores because we were fresh in the territories like, NCR. So we were new in that territory. And there we have to take the store count to at least 20 by end of this financial year. And next year, it will not be so aggressive as this year. So 25 is the right figure, actually, if you ask me. Yeah.
Right. And in terms of your same store sales growth, it was around 10% in 9 months FY25. So going forward for FY25, is this 10% sustainable? Will it grow more, or what is the outlook like?
That is sustainable because most of the stores were, the stores which got opened in FY23. I think those stores have been performing very well. So that will definitely, that's the reason why we can maintain that 10% same store growth.
Understood. Would you look to clock a revenue of 20% plus in FY25 as well overall? Is that the kind of trajectory you're looking at? And if so, same store sales growth of 10%, would you be happy with that or would you like to grow it? Because in Q3, it was at roughly 30%.
See, first thing, 20% year-on-year growth is little optimistic. So conservatively, historically also, our year-on-year growth has been 15%, around 15%, that's it. So that is what we are aiming. And during the current financial year also, the financial year we just completed, in that financial year also, we had that 15%, between 15 and 17% year-on-year growth. So that is going to be sustained in future as well. So, and then what is the other question actually I missed?
No, yeah, so I take your point, and therefore likely you'd be happy with a same store sales growth of roughly 10% is my understanding.
Yeah. The second part, like in Hyderabad region, our base is very high. There, a double-digit same store growth is it's quite difficult unless we add any new product which does not exist in the past. So that's why blended same store growth would be around 10%.
Understood. And with regard to the journey of a store, could you just help us understand how does it evolve? Because you've opened 10 stores in Q4, which should likely start, getting you better revenue from Q1 FY25. So I want to try and understand whether there will be a better set of numbers in FY25 that one can expect, even though you're guiding for a roughly 15% kind of revenue growth over the medium term.
Yeah. See, normally we open the stores either before the start of the festive season or before the start of the summer season. So if the season does well, then we will have the good throughput from those stores. And next year, normally each store takes at least 12 to 18 months to stabilize. So then you will have steady growth year on year. In the first year, I'm talking about in the second 12 months, there will be at least 30% growth from that store. Then third year, it will be 20 to 25%. Then that same trend will continue for next year also. After 3 years, that growth rate from that store will be around 10%. And the stores aging more than 10 years will normally have single-digit growth year on year.
So this is in terms of revenue, but in terms of margins, the North cluster clocked around only 0.2% margins in 9 months FY24 because it's just the starting. But you've guided that it will be equivalent to your South cluster margins, which are around 7.4%. So what does the journey look like? By when do you think that the North cluster will achieve the target of 7% margins?
See, this year we are expecting that North cluster to contribute around 5% of EBITDA. Then maybe next year it will reach to the level of South cluster. I mean FY26.
Okay, and I want to try and understand with regard to overall margins. Your gross margins have been going up. You've been doing better value products with regard to, at least from a margin perspective. Can you continue to push that, and can margins continue to go up? Is that where we can see a better push on profitability over that 15% kind of number that your revenue is expected to grow by?
See, expecting a growth in the gross margins in the near future is too optimistic. Okay. So what I feel like we have to maintain this 14.5% gross margin over the next couple of years, and that is achievable. So growing that gross margin rate is, as of now, it is not quite easy until unless we have some new product added to the cluster.
Okay, I need to cut across because it's RBI's 90th year of celebration. So I'm going to have to cut this interview short. Thank you so much for speaking with us, the management of Electronic Mart India. But let me cut across to the celebration there, 90th year celebration being addressed by the RBI Governor Shaktikanta Das.
Changes taking place in today's world, especially in the areas of technology, innovation, business practices, and growing complexities in the financial sector. The Reserve Bank is constantly evaluating the emerging trends and taking necessary policy measures to remain in sync with the changing times. Our effort is to anticipate situations and take proactive measures. The global turmoil arising from the COVID-19 pandemic and the ongoing geopolitical hostilities have tested the resilience of every economy in the world, including India. The well-calibrated and coordinated monetary and fiscal policies adopted in our country went a long way in shielding our economy from these shocks and helped us to emerge even stronger than before. It's a matter of satisfaction that today our GDP growth is robust, inflation is moderating, the financial sector is stable, the external sector remains resilient, and the forex reserves are at an all-time high. Over the years, the Reserve Bank has emerged as a symbol of stability, resilience, and commitment to the welfare of our citizens. This has been possible due to the contributions made by generations of the Team RBI. As we move towards RBI at 100, the Reserve Bank remains focused on ensuring a stable and strong financial system that would act as a bedrock for our country's economic progress. With these words, let me once again welcome the Honorable Prime Minister and the other dignitaries present in the dais and each one of you who is present here in the audience to this commemorative event of 90 years of the Reserve Bank. Thank you. Namaskar.
धन्यवाद। अब हमारा आग्रह है माननीय वित्त मंत्री महोदया श्रीमती निर्मला सीतारमण जी से कि कृपया अपना विशेष संबोधन।
Respected Prime Minister, Honorable Governor of Maharashtra, Chief Minister of Maharashtra, my colleagues in the Council of Ministers, Deputy Chief Ministers of Maharashtra, Governor Reserve Bank, all invited dignitaries, media. I'm here on a very happy occasion when today we mark the 90th anniversary of Reserve Bank of India. RBI, the Central Bank of India, has actually had a remarkable checkered history. It stands tall among its peers on several counts. Once in a century pandemic, the COVID, hit us. The RBI adopted and in fact deployed conventional and unconventional range of instruments to provide liquidity and to promote growth and to ensure financial stability. The two examples that I can cite and which can stand before as a classic example are the moratorium on loan repayments and also the liquidity infusion which happened during that time. Later came the Russia-Ukraine war. RBI's measures primarily aimed at two things. One, to address the inflation and the forex market's volatility. RBI, in fact, has been one of the earliest to recognize the non-transient nature of inflation. One of the few central banks, if I may say so, to front-load policy rate hikes in particular. Forex reserve management is also something on which we have this opportune moment to recall the work done by the RBI. Building up reserves, including foreign exchange interventions. In the past few years, India's capacity to manage and also to take care of external imbalances and uncertainties have significantly improved purely because of the professional management of the RBI. Rupee has exhibited lower volatility and orderly movements is what we notice of the rupee, and they are in relative terms to the rest of its peers. Managing India's banks is something which I'll recall at this time. A decade ago, balance sheet problem, today is a balance sheet advantage, and that advantage accrues to our economy. Collaborative effort of the Government of India and RBI, the asset quality management, prompt corrective action framework are all great functions well carried out by our true regulator of the banks, Reserve Bank of India. Fiscal and monetary policy coordination, as always, the Government of India is one of the governments like very many others, and RBI manages its debt, which is very important for government. Inflation management, despite monetary tightening pressures and the measures which have been taken for monetary tightening, has stabilized the G-Sec yields, which is very important for the economy. The stability in G-Sec markets has contributed to overall financial market resilience and investor confidence in the Indian economy. Lastly, the Bank of International Settlements, BIS, has mentioned significant role played by RBI in a very unconventional point. RBI's role in anchoring inflation expectations using communication policy is significant, is what the BIS has said. And I'm sure not one in this audience would disagree with that. Apart from forward guidance, it was used for explaining the rationale. The policy of communication management has been used for explaining the rationale for the measures taken by the RBI. Thus, in the economy, confidence was built, and then optimism, if I can say so, optimism has been held up even during pandemic, held high and never let down. So optimism building is a very beautiful function which the RBI during crisis time has handled because it adopted this unconventional instrument of communication with the people. And final word, institutional integrity is something which I would credit the RBI, and among very many central banks, India's RBI, for its institutional credibility, needs a big applause in the 90th anniversary. Thank you very much.
धन्यवाद माननीय आपके मार्गदर्शन के लिए। रिजर्व बैंक की इस अभूतपूर्व यात्रा को समर्पित एक स्मारक सिक्का जारी करने के लिए रिजर्व बैंक गवर्नर से अनुरोध है कि माननीय प्रधानमंत्री जी के कर कमलों द्वारा जारी होने वाले सिक्के को प्रस्तुत करें। बहुत बहुत धन्यवाद माननीय। आज हम एक ऐसे ऐतिहासिक क्षण के साक्षी बन रहे हैं जहां हम भारतीय रिजर्व बैंक के 9 दशकों की यात्रा को मना रहे हैं, जिसमें रिजर्व बैंक ने कई नई कार्य प्रणालियों की शुरुआत की और कई पुराने कार्यों में नवीनता लाई है। आइए देखते हैं इस यात्रा को दर्शाते हुए एक लघु फिल्म।
The Reserve Bank of India came into existence on 1st of April 1935 as a joint stock company. It was nationalized in 1949. Over the last 9 decades, through its multifarious functions, the RBI has played a crucial role in the development of Indian financial sector and the economy. As the currency issuer of the country, the RBI has ensured supply of good quality banknotes. It has achieved near self-sufficiency in printing and sourcing of security features of banknotes by setting up of currency printing presses, paper manufacturing units and in-house ink factory. Being the banker and debt manager to the central and state governments, the Reserve Bank has managed their market borrowing programs and facilitated development of the government securities market. Introduction of new instruments, strengthening market infrastructure and expanding the participant base, including retail investors, have ensured deepening of financial markets. India's monetary policy framework has evolved from monetary targeting to flexible inflation targeting, which was introduced in 2016. This was a major structural reform and has fostered price stability. RBI's monetary policy decisions are backed by its robust research and data analysis. The Reserve Bank is also responsible for the country's foreign exchange and reserves management. Its role has evolved over the years from being a regulator to a facilitator in an environment of market-determined exchange rates. A number of measures have been taken to simplify foreign exchange regulations for facilitating investment and trade. As the regulator and supervisor of a large part of the financial sector, the RBI has played a crucial role in promoting a sound and efficient financial system in the country. The regulatory and supervisory architecture of the financial system has been comprehensively restructured in the recent years. As a part of its commitment to financial inclusion, the Reserve Bank's policy on priority sector lending and many other measures has channelized credit to the needy sectors of the economy. This has given a strong fillip to financial inclusion. To To strengthen customer protection and grievance redress mechanisms, the scope of Banking Ombudsman Scheme has been gradually widened. The Reserve Bank Integrated Ombudsman Scheme embodies the One Nation, One Ombudsman approach. India now has state-of-the-art payment systems that are affordable, accessible, convenient, safe and secure. The country has acquired a leadership position in digital payments landscape. As a regulator of the payment system, the RBI has played a significant role on making this possible.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards,
उन्हें मैं बहुत सौभाग्यशाली मानता हूं। आज आप जो नीतियां बनाएंगे, जो काम करेंगे, उनसे आरबीआई के अगले दशक की दिशा तय होगी। ये दशक इस संस्थान को उसके शताब्दी वर्ष तक ले जाने वाला दशक है और ये दशक विकसित भारत की संकल्प यात्रा के लिए भी उतना ही अहम है। और इसके लिए जैसा आप लोगों का मंत्र है, आरबीआई को तेज ग्रोथ को सर्वोच्च प्राथमिकता देते हुए ट्रस्ट और स्टेबिलिटी पर भी उतना ही फोकस करना है। मैं आरबीआई को उसके लक्ष्यों और संकल्पों के लिए भी शुभकामनाएं देता हूं। साथियों, आप सभी अपनी फील्ड के एक्सपर्ट्स हैं। आप जानते हैं कि देश की अर्थव्यवस्था, हमारी जीडीपी काफी हद तक मॉनेटरी और फिस्कल पॉलिसीज के कोऑर्डिनेशन पर निर्भर करती है। मुझे याद है जब 2014 में रिजर्व बैंक के 80वें वर्ष के कार्यक्रम में आया था, तब हालात एकदम अलग थे। भारत का पूरा बैंकिंग सेक्टर समस्याओं और चुनौतियों से जूझ रहा था। एनपीए को लेकर, भारत के बैंकिंग सिस्टम की स्टेबिलिटी और उसके भविष्य को लेकर हर कोई आशंका से भरा हुआ था। हालात इतनी खराब थी कि पब्लिक सेक्टर बैंक्स देश की आर्थिक प्रगति को जरूरी गति नहीं दे पा रहे थे। हम सभी ने वहां से शुरुआत की और आज देखिए, आज भारत के बैंकिंग सिस्टम को दुनिया में एक स्ट्रांग और सस्टेनेबल सिस्टम माना जा रहा है। जो बैंकिंग सिस्टम कभी डूबने की कगार पर था, वो बैंकिंग सिस्टम अब प्रॉफिट में आ गया है और क्रेडिट में रिकॉर्ड वृद्धि दिखा रहा है। फ्रेंड्स, आप भी जानते हैं कि सिर्फ 10 साल में इतना बड़ा परिवर्तन आना आसान नहीं था। ये बदलाव इसलिए आया क्योंकि हमारी नीति, नियत और निर्णयों में स्पष्टता थी। ये बदलाव इसलिए आया क्योंकि हमारे प्रयासों में दृढ़ता थी, ईमानदारी थी। आज देश देख रहा है, जब नीयत सही होती है तो नीति सही होती है। जब नीति सही होती है तो निर्णय सही होते हैं, और जब निर्णय सही होते हैं तो नतीजे सही मिलते हैं। इन शॉर्ट, मैं यही कहना चाहता हूं, नीयत सही तो नतीजे सही। कैसे देश का बैंकिंग सिस्टम ट्रांसफॉर्म हुआ, ये अपने आप में एक स्टडी का विषय है। हमने कोई भी सिरा ऐसा नहीं था जिसे ऐसे ही छोड़ दिया हो। हमारी सरकार ने रिकॉग्निशन, रिजोल्यूशन और रिकैपिटलाइजेशन की रणनीति पर काम किया। पब्लिक सेक्टर बैंक के हालात सुधारने के लिए सरकार ने करीब 3.5 लाख करोड़ का कैपिटल इन्फ्यूजन किया और साथ ही गवर्नेंस संबंधी कई रिफॉर्म्स भी किए। अकेले इंसॉल्वेंसी एंड बैंक्रप्सी कोड की नई व्यवस्था से ही करीब 3.25 लाख करोड़ के लोन्स रिजॉल्व हुए और एक आंकड़ा देशवासियों को जरूर जानना जरूरी है। 27,000 से ज्यादा ऐसी एप्लीकेशंस जिसमें 9 लाख करोड़ रुपए से ज्यादा का अंडरलाइन डिफॉल्ट था, वो आईबीसी में एडमिशन से पहले ही रिजॉल्व हो गई। ये दिखाता है कि इस नई व्यवस्था का सामर्थ्य कितना ज्यादा है। बैंकों का जो ग्रॉस एनपीए 2018 में 11.25% के आसपास था, वो सितंबर 2023 आते आते 3% से भी कम हो गया। आज ट्विन बैलेंस शीट की समस्या अतीत का हिस्सा हो चुकी है। आज बैंक की क्रेडिट ग्रोथ 15% तक हो गई है और मैं इन सभी उपलब्धियों में आरबीआई की सहभागीदारी और प्रयासों की भी बहुत बड़ी भूमिका रही है और वो बधाई के पात्र हैं। साथियों, आरबीआई जैसे संस्थान के बारे में चर्चा अक्सर फाइनेंशियल डेफिनेशन और कठिन टर्मिनोलॉजीज तक ही सीमित रह जाती है। आपका कार्य जितना जटिल है उसमें यह स्वाभाविक भी है, लेकिन आप जो काम करते हैं उससे देश के सामान्य मानव का जीवन सीधे तौर पर प्रभावित होता है। बीते 10 वर्षों में हमने सेंट्रल बैंक, बैंकिंग सिस्टम और अंतिम पायदान पर खड़े व्यक्ति के बीच इस कनेक्ट को हाईलाइट किया है। गरीबों का फाइनेंशियल इंक्लूजन आज इसका बहुत बड़ा उदाहरण है। आज देश में 52 करोड़ जनधन खाते हैं। इनमें भी 55% से ज्यादा खाते महिलाओं के नाम पर है। इसी फाइनेंशियल इंक्लूजन का प्रभाव आप एग्रीकल्चर और फिशरीज जैसे सेक्टर्स में भी देख सकते हैं। आज 7 करोड़ से ज्यादा फार्मर्स, फिशरमैन और पशुपालक के पास किसान क्रेडिट कार्ड्स हैं। इससे हमारी रूरल इकोनॉमी को एक बहुत बड़ा पुश मिला है। कोऑपरेटिव सेक्टर को भी पिछले 10 वर्षों में बड़ा बूस्ट मिला है। सहकारिता में कोऑपरेटिव बैंक की एक बहुत बड़ी भूमिका होती है और ये रिजर्व बैंक के रेगुलेशन और सुपरविजन का एक महत्वपूर्ण क्षेत्र भी है। यूपीआई आज एक ग्लोबली रिकॉग्नाइज्ड प्लेटफॉर्म बन चुका है। इस पर हर महीने 1200 करोड़ से ज्यादा ट्रांजैक्शन हो रहे हैं। अभी आप लोग सेंट्रल बैंक डिजिटल करेंसी पर भी काम कर रहे हैं, यानी पिछले 10 वर्षों में हुए ट्रांसफॉर्मेशन की एक तस्वीर ये भी है। एक दशक के भीतर ही हम पूरी तरह से एक नई बैंकिंग व्यवस्था, एक नई अर्थव्यवस्था और नए करेंसी एक्सपीरियंस में प्रवेश कर चुके हैं। और जैसा मैंने पहले कहा है, पिछले 10 साल में जो हुआ वो तो सिर्फ ट्रेलर है। अभी तो बहुत कुछ करना है। अभी तो हमें देश को बहुत आगे लेकर जाना है। साथियों, बहुत जरूरी है कि हमारे पास अगले 10 साल के लक्ष्य बिल्कुल स्पष्ट हो। हमें मिलकर अगले 10 साल में डिजिटल ट्रांजैक्शन की संभावनाओं को विस्तार देना होगा। हमें कैशलेस इकोनॉमी से आ रहे इन बदलावों पर नजर भी रखनी होगी। हमें फाइनेंशियल इंक्लूजन और एम्पावरिंग एफर्ट्स को भी और बेहतर करना होगा। साथियों, इतनी बड़ी जनसंख्या की बैंकिंग नीड्स भी अलग अलग हो सकती है। कई लोग फिजिकल ब्रांच मॉडल को पसंद करते हैं, कई लोगों को डिजिटल डिलीवरी पसंद होती है। देश को ऐसी नीतियां बनाने की जरूरत है जिससे ईज ऑफ डूइंग बैंकिंग बेहतर हो और सभी को उनकी जरूरत के अनुसार क्रेडिट एक्सेस मिल सके। डीपीआई के क्षेत्र में भारत को अग्रणी बनाने के लिए हमें आर्टिफिशियल इंटेलिजेंस, मशीन लर्निंग की निरंतर मदद लेनी चाहिए। भारत की प्रगति तेज गति से हो, इंक्लूसिव हो, सस्टेनेबल हो, इसके लिए रिजर्व बैंक को लगातार कदम उठाते रहने होंगे। एक रेगुलेटर के तौर पर आरबीआई ने बैंकिंग सेक्टर में रूल बेस्ड डिसिप्लिन और फाइनेंशियली प्रूडेंशियल प्रैक्टिसेस को सुनिश्चित कराया है। लेकिन इसके साथ ही ये भी आवश्यक है कि आरबीआई विभिन्न सेक्टर्स की भविष्य की जरूरतों का आकलन करते हुए अभी से तैयारी करे, बैंकों को प्रोत्साहित करे, प्रोएक्टिव कदम उठाए। मैं आपको विश्वास दिलाता हूं कि सरकार आपके साथ है। आपको याद होगा 10 साल पहले डबल डिजिट की महंगाई से निपटने का रिफ्लेक्शन तब की फाइनेंशियल पॉलिसीज में नहीं दिखता था। इससे निपटने के लिए हमारी सरकार ने रिजर्व बैंक ऑफ इंडिया को इन्फ्लेशन टारगेटिंग का अधिकार दिया। मॉनेटरी पॉलिसी कमेटी ने इस मैंडेट पर बहुत अच्छे ढंग से काम भी किया। साथ ही साथ सरकार ने एक्टिव प्राइस मॉनिटरिंग और फिस्कल कंसोलिडेशन, इसके भी कदम उठाए। इसलिए कोरोना संकट हो, अलग अलग देशों में युद्ध की स्थिति हो, तनाव हो, भारत में इन्फ्लेशन मॉडरेट लेवल पर ही रही। साथियों, जिस देश की प्रायोरिटी स्पष्ट हो उसे प्रोग्रेस करने से कोई नहीं रोक सकता। हमने कोरोना के दौरान फाइनेंशियल प्रूडेंस की चिंता भी की और सामान्य नागरिक के जीवन को भी सर्वोच्च प्राथमिकता दी। यही वजह है कि भारत का गरीब, भारत का मिडिल क्लास उस आपदा से उबरकर अब अर्थव्यवस्था को गति दे रहा है। दुनिया के बड़े बड़े देश जहां अभी तक उस झटके से उबरने की कोशिश कर रहे हैं, वहीं इंडियन इकोनॉमी नए रिकॉर्ड बना रही है। भारत की सफलता को आरबीआई वैश्विक स्तर पर ले जा सकता है। इन्फ्लेशन कंट्रोल और ग्रोथ में एक बैलेंस बनाना किसी भी डेवलपिंग कंट्री की बहुत यूनिक जरूरत होती है। इससे निपटने के लिए कौन कौन से मॉनेटरी टूल्स हो सकते हैं, इसके बारे में सोचना बहुत आवश्यक है। आरबीआई इसके लिए एक मॉडल बनकर ग्लोबल लीडरशिप की भूमिका निभा सकता है। और ये बात मैं 10 साल के अनुभव के बाद कहता हूं, और ये बात दुनिया को निकट से जानने समझने के बाद कह रहा हूं। और इससे पूरे ग्लोबल साउथ को बहुत बड़ी मदद मिल सकती है। फ्रेंड्स, अगले 10 साल के टारगेट तो तय करते हुए हमें एक बात और ध्यान रखनी है, वो है भारत के युवाओं की एस्पिरेशंस। भारत आज दुनिया के सबसे युवा देशों में से एक है। इस युवा एस्पिरेशंस को पूरा करने में आरबीआई का अहम रोल है। बीते 10 साल में सरकार की पॉलिसीज की वजह से नए नए सेक्टर्स बने हैं। इन सेक्टर्स में देश के युवाओं को नए अवसर मिल रहे हैं। आप देखिए, आज ग्रीन एनर्जी जैसे उभरते हुए क्षेत्रों का विस्तार हो रहा है। सरकार सोलर एनर्जी और ग्रीन हाइड्रोजन जैसे सेक्टर्स को प्रमोट कर रही है। आज देश में इथेनॉल ब्लेंडिंग को लगातार बढ़ाया गया है। डिजिटल टेक्नोलॉजी में आज भारत एक प्राइम प्लेयर बनकर उभरा है। हमने स्वदेशी 5G टेक्नोलॉजी पर काम किया है। डिफेंस सेक्टर हम बड़े एक्सपोर्टर की भूमिका में आ रहे हैं। एमएसएमई पूरी भारतीय अर्थव्यवस्था और मैन्युफैक्चरिंग सेक्टर की बैकबोन जैसे हैं। ऐसे सारे सेक्टर्स में अलग अलग तरीके के कर्ज की जरूरत होती है। कोरोना के समय हमने एमएसएमई सेक्टर के लिए जो क्रेडिट गारंटी स्कीम बनाई, उसने इस सेक्टर को बहुत बड़ी शक्ति दी थी। रिजर्व बैंक को भी आगे आउट ऑफ द बॉक्स पॉलिसीज के बारे में सोचना होगा। और मैंने देखा है हमारे शक्तिकांत जी आउट ऑफ बॉक्स सोचने में माहिर है। और मुझे खुशी है कि सबसे ज्यादा तालियां इस बात पर पड़ी। विशेषकर नए सेक्टर्स में हमारे युवाओं को पर्याप्त क्रेडिट अवेलेबिलिटी मिले, ये सुनिश्चित किया जाना बहुत जरूरी है। साथियों, 21वीं सदी में इनोवेशन का बहुत महत्व रहने वाला है। सरकार इनोवेशन पर रिकॉर्ड इन्वेस्ट कर रही है। आपने देखा है अभी अभी हमने जो इंटरिम बजट दिया उसमें इनोवेशन के लिए 1,00,000 करोड़ रुपए का रिसर्च फंड भी बनाया है। कटिंग एज टेक्नोलॉजी पर जो प्रपोजल आएंगे, जो लोग इस क्षेत्र में काम करना चाहते हैं, हम उनके लिए कैसे प्रिपेयर हो, ये सोचना बहुत आवश्यक है। और आरबीआई को अभी से सोचना चाहिए कि वो कैसे उनकी मदद करेगा। हमें ऐसे लोग पहचानने होंगे, हमें ऐसी टीम्स बनानी होगी जो परंपरागत कारोबार हैं, जो आने वाले विषय हैं, हमें उन्हें लेकर एक्सपर्टीज डेवलप करनी चाहिए। इसी तरह स्पेस सेक्टर ओपन हो रहा है, इसमें नए नए स्टार्टअप्स आ रहे हैं, तो उनको क्रेडिट के लिए किस तरह का सपोर्ट चाहिए, ये हमें देखना होगा। इसी तरह भारत में एक सबसे बड़ा क्षेत्र नया पूरी ताकत के साथ आ रहा है, वो है टूरिज्म सेक्टर। टूरिज्म सेक्टर भी बढ़ रहा है और पूरी दुनिया भारत आना चाहती है, भारत देखना चाहती है, भारत समझना चाहती है। अभी कहीं मैंने पढ़ा था, जो ये टूरिज्म के एक्सपर्ट्स होते हैं उनका कहा है कि आने वाले वर्षों में रिलीजियस टूरिज्म में दुनिया का सबसे बड़ा कैपिटल अयोध्या बनने वाला है। हमें देखना होगा कि इस सेक्टर को फाइनेंशियल सपोर्ट करने के लिए हमारी क्या तैयारी है। जो देश में नए नए सेक्टर्स बन रहे हैं, हमें उनमें अभी से एक्सपर्टीज डेवलप करनी चाहिए और उनको हम कैसे सपोर्ट करेंगे, इस पर भी पहले से मंथन होना चाहिए। अभी 100 दिन मैं चुनाव में बिजी हूं, तो आपके पास भरपूर समय है, आप सोच के रखिए, क्योंकि शपथ लेने के क्योंकि शपथ लेने के दूसरे दिन ही धमाधम काम आने वाला है। साथियों, हम लोगों ने फाइनेंशियल इंक्लूजन पर बहुत काम किया है, डिजिटल पेमेंट पर बहुत काम किया है। इससे हमारे छोटे बिजनेस की, रेहड़ी पटरी वालों की फाइनेंशियल कैपेसिटी अब ट्रांसपेरेंटली दिखाई देने लगी है। अब इस जानकारी का उपयोग करते हुए हमें उन्हें फाइनेंशियल एम्पावर करना है। फ्रेंड्स, हमें मिलकर अगले 10 वर्षों में एक और बड़ा काम करना है। हमें भारत की आर्थिक आत्मनिर्भरता को बढ़ाना है। हमें कोशिश करनी है कि हमारी इकोनॉमी दुनिया के संकटों से कम प्रभावित हो। आज भारत ग्लोबल जीडीपी ग्रोथ में 15% के साथ ग्लोबल ग्रोथ का इंजन बन रहा है। इन स्थितियों में ये प्रयास होना चाहिए कि हमारा रुपया पूरी दुनिया में ज्यादा एक्सेसिबल भी हो, एक्सेप्टेबल भी हो। एक और ट्रेंड जो बीते कुछ वर्षों में पूरी दुनिया में देखने को मिला है, वो है बहुत ज्यादा आर्थिक विस्तार और बढ़ता हुआ कर्ज। कई देशों का प्राइवेट सेक्टर डेब्ट तो उनकी जीडीपी के 2 गुने तक पहुंच गया है। कई देशों का डेट लेवल उस देश के साथ साथ पूरी दुनिया की अर्थव्यवस्था को प्रभावित करता है। रिजर्व बैंक को इस पर भी एक स्टडी करनी चाहिए। भारत की ग्रोथ के जितने प्रॉस्पेक्ट्स और पोटेंशियल है उसको ध्यान में रखते हुए क्रेडिट की कितनी उपलब्धता होनी चाहिए और उसको कैसे सस्टेनेबल तरीके से मैनेज किया जाना चाहिए, इसे आधुनिक परिप्रेक्ष्य में तय किया जाना बहुत आवश्यक है। साथियों, देश के लिए जरूरी प्रोजेक्ट्स को फंडिंग देने के लिए हमारी बैंकिंग इंडस्ट्री को उसके आगे बढ़ना भी उतना ही जरूरी होगा। और इस आवश्यकता के बीच आज कई मोर्चों पर चुनौतियां भी है। एआई और ब्लॉकचेन जैसी नई तकनीकों ने बैंकिंग के तरीकों बदला है, पूरा तरीका बदल गया। बढ़ती डिजिटल बैंकिंग की व्यवस्था में साइबर सिक्योरिटी की भूमिका बहुत अहम हो गई है। फिनटेक में होने वाले नए इनोवेशंस बैंकिंग के नए तरीके बनाने जा रहे हैं। ऐसी परिस्थितियों में देश के बैंकिंग सेक्टर में, उसके स्ट्रक्चर में क्या बदलाव जरूरी है, इस पर हमें सोचना होगा। इसमें हमें नए फाइनेंसिंग, ऑपरेटिंग एंड बिजनेस मॉडल्स की आवश्यकता हो सकती है। ग्लोबल चैंपियंस की क्रेडिट जरूरतों से लेकर रेहड़ी पटरी वालों तक की जरूरत को, कटिंग एज सेक्टर से लेकर ट्रेडिशनल सेक्टर्स तक की जरूरतों को हम पूरा कर सके, ये विकसित भारत के लिए बहुत जरूरी है। विकसित भारत के बैंकिंग विजन के इस पूरे अध्ययन के लिए रिजर्व बैंक बहुत उपयुक्त संस्था है। आपके ये प्रयास 2047 के विकसित भारत के निर्माण के लिए बहुत अहम होंगे। एक बार फिर आप सबको मेरी बहुत बहुत शुभकामनाएं। धन्यवाद।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trip.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and have been the flavor of the season. But before that, at the moment, let's take a look at the markets very quickly, and we are looking at advances. In fact, the Nifty has hit a new life high on an intraday basis. It's come off its intraday high, but we are still looking at gains of around 0.7% and continues to maintain that through and has been through the course of the first half of this trading session. Well, moving on to the Bank Nifty. Bank Nifty has also been up and about. It's in fact up around 0.9%. No prizes for guessing then that a lot of strength in the Nifty is on account of some of the banks. Now, this is as far as your overall picture is concerned. Of course, we're looking at HDFC Bank contributing substantially to the up move there. And L&T, along with something like a Tata Steel, as well as GSW Steel, also up and about in trade. Well, we do have a whole host of these counters which are in fact advancing, and it's turning out to be a good start to this trading week as well as this financial year. And well, we'll continue to give you an update on this, but even in terms of the broader markets, we are seeing gains coming through. So when it comes to the mid-cap index, that's up around 1.4% as we speak, and the small cap index is around 2.3%. So a lot of gains coming in the broader markets, a lot of contribution coming in, and it seems like the broader market indices have also turned for the better on the higher end. And even in terms of what's really cooking and buzzing, as far as the broader markets go, well, we do have substantial gains in names like PNB Housing Finance, which is up and about. We have Prestige Estates, which is also gaining. PNB Housing Finance, of course, is up 13%. Prestige Estates is up around 6.5%. And of course, besides that, we also have a whole host of other auto counters which will be in focus because of, well, their volumes numbers coming through. Plenty to talk about as far as the show is concerned. And of course, we'll get you an update on some of those auto numbers come in as well. But on that note, let's take a look at some of the subjects that we're going to talk about in our show today. Of course, we're going to take up Prestige Estates. We're also going to talk about the auto sector. We're also going to address the gas ceiling in terms of prices, where we may have some sort of an impact in Reliance Industries and ONGC. Adani Enterprises is the other one which is in focus today, and several others. But on that note, let's get in our expert for today. We have Asta Jain of Haim Securities, who is joining us on the show right now. Asta, good afternoon. Thank you so much for joining in. Asta, before I come to you, let me take up the first topic that we wanted to address, and that's Prestige Estates. I'm going to get in my colleague.
I'm not able to hear voice.
Well, okay, Asta, we'll get back to you on that one. And while I have my team speak to Asta about that aspect, let's get in Anushi to talk to us about what we make of Prestige in the latest updates. Anushi?
Right, Agam. So if you have to look at Prestige Estate, it is in focus after Abu Dhabi Investment Authority and Kotak AIF has signed a deal with Prestige Estates for about 2,000 crore over a year. Now, with this, they are going to be developing projects across 4 cities, that is Bengaluru, Mumbai, Goa and NCR region, which is in line with Prestige expansion plans in different cities. Now, with this, the gross development value of these projects culminates to about 18,000 crore of GDV value. Following this news, the stock did see about a 6% surge in today's trade. But in fact, if you have to look at the other aspect also, the stock has remained in focus this month as well, with the recent acquisition of land in the NCR region of up to 62.5 acres in the over year for a consideration of about 468 crore and a GDV value of about 10,000 crore. So a lot of expansion plans in different regions apart from the company's core focus, that is in the southern region. Now this, if you have to look at the other aspects prospects of the companies as well. The pre-sales and the collections has remained on a stronger side for the company, seeing about a 80% and a 20% growth respectively in the 9-month FY24 period. While the stock performance in the 1-month return, the stock has seen about a 4% gain, while in the 1 year, the stock has surged about more than 2 times now. Under the analyst recommendation for the company, the buy call has the more ratings over here, with about 15 having a buy rating, 1 having a hold rating, and 3 having a sell rating. So this is all that has been happening in Prestige Estates, and it is in focus today.
Okay, well, Anushi, thank you for getting us those updates on Prestige Estates. Asta, good afternoon. Thanks for joining in. How are you viewing the latest updates around this particular company? And if you have coverage on Prestige Estates, what's your stance?
Hi, good afternoon. So talking about Prestige Estate, definitely their pre-sales were higher. In fact, in the quarter third of FY24 also, it was higher by 111% as compared to the last year. Because in quarter third, they have shown the pre-sales figures of around 5,326 CR. So, and this is mainly driven by two of their projects, which is Prestige City and the Park Grovers. So I think all these projects, and they have a strong launch pipeline also. Apart from their residential projects are also working well. So I think all these things are really leading to a strong figure going ahead also, and that is why we have seen such sort of news on the counter. So I think this stock is still poised for another strong rally, and we are keeping our stance of hold as well as buy on the dips on the stock with a price target of 1400 to 1440 at the current levels.
Okay. All right, so that's the view coming in on Prestige Estates. Let's move on and talk about the auto sector. Of course, it's that time of the month where we start looking at volumes for the month gone by, and we already have a handful of them coming in, M&M and Escorts to be precise. Let's get in Puneet to give us an idea about how sales have in fact been for them. Puneet.
Yeah, hi Agam, thanks for that. And for M&M, let's start with M&M first. And the expectations have not been met as per analyst. Now, the total sales are up 4% year on year, which is roughly 11 to 12% below expectations. If you break down for M&M specifically, the passenger vehicle sales are up 13% year on year, which is below expectation of roughly 20% growth, which was expected by analysts. For its three-wheeler sales, the expectation, the sales have come down by 7%. While analysts are expected them to report a 7% growth in sales. So this is a clear divergence for the three-wheelers. The other segment which is a key for M&M is the tractor sales, where the sales have fallen 26% on a year-on-year basis, which is way below analyst expectation of roughly a 16% fall for M&M. Finally, the exports also are down 26% on a year-on-year basis. Coming to Escorts, they are on a total basis of roughly 8,500 units sold, is flat and very much in line with expectation of these analysts. On a domestic basis, the sales are around 17%. The sales are around 16% with an analyst expectation of roughly 17% fall. And for exports specifically, this is a small portion of the total sales, but this has seen a fall of roughly 24% on a year-on-year basis versus analyst expectation of roughly 14%. Back to you.
All right, Puneet, thank you for getting us those latest in terms of the trends that we can see as far as auto sales go. But of course, these are all both very agri-based companies, which means that a lot of them have to do with tractor sales. But Asa, your view on Escorts and M&M at the moment, how are you taking things on these two?
So talking about M&M, definitely what we were expecting also, it has come below that because we were expecting 16% rise in the sales on year-on-year basis. So I think definitely it has not come on that lines. And what we were of the view that definitely the tractor demand will show some sort of slowdown because the companies have seen the slowdown in the demand for the tractor sales. But for M&M, our view is that they can get a good boost due to the new launches. But I think that is also not helping. So now impending election are also keeping the demand for the commercial vehicle lower. This is what we believe, and I think it might be a factor that what we are seeing right now. But still, we think M&M is a long-term story, so we remain a hold on the stock. Our price target is somewhere around 2,100 for the medium-term to long-term perspective.
Okay, all right, that's your view on M&M and Escorts. Let's move on and talk about gas prices. which I believe have been taken a little bit of a cap coming through. Let's get in Mihika to understand this a little better. Mihika.
Yes, so this is the gas price ceiling that has been revised by the Petroleum Planning and Analysis Cell. So the gas price ceiling was previously $9.96 per million metric British thermal unit, which has now been cut 1% to $9.87 per MMBTU. But this is only for gas discoveries in deep water, ultra deep water and high pressure, high temperature areas. Now the ceiling is on the gross calorific value basis, and the ceiling is applicable for the period of from April 1st, which is today, to September 30th of 2024, which is for the next 6 months. Now, ONGC, Oil India, Vedanta and Reliance Industries are the ones that do get impacted, since they do gas discoveries in deep water areas. Now, low price ceiling means a smaller profit margin per unit of gas sold. And in theory, a lower price ceiling could also lead to a decrease in the final gas prices, but that is something that we will look into further. As far as the domestic natural gas prices for the month of April is concerned, PPSA has released the price to be at $8.38 per MMBTU. This is a blended domestic natural gas price, and it's up 1% month on month. And for gas produced from by ONGC and Oil India from their nomination fields, the administered price mechanism or the APM price has been maintained and kept at the same rate of $6.5 per MMBTU.
All right, thanks Mihika for getting us that one on as far as gas prices go. Asta, your view on this one, as well as how would you treat something like a Reliance Industries or an ONGC at this point based on the latest updates that we have?
So I think those who are into the deep water discoveries might be their profit margin will get reduced, because the profit margin depend on the gas sold. So here reduction in the gas prices will really reduce their profit margin, but I think the impact will not to that extent. And going ahead, we can see again the stronger recoveries from these counters. So I mean, apart from other companies, what is looking good to us right now is ONGC. So between these two, Reliance and ONGC, we have better. We have a better view on the ONGC, and we are recommending hold on this counter as well as buy on the dips with a price target of somewhere around 290 to 300 at the current levels.
Okay. And well, from there on, let's talk about two companies which have been on the move and how. Well, I'm talking about the cranes sector specifically in this case. One of them is Action Construction, which is currently trading at a life high. And when about a few weeks ago, when the shake-off did come through, it had gone all the way below the mark of, well, 1,100 rupees per share. And it is now currently trading at a life high of about 1,550 odd rupees per share. On a 6-month basis, it's up around 125%, and 12-month basis, well, it's been a multi-bagger. Let's pull up the 12-month chart as well. There you have it. It's about 282% returns is what Action Construction has given. The other company I want to talk about is Sanghvi Movers. Action Construction, of course, manufactures cranes. Sanghvi Movers is one which rents cranes out. And this one has also been on a tear of sorts. This one has also moved up by as much as 279% over the last 12 months, and it continues to gain on momentum. Asa, what's your view as far as both Action Construction and Sanghvi Mover, if you track either of them, are concerned? I reckon that at some point in time, at least at the moment, we are looking at valuations which are factoring in all the positives. Is that your view as well?
Yes, our valuations are definitely there. And one more thing, if I talk about particularly Action Construction Equipment, this is a leader in the mobile cranes. And what we are seeing that due to this, capex cycle and everything, the company is getting a real strong demand. And there is more for this company to show in the financial performance going ahead, because this company is a way old old company. It set at around 1995. So it is established in 1995, and it is an old company into the basically mobile cranes, etc. So I think due to the strong demand from the capex cycle, which is happening across the economy, is helping the company in showing strong performance. Along with that, due to the strong demand in the infrastructure space, also this company will going to show strong performance. So, and in fact, the Q3 performance was also very strong. So looking after all these and with the valuations at a comfortable level, we are recommending buy on this counter. Although our price target is not high because we really want to see how the results pan out for Q4 FY24. But at present moment of a time, we are giving the price target of 1700 to this counter.
Okay, all right, that's the view on Action Construction. Asta, on that note, going to take a moment to thank you for joining us and taking us through your views on the stocks and themes that we've discussed. Well, on that note, it's also time to take a short break. But on the other side, we get to the management of RR Cable. Well, stay tuned in. We'll be back in just a bit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
RR Cable is a company in focus because amongst everything else that it has done in this last existence of its journey and become the fifth largest company in the consumer electrical industry, one of the largest companies, of course, but the fifth with the share that it has in the domestic branded wires and cables industry, about a 5% market share. The belief that certain brokerages and analysts have is that it is now at a cusp of maybe an inflection point when it comes to operational metrics and maybe thereby earnings as well. And therefore, to talk about this, we have with us Mr. Sri Gopal Kabra. He's the managing director of the company, joining us on the show. Mr. Kabra, good having you. Thanks for taking the time out. This is Neeraj here. And I wonder if you believe that the optimism around business because of the India domestic growth story, as well as select exports that you do to Europe and others, continues unabated in FY25 with uptick in margins which might help your earnings do better. How are you thinking about this?
See, I think so. The growth demand for us as a company in India and export both is very good because see, we as a company, we create our brand as a trusted brand. We never compromise on quality, and we are the only company in the world which got 37 international approval, and in domestic also we are 100% rich company, Cable. And kind of demand in market in terms of infra, in terms of real estate, in terms of renewable, the entire change of shifting from fossil fuel to green journey, there's going to be a good demand for sector also because we believe that the sector will grow around 13-14%. And we as a company, we are committed for that we always grow higher than the market size. It's about 23 years track record. So we are hoping that we'll grow by 20%.
So, sir, are you saying that this is the kind of growth rate anticipated for the next few years? I mean, 3 years, 5-year period? And would you believe that therefore you will grow at that 20-25%?
Yeah, we believe because I tell you reason, there's still, we are very small in cable. Basically, see, our journey is different. We are from wire to cable to FMEG. So there is a lot of scopes are there and we are adding our capacity and we'll be adding more and more product. Right now in cable also in a small sector we are there. So we have a lot of scope to grow.
Got it. So, sir, the combined growth, consolidated growth of wires plus cables for as a FMEG, combined would be northwards of 20%, you reckon, as a growth number for the next few years?
Yes, sir.
Okay. And does this fast-moving electrical goods segment have a large role to play in that? Because I think you've tasted early success. The street believes you'll do much better in times to come. You think it will be a key significant part in this growth journey?
No, significant part will be there, but in terms of our growth journey, also see today our 11% FMEG and 89% in wire and cable. So we believe that this can go up to 84-16 or 83-17 or 85-15. So that's why, because the base is small in FMEG, the growth will be much higher than what is in wire and cable.
Got it. Mr. Kabra, it's enthusing to hear somebody talking about these demand trends in the fashion that you are. Is this an account of the kind of global setups that are happening on the industry side, plus the real estate sector growth that we're seeing on the domestic side, which is leading you to do this? What are the factors here?
So there are 5-6 factors. One is in India, you look into the capex cycle is on peak. So a lot of expansion are coming in domestic industry. Government is spending a lot of money on infra, so there is requirement there. And recently, which government has announced that the overhead line, which cable will go, they want to go into underground. So this is going to be another requirement of almost 3,30,000 crores of cable. They are thinking that they will finish in 5 years, but then even they complete in 10 years or 12 years. So this is a new sector which was not there in pipeline business. So this is a new area there. And a lot of new sector like data center, for example, we believe that there will be investment of $100 billion in data center. And data center, because they need a power factor very high, very safety factor. So there will be good demand in data center. So data center, if you look into before 5 years, 10 years, so far data center investment just came only of $10 billion. So in the next 4 or 5 years, there will be another $90 billion investment in data center. So like that, many malls are coming, airports are coming, like government has announced the almost 550 railway station they are going to develop. So, and then investment to solar, renewable energy. So renewable energy, we are very positive. Currently, we are not supplying, we supply zero material in India. We only export solar cable because in India, people did not were using the global standard cable. Now, we are quite fortunate with my hard effort. The government of India has made mandatory BS standard, and BS standard event is same, which is applicable worldwide. So we have the technology, we got the quality. So now people will shift from the ordinary regular wire to original solar wire. So this is the new area for us, and this will grow. And there are a lot of investment in solar itself coming in India.
Okay. So would this therefore mean, sir, that you not only will see growth in demand, but also better margin and higher price products? So both volume and value growth to come in for you?
Yeah, see, basically, we are hoping that every year our profit will increase, but that will not be increased like, see, we will be going up to 10.5 to 11% EBITDA in next 2 years. But more than that, if somebody is not playing with quality, they cannot make more profit. Otherwise, see, in industry, the profit is not because of the right way of working.
Okay.
Yeah.
But if you are working in the right fashion, but more importantly, if the 9-month FY24 EBITDA margin was at 7.2%, and if you're telling Mr. Kabra that you will probably go to 10-11%, then that's an automatic delta to your bottom line.
No, see, basically this year also our profit is improved by 1.3 pips this year in the first 9 months. So this will improve. Reason behind that because my cable scale is very small. So my changeover of production is much more faster. So my cost of manufacturing is also high. Plus, since we got a small place, so my stock already has got in the market. So I don't get that price. Once my scale will increase, then my production cost will also come down. And since because of availability of the cable in the market, I'll get a more price. So these are 2-3 factors are there. And we are very much focused on low smooth zero erosion wire, which is really required for safety. Unfortunately, in India, people are not understanding, but in global market demand is very high. Here, the moment the government makes some mandatory law, they are changing on quality standard. They got it QC also in market for green building. Also, they are specifying the good quality wire. Moment this quality things are improved, people's mind or the contractor or consultant developer or infra company, moment it's come to safety, the day the safety factor will increase, there will be good margin for us and demand will be there.
No, I buy that argument, sir. My larger question is that if indeed, let's assume that everybody accepts that you will probably grow at that 20% mark for the next 3-5 years, or hopefully even longer. My larger question is that if indeed margins expand from 7.5 to let's say 10.5, 11, then the delta in earnings will be much higher than the jump in revenue, right? You've seen that in FY24. Yeah. It'll probably continue in 25 and 26 as well.
Yeah, definitely.
Got it. Just one more question. This whole trend of outsourced manufacturing. Now, you do work under your brand, but do you believe, I mean, would you do that? Are you already doing that, which is third-party manufactured, which is white labeled, but manufactured by you? And will that increase as well along with?
No. See, basically, we don't believe white labeling. And number two, our strategy is not China plus strategy. So we sell our product globally.
Right.
Very little quantity I do for one company because they are specialized, they have the monopoly. So they don't buy from any other else, and we don't supply particularly small quantity. But we believe as a company that we are created and we will create furthermore RR Kabel as a brand. So ultimately, when people want RR Kabel, they will come to us. And my entire export business into retail and distribution. That's the biggest plus point for us.
Yeah, I mean.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
You have a missed call.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles.
Old tax regime or new tax regime? The new tax regime is default, so does that mean I won't have a choice? And if it gets chosen for me, how do I shift to the old tax regime? Which deductions should I claim? And how should I plan my taxes if I'm a senior citizen? and I have to manage my returns as well and advance taxes. Hello and welcome to this special broadcast. It's the start of a new financial year, and frankly, it's the best time to get your tax planning out the way because it means lesser headaches down the road. And this is something that a lot of people find a little challenging. What we're going to do on this broadcast is to break down some of those trickier issues so that you can make your decisions with confidence. I'm Alex Matthew. I didn't mention that earlier. Now, let's introduce our guests for the day. We've got Arnav Pandya, founder of Money Edu School, and Arvind Rao, founder of Arvind Rao and Associates. And they're going to answer all of the questions that I have mentioned and a few that I have not yet mentioned. Thank you so much, gentlemen, for taking the time. Now, I'm sure that a lot of people tuning in will be wondering at the start because the new tax regime is the default regime now, which means, as I understand it, that if you do not send an intimation to your employer, the person that pays your salary, then by default, the new tax regime gets chosen for you. Is that something to pay attention to at the start of the financial year? Arvind, I'll start with you.
Sure, definitely.
Arvind, I'll start with you.
Yeah, sure. So it is because I think the whole, now we have a year's history available because this is something which was introduced in the last year's budget, making the new regime as the default. So having been through that 1 year, what matters is an individual has to actually go back and check what is the quantum of deductions that they are planning to take from their salary income. If this amount is exceeding 3.5 lakhs, it's at that point where old regime is beneficial for them. So if one of our listeners here is falling in that bracket, and if they don't go and intimate their employer that they want to opt for the old regime, what it might result into is that the TDS that gets deducted per month from their salary will be slightly lower because the new regime will calculate the taxes. My bad. The new regime will calculate the taxes higher, and thereby the TDS deduction will be higher. Of course, when they file their returns, they can still opt for the old regime and claim this refund back. But Alex, my opinion is that it's always better to plan your cash flows better. So if you're able to declare your regime at the start of the year and get more salary in hand monthly, that's always better than trying to claim a refund at the end of the year.
Okay, Arnav, I'll come to you because that 3.5 lakh number is quite an important distinction. Is that something that your calculations are also pointing towards? And I would think the way that I had looked at it is that if you have one of two things, HRA, which is your house rent allowance, which allows you to claim a significant discount, or not discount, but a deduction, or Section 24, in which you're paying the interest on a home loan. And if that is a substantial amount to the extent of 2 lakh, invariably your deductions cross that 3.5 lakh mark. Is that something to bear in mind?
Yes, definitely. So, my calculations come in that same range. It's around 3.7 something.
Sure.
So, let's, for the simplification purposes, keep it in that range itself. So, if you look at the deductions which you claim, if you go by the normal Section 80C, Section 80D, plus the other deductions which are there, those won't come or won't go beyond 3 lakhs. Unless, as you mentioned, you either have a home loan where you are claiming the full 2 lakh deduction under Section 24, or you are claiming the house rent allowance, and that is significant. So the key part here becomes that which are the deductions that you are already claiming, and whether the figure goes high enough for you to actually make it beneficial to stay in the old tax regime. And so that becomes the key component of making the decision. And looking at the manner in which you are either spending or what your existing condition is, that itself will give you a very clear idea whether you should opt for the new tax regime or not. And as far as the salary is are concerned, what they need to do is that by default, since you are going into the new tax regime, if you want to actually ensure that you stay in the old tax regime, you to give the intimation. Now, you can still change that decision at a later age. Now, why am I saying this? Because as compared to businessmen or professionals, once they have shifted to the new tax regime, they can't come back. That is the main difference. The salary it can keep switching, but those who are having income from business or profession, they cannot do the reverse or come back again.
So let me clarify this. If you have been on the old tax regime for a period of time, and then in FY25, that is the financial year that starts today, if you shift to the new regime, you cannot change back. Is that what you're saying, Arnav?
Not for, I mean, the salary can switch back.
No, for professionals.
Yeah, for professionals, if you switched once, you cannot come back.
Okay, fair point. That was actually going to be one of the questions that I was going to ask. Now, one of the aspects that I think the government was intending with the introduction of this new tax regime was simplification. We have talked about a large pool of taxpayers that have this 3.5 lakh calculation, but now incomes are rising. This is India shining, India growing, all of those aspects, right? And you have a lot of people, particularly in a few sectors, that are earning significantly more than others. We're talking about 20 lakh plus, 25 lakh, 30 lakh even. For those people, if you have not a very substantial difference in terms of the net tax outgo, just for simplicity's sake, Arvind, is it more beneficial to choose the new tax regime?
So, I mean, I don't know. I want to go out on the leg, and I think this has been the matter of discussion since a couple of years, that at some point in time, which is unknown today for anyone and everyone, is how close are we to that point where the new regime will be the only regime that will exist? Because I think the intent of the government has been that they want to phase out all the kind of deductions that are available and keep it and compensate the taxpayers by giving them higher slabs up to which they don't pay. So if you are one of those taxpayers who wants to keep things simple, who doesn't want to engage in a lot of planning around investments or basing investment decisions purely to save tax, then new regime is a good step in that direction. The decision to go with the new regime is a good step, because specifically I say that budget 23, when they revamped the slabs, which you have been displaying on the screens for some time now, the higher tax slabs under new regime are really effective, and they help in substantial tax savings. So I would also say that those people who are joining the workforce or who have joined in the last 2 to 3 years, who have yet to start their investments or tax savings, for them this new regime is a boon as well, because no longer are they now wanting to carry some investments or some insurance baggage just for the sake of doing investments for the sake of tax savings. So for them, new regime is great. And like you mentioned, for people who are in the high tax brackets, unless they are able to have these deduction amounts, then new regime is good for them.
Let's talk about deductions then, gentlemen, and assuming that you are picking the old tax regime, what specifically, Arnav, do you bear in mind when you're choosing these deductions? Because they're something I think that people are fairly familiar with, have been over a period of time. And like Arvind was just pointing out, a lot of people choose to invest, for example, into the equity-linked savings scheme category. That is one of the most popular categories as a result of this. So what are the key points or salient points to bear in mind when you are claiming deductions?
The first thing that you need to take in mind is that what are the existing benefits that you already have? See, what happens for a lot of people is that they already have, say, investments or some contributions where they can get the deduction. So they do not need to invest additionally. For example, I'll give you the case of, say, a salaried person. the contribution to the employees' provident fund is allowed under Section 80C. So that has to be taken into consideration when you are doing your overall calculation. Similarly, people who have young children and who are paying school fees, the fees is also that allowed as a contribution under Section 80C. Similarly, there are lots of people who will have the PPF account running. So that contribution also counts. So all these places where you already have or are already contributing something, those you need to count while you are looking at what is either the additional amount that you need to plan for or not. Second is that in areas like, say, health insurance, you have to ensure that the structuring or rather the payments which are made are done properly, in the sense that, see, health insurance reduction under Section 80D allows you the benefit not only for yourself, but also for the premium that you pay for your spouse, plus your parents, for which there is an additional limit. So that needs to be taken into consideration, as a need for health insurance is paramount. You are going to have some kind of policy. So how are you structuring the payments? And where is the money going from? That becomes crucial for you to claim the deduction. And the other thing is that I would say that people should not go into areas which have, say, multiple year payments which come along with the investment. Why do I say that? Because it is highly unlikely that the old tax regime can continue for a long period of time. The way I look at it is that in the 2024 Lok Sabha elections, the greater the number of seats the NDA gets, the earlier the old tax regime will go.
Okay.
So you do not want to end up in a situation where you have a liability which keeps occurring year after year, and suddenly you find that it does not get the tax benefit for which you actually contributed. So that needs to be taken into consideration.
That's a fair point. But it is, not necessarily in the ambit of our conversation on a tax planning show. You are trying to read the political tea leaves to see where things are heading. Of course, you have to bear that in mind as well. Gentlemen, I do want to talk about advanced taxes, and I do want to talk about how to plan your return filing as well. And also capital gains and how to set off capital gains with capital losses. We will do all of that after this very quick break. Viewers, do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching this special show that is helping you to plan your taxes for the full year. We've broadly talked about the old tax regime and the new tax regime and what you need to bear in mind heading into the new financial year. But we haven't spoken about one particular category, which is the senior citizens. And I want to very quickly delve into what they should choose. And if you are a senior citizen, or in fact, if you're watching and you would like to help your parents deal with a situation, then this is something that you should bear in mind. Arvind, I'll come to you. You've looked at that 3.5 lakh number, but there are a little bit of, there's a bit of a difference in terms of the slabs in the new tax regime for senior citizens and in the old tax regime for super senior citizens as well. According to you, based on the math that you've looked at, what should these individuals bear in mind?
In fact, I think one of the best part or advantages about new regime is that it is now making life for senior and the super senior citizens very simple. And the reason I say this is because before this new regime got introduced, practically we have seen some senior citizens scampering to make that investment of 1.5 lakh every year purely because tax saving ke liye karna hai. So I think one of the biggest beneficiaries under this new regime are senior citizens, because obviously with the increase in the slabs and reduction of the rates as the slabs go higher, all this benefits which results in lower tax liability is now available to senior citizens who do not need to make investments purely for tax saving. And it goes without mentioning that most tax saving investments come with a lock-in, which ranges from 3 years to sometimes as long as 5 or 6 years. So getting their investments locked at an age where there is a lot of uncertainty regarding medical expenses and so on, the new regime actually gives a lot of flexibility to senior citizens to now have investments that they can better plan and divert to non-locked-in instruments, and at the same time not pay the cost of it by paying higher taxes, because the higher slabs in the new regime actually results in lower taxes for them.
Now, let's move on to another topic, which is advanced taxes. And I just want, Arnav, you to explain the rules that govern advanced taxes. And the reason we're talking about this now is because some people will have missed the bus, and they need to know about the penalties that they could be facing because they have missed the bus. So first, break that down for us, and what are the penalties if you do miss that bus?
So the rules for advanced tax are very simple, that you have to calculate or estimate the income which you are going to earn for the year. Then logically, the tax which arises on this income for the year, you need to pay that tax in installments throughout the year at various quarters, with the dates being 15 June, 15 September, 15 December, and 15th March. Now, the main question is that when do you have to pay the advance tax? Your advance tax liability arises when your tax which has to be paid exceeds 10,000. So, for example, say a person who's a salaried person, for them, for their salary income, they already have TDS taking place. So there will be no extra liability on this. But assume that they have some large investments on which they earn a significant amount of, say, dividends. Dividend is taxable. Now, again, on dividends, once the dividend crosses 5,000, there'll be a 10% TDS on it. But the difference here will arise because if they fall in that 30% tax bracket, the tax on the dividend in this case would be at 30%, but the TDS is only 20%. So that 20% is 10%. So the 20% differential which arises gives rise to a tax which is a shortfall. Now, once that requirement crosses 10,000, you have to pay advance tax. Otherwise, if you don't fulfill this requirement, what will happen is that under section 234, there are several subsections in there, and under at least a couple of them, you will have to start paying interest for each month that you have missed out on. So that calculation itself is complicated, but to just simplify it, if you don't pay the advance tax to the extent which you have to, then interest will start getting levied And roughly, I mean, you can look at it at 1% per month. So it can be a significant amount if the tax liability is large. So, for example, I mean, if say you have to pay 1 lakh as additional tax on additional income, which you have not done so through advance tax, then that not only that liability is there, but that interest keeps piling up. And this will happen till the time, say, next year, when you actually go to file your return and you pay the self-assessment tax, which is the balance.
Is it compounded?
No, it's not compounded, but that amount keeps climbing.
Sure.
So, in that sense,
it's better to clear it. It's better to clear it very quickly. Yes. So that's a point taken.
It's a monthly figure.
Yes. All right. So advanced tax. That's what you need to bear in mind. And while we're at it, we should also talk about what to do about capital gains, because ultimately that is a threshold. We put that up on the screen. That 10,000 rupee mark is when you qualify to pay advanced taxes. So Arvind, there are certain rules that govern setting off of capital gains tax with losses that you make through the year, but not all gains can be set off against all losses, right?
That's correct. So minor correction here, it's not the tax on capital gains that can be set off. No. It is the gains per se.
Yes.
So, so basically you have either a long-term or a short-term gain and losses for each of them. So the way the tax laws work is long-term losses can be offset only against long-term gains, whereas your short-term losses can be offset against long-term losses, long-term gains as well as short-term gains.
I'm going to ask you to explain that again. Hold on. So maybe if you can give this with an example, because it's gone a little bit all over the place. So explain it with an example and help us understand what can be set off against what.
So, okay, let's say Alex has long-term gains of 50,000 and has short-term losses of around 20,000 during the year. Now, although they are under different categories, but Alex can offset this 20,000 loss against the gains of 50,000, which is there in the long term, and then pay tax at whatever is the applicable rate on these long-term gains. However, if it's the reverse case, wherein Alex has 50,000 of short-term gains and 20,000 of long-term capital losses, he cannot adjust this 20,000 against the 50,000 of short-term gains, which means he has to pay tax on the entire short-term capital gains of 50,000. So next question would be, what does he do with this losses of 20,000, which he has not been able to set off against any gains? He can carry this forward for to be set off against gains to be made in the future years. The maximum amount of years that Alex can carry forward this loss is a period of 8 years.
Answers the question perfectly. There's one more aspect that I wanted to delve into, which is for professionals, which incidentally not a group that we speak about very often. But there is what I was reading as section 44 ADA. Arnav, this one's for you, where you're talking about the presumptive taxation scheme, and income up to 75 lakhs is what you categorize in this. However, if your income or 5% of the receivables, as I understand it, are in cash, then that ceiling falls to 50 lakh. Can you explain the details of this and how to claim this?
See, the logic of this entire section is very simple. That professionals, for them, when you calculate tax, it's not just the receipts which matter, but it's the final profit which you make, which is receipts minus expenditure.
Okay.
Now, maintaining books of accounts, doing all the accounting work can become a bit tedious or rather time consuming. So the income tax has this provision whereby if you fall under this particular section and you qualify, then what you can do is you can take a flat 50% of the receipts as your expenditure and pay tax on the remaining one. So there are limits for which you qualify for this, because again what happens is that if you have a professional with very high income, then this clause is not applicable for you. The only thing here is that, again, if you want to qualify for this particular clause, you need to have receipts which are through the banking system. So you can't say that I, for example, got 40 lakhs as receipts and virtually say 90% of them are in cash and then I claim this benefit, because therefore then the income tax department cannot verify where your income is coming from and how you are generating this. So to prevent that, they have this 5% cash limit. The other point is also that, see, if you have an income which is higher than this particular limit, what you can, and you want to say claim a lower percentage of expense as your actual profits, then what you need to do is that you need to get the accounts audited, so that then there is the auditor's report and all is taken as proof of the fact that the figures that you have shown are correct. So in simple words, what happens is that this allows you to just take up a certain percentage of your income as profits, pay tax on it, and end the matter without having to keep all those vouchers records, though you need to keep some details in case there is an intimation from the income tax department.
Absolutely. Gentlemen, I think we've covered all of the bases, but what I will tell our viewers is that in case they have any questions, they can write to us and we'll try and get them answered over the course of the coming weeks. But thank you so much for joining in and for having this conversation with us. Viewers, that brings us to the end of this particular edition of the Tax Planning Show. Do stay tuned. Lots more coming up on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with.
Markets off highs after scaling record levels at opening. Sensex trades around the 74,000 mark, Nifty below the 22,500 mark.
It's a sea of green among sectors. Real estate jumps over 3%, while media and metals also see significant gains.
And Prestige Estates trades higher on the back of a pact with ADIA, which is Abu Dhabi Investment Authority, and Kotak AIF for residential projects.
Shares of Adani Total jumps over 4% in trade as the company starts production at India's largest bio-waste power generation plant. Hello and welcome. You're watching Market IQ. I'm your host Pallavi Nahata and I'm joined by Harsh Sehta. Hi Harsh, good to have you back.
Oh, thanks for that, Pallavi. Good afternoon.
Even though the markets are off the day's high, we're still performing incredibly well. Great note to be starting the financial year on, right?
Absolutely. Looks like absolutely no complaints with the way we started the financial year today. We're seeing good participation across markets, whether you're looking at the large caps as well as the broader markets, Pallavi. So clearly, it's a solid day of trade. But why don't you take us through what the Nifty 50 constituents are doing?
Yes, before we can go into the show further, let's have a quick look at where we currently are at. The Nifty 50 currently up by over 0.5%, the Sensex too. We continue to stay above the 22,450 mark, the Sensex above the 74,000 mark. But let's have a closer look at some of the sectors. Most of them continue to trade in the green. The Nifty Realty among the top gainers for the day. The index is up by about 4% in today's day of trade. But along with that, like I mentioned, most of the sectors continue to trade in the green. That includes metals, media, PSC, energy. It's only FMCG that's marginally in the red, but like I mentioned, even that too is fairly marginal. Like Harsh said, the broader markets too are performing incredibly well, which is also what makes today's day of trade a reassuring one. The Nifty Mid-Cap 150 is up by 1.5%, while the Nifty Small Cap 250 is up by over almost 2.5%. Let's also have a very quick look at some of the key constituents of the Nifty 50 and how they're performing. JSW Steel is actually leading the pack. The stock is up by over 5%. Tata Steel, Adani Ports, Divi's Lab all performing well. Tata Steel's up by almost 5% as well, while Adani Ports, Divi's Lab and L&T are up by almost about 2%. What's not doing particularly well is Titan. The stock is down by about 1.5%. Bharti Airtel also in the red in today's day of trade. The stock along with Nestle and Eicher is trading at, the stocks are trading in the red by about 1.5%. But before we can move on, Harsh, let's have a quick look. We've spoken about JSW Steel and how well the stock's been performing. This is partly on the back of an announcement by the company regarding successfully having commissioned its hot strip mill at its integrated steel plant at Vijayanagar. That's with a capacity of 5 million tons per annum and has made its first dispatch. The facility has capability of manufacturing plates, coils. It's equipped with features including digital reheating, so on. The stock continues to trade up by almost about 5%, leading gains in the Nifty 50. Another stock that's doing well in the broader market.
Pallavi, before we move there, if I can just interject, apologies for that. Let's also try and cover the metals and mining space as a whole, because they're doing very
today.
Yes, absolutely. Let's pull up the Nifty metal, because doing fairly well in trade today, the Nifty metal, and what you're therefore seeing is a 3+% increase, or rather that we've seen in the Nifty metal, at least in trade today. Look at the likes of a Hindustan Copper, look at the likes of a Tata Steel as well, doing very well in trade. Some positive data coming from China helping some of those metal stocks. We had PMI data from China coming in very close to that 51 mark. We've seen therefore the PMI actually expand. It was expected to come at around 50.1, Pallavi, but it's come in at almost 51, which is 50.8 odd.
And this is about 4 or 5 months of a not so great number, which makes it all the more impactful.
Yes, and that's what's really aiding some of those metal counters, which are doing fairly well in trade. Of course, the fact that raw material prices have come off with regard to iron ore is definitely another positive, which is probably aiding those stocks, but it's also largely the kind of traction that we are seeing from China that's aiding these stocks, Pallavi.
Yeah, another stock that's doing particularly well is PNB Housing. The stock's been performing particularly well in today's day of trade. Let's pull up that stock. It's up by over 13% currently. So continuously building up on its gains since the start of the session today. So this is after a brokerage report. Morgan Stanley has actually upgraded this stock. And I believe it's not the only one to have done so. We have seen quite a few brokerage reports which have upgraded the stock. The basis for that largely being the improving asset quality as reflected in the company's GNPA ratio. That's about 1.73% in the quarter ended December. The ratings also continue to factor the company's strong market position in the space, along with a well-diversified resource profile. Before MS, it was Care Ratings that had upgraded the stock, and Care Ratings noted the company's increasing focus on affordable housing, though that segment remains at a nascent stage. But going forward as well, Care Ratings said that the performance of the affordable portfolio remains a key rating monitorable. The rating strengths are partially offset by moderate but improving profitability profile of the company, but that is expected to see an uptick. That's according to Care Ratings.
Well, yes. So in fact, Care Ratings has revised their rating as well, Pallavi, from a AA, if I understand correctly, to a AA plus stable. So it was a AA positive, rather, Care AA positive, and they've upgraded to a Care AA stable. Of course, we'll have to wait and watch as to how this affects their cost of funds and therefore improves margins and profitability for the company. But obviously that's a positive. We'll stick with the financials. Let me also pull up something like a Can Bank. Not doing much in trade today as we speak, but nonetheless a step forward with regard to the listing of their subsidiary, which is Canara Robeco AMC. They're going to divest around 13% of that. Some amount of value unlocking that will be at play for Canara Bank on the back of that. Outside of that, let's pull up something like a Torrent Power, an RVNL, a HAL. Some of those buzzing on the back of course, new order wins, and those are all buzzing as well in trade today. Let me also pull up something like Maruti, M&M, Escorts. All of those buzzing on the back of auto sales data which has come through, Pallavi. Also, you have the likes of an NTPC again up on the back of the numbers that they've posted for FY24, as well as another order win coming in for NTPC. That one is up 2% as well.
Right. So, let's bring in Puneet to break it down for us. Like you've mentioned, the auto sales figures continue to come in. Puneet, help us get some perspective. What are the companies that have put out their numbers already and what's it looking like?
Yeah, thank you so much. And as you rightly said, so a couple of them have already reported the sales numbers. So we are looking at the tractor space right now. Now, Mahindra and Mahindra has reported the earnings and it is up, has reported their sales for the month of March. Now, it is up 4% on a year-on-year basis, but it is down roughly 10 to 15% as per analyst expectations. For its passenger vehicle sales, the SUV portfolio has done well and is up roughly 13% year-on-year, but that is still below the analyst expectation of roughly 20% for this particular month. The three-wheelers have also been down 7% as reported by the company, and the analysts had expected it to report a 7% growth. So that's the divergent trend that's seen in the three-wheeler space. The tractor sales have been disappointing again. This year has been very tough for them in the tractor space. For this particular month, it's reported a 26% fall in sales, and analysts had expected a lower percentage of roughly 16% fall. So they are beating analyst expectations, but on the wrong side of this. For Escorts also, the sales have largely been flat. As per analyst expectations, on a year-on-year basis, they had estimated roughly 16% fall, and that's what they've done. On a domestic basis, the sales is down roughly 16% versus analyst expectation of 17%. And finally, on the exports, which is a very small percentage of Escorts, is down roughly 24%, and that is also lower than the analyst expectations of roughly just 14% fall. So for Escorts as well as M&M, the sales haven't met analyst expectations, and we'll wait for a few more of them to come out later today.
Sure, thank you for that, Puneet. But look at the way Escorts is doing otherwise, despite not meeting or not completely beating analyst expectations, if I can call it. The stock is up 2% in trade. But another one that's in focus since the morning, in fact, is Prestige Estates. Let's pull up that one. There you go, 6.5% higher. Plenty happening. Company has entered into an agreement with both ADIA as well as Kotak AIF. We have with us Anushi, who's going to break that down for us. Anushi, what does this mean?
Well, Harsh, as you mentioned, Prestige Estates has been the focus in today's trading session. Now, this is on the back of the news of it signing a deal with ADIA, which is Abu Dhabi Investment Authority, and Kotak AIF for a consideration of up to 2,001 crore. Now, this entails developing greenfield projects with a culminating GDV, that is gross development value of about 18,000 crore across 4 cities, which is Bangalore, Mumbai, Goa, and NCR region. Now, over here, the focus remains in these 4 cities, which is in line with the company's expansion plans. Also, if you look at the company which predominantly has about a southern focus, is now shifting its gears to other cities, the most recent being the Delhi NCR region. Now, even if you look at the past announcement for the company, it also acquired a land parcel of about 62.5 acres in the NCR region, which has for a consideration of up to 468 crore, which again has a GDV potential of up to 10,000 crore. And is expected to launch in the next 2 quarters. So that remains on the focus for the company. Even if you have to look at the company's overall 9-month financial performance also, let's take some of the key triggers, which is its pre-sales collections that has seen up to 81% and 20% of growth respectively in the 9-month FY24 period. On to the stock performance of the company has seen about a 195%, that is almost about a 2 times returns in this 1-year period itself. While if you have to look at the analyst recommendation for the company, about 15 have a buy rating, while 3 have a hold and 1 have a sell rating on the Prestige Estates. So this is all that has been brewing for the company in today's session, if you are to look at, and the focus continues to remain on how it grows across the different regions going forward.
Thank you so much for that. Prestige having a good day in trade. The stock is up almost about 6.5%. Another stock that's in the news today is Aurobindo Pharma. The stock is currently up about 1.5% on the news that it is commissioned for plants in Uttar Pradesh. Varsha joins us with more on that. Varsha?
Yeah, hi Pallavi. So as you rightly said, so Aurobindo Pharma has commenced 4 state-of-art manufacturing facilities for a few of their products, which includes penicillin G, then 6 APA, that is amino penicillin acid, and injectable products and granulation. Now, these are commissioned through their subsidiary companies. Now, if you see, they are actually betting big on PenG, that is penicillin G project, wherein cumulative capex for this product till 31st December it stands at almost $230 million. Now these operations for penicillin G and 6 APA plant are expected to start from Q1 FY25, wherein estimated annual production capacity at full utilization for PenG product stands at 15,000 metric tons. Now, if you see margins for this company, so EBITDA margins are expected to improve with this PenG product commercialization, and the guidance for EBITDA margin for FY25 given by the company is at almost 20%. So once this PenG product picks up scale, one can see good numbers on their financials. So yeah, this is the reason that Aurobindo Pharma is buzzing on trade today.
Right, thanks so much for that, Varsha. Let me quickly switch focus from Oro to Welspun. That one is also, absolutely buzzing in trade, nearly 10% higher, and has remained there pretty much for most of the trading session today. Mahima is here breaking down what's happening with that counter. Mahima, talk to us about what Welspun is doing today and why.
Right, Harsh. So as you rightly mentioned, it did touch an intraday high of 10.7% and it has sustained that percentage, and the volumes are also around 2.6 times its 30-day average. Now, what's working for Welspun? Where it is sustainably growing at a CAGR of 16%. Their legacy business is continuing to benefit from the revival of demand that is taking place in the retail sector, and it is grabbing opportunities in the emerging business like the technical textile side of the business. Now, in terms of textile industry as a whole, there was a semantics note which said that the Ministry of Textiles is estimated to grow at a large scale, and it will grow up to US $10 billion for FY24, and this will further it will grow at a CAGR of 7% over FY24 to FY31. Now, factors driving the textile market include the competitive manufacturing costs at present and the organized retail space and e-commerce space. There is also this entire value chain that is in place for the retail and textile sector. Increasing focus in technical textile will lead to growth in demand, and lastly, the rising per capita income of an average salaried individual is what is leading to increase in demand. Now, in terms of technical textiles, textile sector is growing at a remarkable 11% CAGR, and this will continue over FY24 to FY31. The global home textiles is seeing a growth of 6% CAGR and will continue till FY28. And the India's export penetration in US home textile is rising. So all of these factors together is the reason why the Welspun Living is going to benefit from one thing, and the stock has also done pretty well. The stock has been up around 26% in the past 6 months, and 1 year it's been up around 122%. In terms of analyst recommendations also, the overall street view, pretty bullish. Buy, 6 says buy, 3 says hold, and average target price is around 192.7. So these are the multiple reasons, various reasons why Welspun is buzzing in trade today.
Thank you so much for that, Mahima. With that, it's time to slip into a break. And here's a look into NDTV Profit's special offering. Artificial intelligence is starting to penetrate our daily lives and even become a key part of it. But some key questions remain. Over time, will it take over your jobs? Let's take a look.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers, growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching Market IQ here on NDTV Profit. Now, we're going to switch focus from markets to other news that has continued to trickle through since the morning. We had Prime Minister Narendra Modi, who addressed the gathering at the 90th anniversary of the RBI. He was praising the RBI and he spoke about the role that the RBI has played in the improvement of the Indian banking system, especially over the last 3 to 4 years. Listen in to that.
बैंकों का जो ग्रॉस एनपीए 2018 में 11.25% के आसपास था, वो सितंबर 2023 आते आते 3% से भी कम हो गया। आज ट्विन बैलेंस शीट की समस्या अतीत का हिस्सा हो चुकी है। आज बैंक की क्रेडिट ग्रोथ 15% तक हो गई है और मैं इन सभी उपलब्धियों में आरबीआई की सहभागीदारी और प्रयासों की भी बहुत बड़ी भूमिका रही है और वो बधाई के पात्र हैं। साथियों, आरबीआई जैसे संस्थान के बारे में चर्चा अक्सर फाइनेंशियल डेफिनेशन और कठिन टर्मिनोलॉजीज तक ही सीमित रह जाती है। आपका कार्य जितना जटिल है उसमें यह स्वाभाविक भी है, लेकिन आप जो काम करते हैं उससे देश के सामान्य मानव का जीवन सीधे तौर पर प्रभावित होता है। जो देश में नए नए सेक्टर्स बन रहे हैं, हमें उनमें अभी से एक्सपर्टीज डेवलप करनी चाहिए और उनको हम कैसे सपोर्ट करेंगे इस पर भी पहले से मंथन होना चाहिए। अभी 100 दिन मैं चुनाव में बिजी हूं, तो आपके पास भरपूर समय है। आप सोच के रखिए, क्योंकि शपथ लेने के शपथ लेने के दूसरे दिन ही धमाधम काम आने वाला है।
Well, that was the Prime Minister speaking on the eve of the central bank's 90th birthday celebrations. But moving on, the Supreme Court has refused interim relief to Kerala in a borrowings limits dispute. Varun Gakhar joins us to tell us more. Varun?
Yeah, hi. Rightly said, the Supreme Court has refused to grant an interim relief to the state of Kerala on a plea seeking to direct the centre to relax its borrowing limits. Now, the case pertains to a plea filed by the state of Kerala against the central government, accusing it of imposing a net borrowing ceiling which limits the state's borrowings from all sources, including open market borrowings. Now, according to the plea, the reduction in borrowing limits will have an extremely damaging impact and cause long-term economic damage to the state, which will be irremediable in the short and even the medium term as per the plea. Now, while refusing to grant an interim relief to the state, the top court said that at this stage, the balance of convenience lies in the favor of the union. And the court said that during the course of the hearing, the union has already made an offer for an additional borrowing to the tune of Rs 13,608 to the state. In addition, the court remarked that even if we assume that Kerala's financial hardship is due to the actions of the union, its concerns have been relieved to some extent so as to bail out the state from its current financial hardship. However, the court clarified that all these observations have been made only for the purposes of adjudicating on the aspect of an interim relief, and the court said that the main dispute, which pertains to Article 293 of the Constitution, which deals with borrowings by the state, has not yet been substantially adjudicated upon by the top court. Now, as a result, it has referred the dispute for a final adjudication to a bench comprising of 5 judges of the top court.
Okay, thank you so much for that update, Varun. We will have more on that as and when the developments come through. But with that, we're completely out of time. From Pallavi, myself, everyone who puts the show together, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Hi, thanks so much for joining in to this special broadcast on NDTV Profit. My name is Alex Matthew. The start of a new financial year is a great time to take stock of your investment strategy, and we talk about equity on every other show on this platform. On this show, though, we'll talk about fixed income and what are the factors that will cause interest rates to move in the new financial year, how much can you predict, and most importantly, how can you benefit? That's what we're covering today. My first guest today is Mahindra Kumar Jaju, the CIO Fixed Income of Mirai Asset Investment Managers. Thank you so much, Mahindra, as always, for speaking to me and for speaking to NDTV Profit. Let me start with a coverage of the context that we're in right now. We're just about a week, or less than a week, in fact, away from the RBI's rate decision. There's a lot that is playing out on the global, in the global setup as well. We're watching for the Fed and when the next move is taking place. So let's break this down. Let's first talk about the global scenario, and let's first talk about how you, as a manager of fixed income portfolios, are looking at the Fed.
Fed is very clearly inclined towards rate cut in the second half of the year. In the US, the inflation has come down significantly from a peak of about 9% to now at about 3 to 3.5%. It is still very far away from the Fed's target of 2%, but then everything is pointing to continued surprise in inflation. For example, the oil prices have not moved up meaningfully in spite of so much of geopolitical tension. So most of the commodity prices are pretty well behaved to suggest that inflation should continue to remain benign. And therefore, given the fact that in the last leg of the inflation going up and the rate hike cycle, the Fed moved very aggressively. The last 100 basis points of rate hike that Fed did from 4.5% to 5.5% is something which is a very low hanging fruit for the Fed to reverse. And therefore, I believe that in the second half of the year, which is sometimes in June or July, we should see the first rate cut from Fed. And that's pretty much, I think the market also seems to be discounting at point in time.
From the perspective of managing a fixed income portfolio, I'm just curious, and we'll talk about the investor perspective also down the line, but in a falling interest rate scenario, is it relatively less challenging than it is in a rising interest rate scenario, or are they both equal?
I think markets are always equally challenging. So how many people who have missed the big rally in the equities market? So in a falling market, the fear is of getting trapped and not being able to exit in time. In a rising market, there's a fear of missing out. So I think the opportunities are on both sides. Having said that, why it is easier for the fund managers in India, in particular in fixed income, to have a falling interest rate scenario is that everybody makes money and everybody is happy. We are generally a long only market with a very limited number of players. So when the interest rates are going up, there are limited tools available for hedging. We are typically a long only investors as a mutual fund, and therefore when the interest rates are going up, our returns don't look that attractive. So I think in that sense, it is easier to have a situation where the interest rates are falling, but from a market perspective, both are equally challenging.
Let me add to that question then, because there are people that watch this market, and I'm not talking about professionals like yourself. I'm talking about people that reasonably understand the bond markets, and what they think is that if they can predict the peak of an interest rate cycle, and generally you have fair warning, then you can't go wrong when you say, for example, take duration at that period, and if you have enough time horizon ahead of you, because at some point or the other you will make money. Is that the right approach?
I think that is an absolutely correct statement, that if you can predict the peak of the interest rates, then obviously you're going to make a lot of money. But I think that prediction is a very challenging thing. It is very difficult because typically when the rates are going up, then people tend to think that it will continue to go up and vice versa. Now, there is another challenge that people need to, factor in that in US, for example, the yield curve is inverted. So Fed is at 5.5%. The 2-year is already around 4.5%, and the 10-year yield is at around 4/4, broadly, big numbers now. And then the 10-year has moved in the region of 3.85 to 4.5% for a brief while to even 5% in the last 1 year. So even if you call the peak of the Fed rate at 5.5%, right, it has been close to now almost 6 months that Fed has not done anything. Market has done a lot of things. So there is a lot of missed opportunity in that sense, or a lot of hit to the portfolio that could have taken place in that sense. So I think being able to predict the peak of the interest rate is just one part of the entire process. Let me give you one live example. Last year when the interest rate environments were very, very, difficult, and we used to say to everyone who cared to listen that look at around 7.5, 7.6 10-year yield in India seems to have peaked, and therefore it is a good time to start looking at target maturity funds, which were very popular at that point in time. And every time people will say, no, we are going to wait for 8%, we are going to wait for 7.75%. 1 year down the line, we know that 7.5% was the peak of 10-year in the current cycle. But then it was very difficult to take advantage of that, because it is very difficult for us to then be able to convince people. So there are multiple dimensions of the entire process, and the ability to predict if one can the peak of the interest rate is just one part. We believe that if somebody is following an investment process, for an investor, that is important. Being able to predict the peak is just one trading call, which can be right. So I don't think that is the key to success. Key to success is a systematic approach, a disciplined approach to the market, and then top it up with the good risk management system.
Got it. A few aspects will probably help investors make the right judgment call as things stand. We briefly talked about the Fed, but just to round off that conversation, Mahindra, you have a few commentators that are saying that with inflation not having come off as substantially as it should have, and we saw the latest reading on the PCE, and that still continues to be a little elevated. It is moderating, no doubt about that, but it hasn't gone to the extent that the Fed probably would want it to. And on the other hand, you see the resilience in the economy from the jobs numbers and all of the other high frequency indicators in the US. Some people are saying, what is the need and what is the urge to cut too quickly? And so would you say that in this current environment, one of the risks on the global end is that the Fed does not move at all, even in this, in 2024, instead of 2 or 3, it might just cut once?
So I think that's a fair argument. But as I said, look, there is no way that the Fed target of 2% on the inflation is achieved in the current year. I don't see that happening, honestly. But then you have to look at one environment. The inflation has fallen from 9% to 3%, and the interest rates have gone up from 0 to 5.5%, right? So today at 5.5%, Fed rate is almost 2%, 2.5% into positive real rates. That is something which an economy, a mature economy like US with so much of debt, is hardly going to be able to tolerate. So by not cutting rates, is the Fed going to cause incremental damage to the economy, or is it going to help the economy maintain the current momentum, is one factor to be considered. Now, let's also understand the fact that when we are talking about Fed cutting rates, we are talking of 3 rate cuts, or you're saying maybe possible 1 rate cut. So all we are saying is the beginning of the rate cut cycle to bring it back to a more neutral level. So as I said earlier in my comments, that the last 100 basis points of the rate hike that Fed did in the last leg of the cycle was very aggressive. And from those times, the inflation has fallen very meaningfully. So if the inflation is not going to go back to 2%, it's not going to go back to 9% also. Therefore, at 5.5%, I think it's a low-hanging fruit for Fed to cut rates. Now, we don't know whether they will cut or not. Their guidance right now is clearly for a rate cut in second half of the year. All we can say is that, look, if they don't cut, then maybe they will possibly push the economy to a slower trajectory than it would otherwise have. So these are the things that we can have control on. But whether Fed will cut or not, we don't know. Whether Fed should cut, in my view, very clearly, yes, some part of the rate hikes can be reversed.
So the reason I've been stressing so much about the Fed is that I wanted your perspective on whether or not the RBI can move in isolation, ignoring what the Fed is doing. And of course, you've had the Reserve Bank of India governor on multiple occasions. He will probably reiterate this on Friday, that the RBI and the Monetary Policy Committee of the Reserve Bank of India does not make its decisions based on what another central bank is doing, but can it cut when the Fed has not cut?
I think this needs to be looked at into two parts. So I think when the governor says that our monetary policy is largely focused on domestic factors and we don't cut or hike rates because the other central banks are doing, I think that's absolutely the correct situation. And I think it's very interesting. Today, RBI has completed 90 years and there was a big celebration. And I think the way the RBI has conducted the monetary policy, especially since the COVID time, it has been an incredible positive experience. And therefore, RBI is today recognized as one of the best central banks in the world. But then keeping that aside, the domestic policy is not going to have a rate cut because Fed is cutting rate. But to the extent that if the Fed cuts rates or if the Fed hikes rate, it has impact on the global environment. It has therefore the cascading impact on the domestic economy. There will be some impact. And Fed is the mother market for the money markets across the world. When it's a famous saying that when Fed gets cold, the rest of the world sneezes. So you cannot isolate ourselves completely and say, look, I don't care what the Fed does or doesn't do. We care what Fed does, but then we have our independent assessment of domestic factors also. And let me give you one quick example, if you permit me a second. In 2022, when RBI started hiking rates, it coincided with Fed's rate hike cycle, because that's what the domestic requirement also was, that look, when the Fed has started rising rates, it will have impact on the global liquidity, global cost of capital, and therefore it will have impact on domestic factors, and therefore we also started hiking rates. And you can say that, look, RBI started hiking rate because Fed has started hiking rate. But look at February 23, from February 23 to February 24, RBI has been on a pause, whereas the Fed has hiked rates 4 times by a cumulative of 100 basis points in the last 12 months. So in the last 12 months, RBI reached its destination quickly, and once it reached 6.5%, it assessed that, look, now we don't need to hike rates because our inflation is largely better behaved, etc. But for the Fed, the inflation continues to pose challenge. So RBI in the current cycle itself has shown that it is more focused on the domestic factors, but it also considers the global factors which can have domestic implications. So we hike rates alongside Fed.
So the follow-up, Mahendra, to that question is that now that we've established it cannot move in isolation, it is focused on domestic factors, but we've looked at core inflation and the print of core inflation over the last few months, and we've seen it trending far below what we've seen over the course of the last several months. And the problem really in the headline number seems to be food inflation, which to a large extent one would argue is supply side driven. And so from that perspective, are we heading into a scenario where that weakness in core inflation will translate into a slowdown in growth? And so therefore, is the RBI required, or will RBI soon be required to act? And therefore, can we see a change in the bond yields? We're already seeing it at 7.06, whereas as you pointed out not too long back, it was at 7.5.
I think overall macro assessment is very clear that the next move of the Reserve Bank will have to be a rate cut. Now, we know that the food inflation is a challenge. It's very volatile, but then it's real. and therefore at different points the food inflation can have different impact. Sometimes the central banks ignore it, considering it as highly volatile and not structural in nature. Other times, when there is a risk of the food prices getting generalized, then central banks might want to consider the impact of that into the broader inflation index. At this point, we are looking at the core inflation, easing significantly, and it is well below 4% now. But then you also need to understand that the core inflation has remained very sticky for better part of the last 3 years. So in the last 3 years, when the core inflation was at above 6%, our rates were not anywhere close to 7.5%. For better part of that time, the rates were, maybe more like 4.5%, 5%, then to 6%. So there is a little bit of lag on two counts. One is that the average inflation in the last 4 years and the average interest rates in the last 4 years are still balancing out. Something of the sort that is also happening in US, which is why the Fed is being a little more patient with the cutting of the rates. And the second part is that there is a lag effect with which the core inflation is easing. It's historically known that if the core inflation remains very high and the headline inflation is trending down, then over a period of time the core inflation will start to sync with the headline inflation. So these are some of the arithmetics of the inflation.
So therefore,
also just 10 seconds more.
Yeah.
Therefore, I think the clear direction, in my view, for RBI is to cut rates second half of the year. But the margin for which is very shallow.
Got it. The last point, and knowing that we're likely to see significant inflows because of the inclusion of India and a couple of bond indexes as well, the last point is, how do you see the yield curve developing? We're already seeing on the longer end the yields coming off, and so to that extent I would think that there is a flattening that has already taken place. How do you see the yield curve progressing, and what according to you should be the strategy that investors should adopt in this given scenario?
So, as you rightly said, that the market is already expecting rates, and therefore, to some extent, that's reflected in the flat yield curve. So, the yield curve is flat at the longer end because of the expectations of the rate cut, and the yield curve is very flat at the shorter end because of the tight liquidity conditions and the scramble for deposits by the banks. And now, in the last 1 year, the US inflation has come down and their interest rates are still high. So the inflation has fallen from 9 to 3. The Fed rate has gone from 0 to 5.5 in the US. In India, the interest rates have come to, the repo rate has come to 6.5%, but the inflation has largely remained unchanged at around 5 to 5.5% in the last 3 years. Therefore, the scope for the Reserve Bank to cut rates, in my view, is rather shallow, because the differential between the US and the India key policy rates is just about 100 basis points right now. And the inflation equation is against India, where our inflation is 5.5%, US inflation is at 3.5%. So I believe that the rate cut cycle that the Reserve Bank may, have will be very shallow. And therefore, the impact at the longer end will be in the first leg of the rate cut cycle. So first rate cut or the background or, preamble to that will be driven by the, easing of the rates at the longer end. Some part of that we are seeing. At the same time, when the RBI turns accommodative and in the new year with the government spending, the liquidity in the system will improve, and therefore the focus will then shift to the 3-year, 5-year of the segment of the yield curve. Therefore, I believe that after the first leg of strong rally in the 10-year, 15-year segment, gradually the yield curve will become to steepen from the bullish side, which means the 3 to 5-year and the 1-year segment will come down. Therefore, the curve will become a regular, positively sloped yield curve in 6 months' time.
Okay, all right. Thank you so much, Mahendra, for joining in and having a conversation that we don't have enough, I think, on our programs. Thank you so much for taking the time.
Thank you so much for inviting me. Thank you.
My pleasure. We have to slip into a very quick break, but on the other side, we'll talk about what you should do with this information. How should you plan your fixed income strategy? Do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
Welcome back. You're watching a special show that helps you understand fixed income as things stand right now and what your strategy should be. Now, we've discussed what will likely happen on the interest rates in 2024, and my previous guest is of the opinion that we're likely to see interest rate cuts by central banks in the second half of 2024. With that information, how should you change your fixed income strategy, if at all? Amit Kukreja, founder of AmitKukreja.com, is joining in. Amit, thanks so much as always for taking the time. One, how should you plan your fixed income strategy on an ongoing basis? And two, as you would normally do in the equity markets where you see certain segments or companies moving and you make certain investments, with the interest rate cycle as things stand right now and your expectation of it moving, do you also use that information to make tactical investments in the fixed income market?
Yeah. So Alex, 2-3 parts to it. One, if you are looking for a more stable cash flows, then do not try to time the market with respect to rising or falling interest rates. Just get into fixed income products which are serving your purpose of regularity in your cash flows. But if you are looking for some opportunities where you may want to have a little bit of alpha with respect to being more aware of how the interest rates are going to go up or down, then you can get into long duration bond debt funds or even medium term debt funds where we have the interest rate risk coming out and playing in your flavor to give you alpha. But generally, I recommend the investors and the clients that look for what exactly is your need. In the desire to have more alpha in your fixed income portfolio or from your debt funds portfolio, do not go for a paper or a product which has the credit risk involved in it, or which has a company risk involved in it. So go for AAA rated papers or a predominantly AAA rated paper product, and go for a little bit of trends that you're seeing in the interest rates, and then get into the debt fund allocation as required.
So would you say that, like you do in your equity portfolio where you have a core and a satellite, you within your fixed income as well, and you first of all you have a longer term kind of a portfolio, but your satellite is what you use for your tactical bets or your tactical allocations, and what percentages can you look at here?
Yeah, so thanks for bringing up core and satellite structure. So in core, something which is more regular with respect to cash outflows, then you can have a layer of satellite where you can have a fixed income safer paper, and then you can have the tactical allocation. So I would say if you are purely designing a fixed income portfolio, then at least 60% should be core. The other 20 to 30% can be something where you get the advantage of staying there and deferring your taxes by accumulating the capital gains. And lastly, 10 to 15% where you have the interest rate playing a game of a generating kicker for you in your fixed income portfolio.
Okay, so that core, what would you fill that core with? Would you talk about, say, your government bond funds? Would you talk about corporate bond funds? Or would you also talk about target maturity funds?
So I would go with target maturity funds. And I don't mind having some of the corporate bond funds as well if they are really good company papers in the mutual fund space and they are a well-managed portfolio which is done by the fund managers. But overall, something which is safe. As I say, in a fixed income portfolio, go for SLR. S stands for safety of your corpus, L stands for the liquidity, and R stands for the rate of return. And add to it the advantage of taxation, because in debt funds, you are deferring the taxes until you are realizing the profits. And you can also use the capital gains to offset some of the capital losses in the other financial products if you have incurred any. So go for corporate bonds and target maturity funds as the core.
Fantastic. I think that more or less covers the strategy. And as you pointed out, don't necessarily jump the gun based on what you might think happens with interest rate and changes by the central banks, and have a more long-term strategy. And I think you've laid that out very well. Thank you so much, Amit, for taking the time.
Thank you, Alex.
And that brings us to the end of this particular edition, or rather special broadcast on fixed income. If you've got questions for us, you can write to us on that number that you see on your screen, and lots more coming up over the course of the day. This is NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish.
Hello and welcome. You're watching Large Trades. I am Agam Vakil and with me is Mihika Barve, and we are going to take you through all the stocks which are buzzing in trade today, largely on the back of bulk deals, block deals, and of course volumes But before that, a quick look at the markets and how things are faring at the moment. We are looking at an advance right now. Of course, the Nifty has initially touched a new life high earlier on in the morning, and after which it has come off, but it's still marginally in the green at the moment. We're seeing gains on the back of a handful of banks which are actually leading the Nifty higher. The Bank Nifty is also advancing by around 0.8%. We have seen strength there as well, and it's the same for the Sensex too. But to talk to you about the key movers as far as the benchmark is concerned, well, on an absolute basis, we are looking at gains in two of the steel companies. One of them is JSW Steel and the other one is Tata Steel, also contributing to the Nifty advances. And of course, HDFC Bank is the biggest provider of the advance for the index, along with L&T, which is also up and about. We don't have too much to speak for when it comes to other stocks which are weighing down on the index. Well, something like a Bharti Airtel, Titan, ITC, sure, under a tad bit of pressure, but not too much to speak for otherwise. Let's look at the broader markets and see how things are panning out there. It's certainly a day when broader markets are completely outperforming the benchmarks, and both the small cap and the mid cap indices are in fact doing very, very well. You have the mid cap index, which is up around for 1.5%. The small cap index is up as much as 2.6% as we speak. Even in terms of the broader markets, we have something like a Mazagon Dock, which is the top gainer on the index there. So Mazagon Docks is up as much as 7.7%, and after that we have something like a BSC, which is also up by just as much. In fact, it's been a life high for BSC today as we speak. We also have gains in Prestige Estates, up by nearly 7% as well. So significant gains for a whole host of these companies coming through. And of course, Prestige has also been in the news, and we have an update around that one as well. On the losing end, well, where is that weakness coming in? At least we're looking at CG Power under a tad bit of pressure. That's down 4%. And we have CRISIL, which is also down around 2.6%, followed by Sona Comstar, that's down around 2.5%. Now, on the whole, the losers are not losing out as much as the gainers are moving upwards in terms of a percentage move. So it does seem like it's a day which belongs to the bulls. The question really is that can we make new highs even from these levels? Well, that's a wait and watch on that one, Mihika.
So let's take a look at the large trades and the volume buzzers that we do have in focus today. We have something as like a BASF India, Wellspin Living, Globus Spirits, NRB Bearings and IFB Industries, which have all been buzzing on the back of volumes and in terms of stock performance. But up first, we have Varsha on BASF India, which is a company that is in diverse segments. Varsha, what do you have on the company?
Hi Mika. So as you rightly said, so BASF is buzzing this on the back of volume. So volumes are at 6x its 30-day average. Company did see an intraday high of almost 7% in trade today. Now let's see the background of this company. So this is a part of BASF Group. So their portfolio consists of almost 6 segments, wherein they provide agriculture solution products like crop protection products. Basically, they do have materials in their portfolio and industry solutions, and also nutrition and care and chemical products also are provided by them. Now if you see their Q3 FY24 numbers, so numbers were really good, especially on the EBITDA and net profit per se. So if you see the EBITDA margin was at 6% versus 2% last year, and net profit saw an uptick of 11x. Now this is on the back of increased margins and lower taxation. Now if you see the future outlook for this company, so BASF India aims to increase their own manufacturing ratio and improve their net assets. So currently 50% of their products is produced by them, and while rest 50% they import and sell it. So as you can see, there's a good opportunity to improve on that as well. Now also they aim to participate in the electrification trend, wherein if you see globally, BASF has a very strong battery portfolio. So they are actively talking to key players in India, be it on two-wheeler or four-wheeler side. So I think BASF will actually be participating in this segment, not only with respect to automotive segment, but they do have different different different business units catering to that segment, and more acceleration is expected. And BASF will be participating in battery chemicals as well. So also, if you see the stock performance for this companies in last 1 year, stock has seen almost 54%. Stock has given almost 54% return to its investors, while in last 6 months stock is up almost 36%. So this is all we have on BASF as of today.
Right. Well, Varsha, thank you so much for getting us those updates on BASF, another very interesting company to keep an eye on as far as the chemical sector is concerned. But from there on, we move on to yet another counter which is buzzing on the back of strong volumes, and that's Welspun Living. Now, let's get in Mahima to tell us a little more about that. From what we understand is, of course, the prospects of the sector have improved dramatically. Mahima, what else can you tell us?
Right, Agam. So as you rightly mentioned, it is buzzing in trade today. It did touch an intraday high of around 10.7%, and at present also, if you see, the stock is up over 9.5%. Now the volumes are around 2.6 times its 30-day average. Now what is exactly working for Welspun? Well, it has managed to grow at a sustainable CAGR of 16% over the years, and it is grabbing opportunities in the emerging business like the technical textile side of the business, and the legacy business is continuing to benefit from the revival of the demand that is taking place in the retail sector. Now, in terms of textile industry as a whole, well, the Ministry of Textile estimates that the Indian home textiles market will go to $10 billion for FY24, and the textile market is poised to grow at a CAGR of 7% over the FY24 to FY31. Now, factors that are driving this kind of growth in the textile market include the competitive manufacturing costs and the organized retail sector and the e-commerce that is playing a big role. Then there's presence of entire value chain in the textile industry, which is kind of growing the domestic markets, and there is increase in focus in the technical textile side of the business, which is leading to the growth of end user industries, and lastly the rising per capita income of an average Indian. Now, technical textile sectors is set to achieve a remarkable CAGR of 11% from FY24 to FY31, and they've said that the Minister of Textiles said that the working capital cycle will improve over the course of time, and this will lead to positive ROE and ROCE. And the global home textiles is also set to grow at a CAGR of 6% by FY25. Now, overall, even cotton prices will stay range bound, so this will affect the exports a bit. However, the clear picture says that the textile industry overall will grow very well, and the stock has also done very well. It's grown over 122% in the past 1 year, and the street estimates also suggest a bullish stance on the stock, where 6 say buy, 3 say hold, and average target price, 12-month target price is around 192.7. So this is the overall view of how Welspun Textiles can benefit from the growing textile industry.
Thank you so much, Mahima, for those details. Up next, we're shifting focus on the breweries industries. Now, while peers like United Spirits and breweries have seen gains of up 2%, we have a global spirits that has been buzzing on volumes, and it's up 10% in trade today. My colleague Anushi joins us with more details on the same.
Right, Mihika. So if you look at global spirits today, quite a field day. Well, this is on the news of it adding capacity in 2 of its plants. But if you have to look at the overall stock price movement for this, about a 13% of an intraday high over year. So this is a relief compared to the company's overall year-on-year, or rather the 6-month performance, wherein the company has seen about a 15% drag overall. Now, if you have to look at the volumes also, that traded at about 3 to 4 times its 30-day average. Now, the main focus shifts back to the additional capacity over year, in which in Jharkhand they have added about 60 kiloliters per day of capacity, taking its total capacity to 200 kiloliter per day compared to about 140 earlier. While in West Bengal also a similar capacity addition of about 60 kiloliters per day, taking the total capacity to 300 compared to 240 earlier. Now, this additional capacity is to be utilized for various of their products, which includes the ENA and ethanol base also. Now, the total investment needed for this entailed about 142 crore. A large portion of this, or rather
most of the chunk was utilized from the company's internal accruals, while the other part was from the debt portion, but that is still on a very minuscule level. Now, if we have to look at the overall other capacity addition also that we have seen over the course of this couple of quarters, in Q2 also the company added about 19 kiloliters in their Bihar plant, taking the total capacity there over about 110 kiloliters per day. Just on to global spirits, where it is currently positioned, if you have to look at its Rajasthan market, they hold about a 55% market share in its value plus segment over there. While if you have to look at the overall presence, it is spread across six regions, 6 markets mainly, with its latest entry into Haryana and Punjab in the last 12 months. So this capacity addition remains the focal point and why the stock is buzzing in trade today.
Right, Anushi, thank you so much for getting us that update on global spirits. And from there on, we move on to NRB bearings. We understand this one is also well buzzing in trade on account of volumes. So let's get in Puneet to tell us a little more about that one. Puneet.
Yeah, thanks Agam for that. So NRB bearings, the volumes are up 3.5 times 30-day average, while the stock has hit an intraday high of roughly 14.5%. Now, the stock has been quite active, and they have given quite a lot of key highlights for the management has given a lot of key highlights for the company. They have been on the strategy to de-risk the business basically by reducing dependence on their domestic sales as well as restructuring the international business. This will also strengthen the business outlook and reduce the risk while mitigating any kind of price hikes. Now, for the 9 months, the business has done well. The revenue is up 8%, while the EBITDA margin has gone up by roughly 80 basis points to 17.5%. Now, this is one of the key differentiators for NRB bearings compared to its other peers. One of the key monitorables here is because the net profit on a 9-month basis are up roughly 200% on the back of a monetization of land which they owned in the Thane region of Bombay. Also, do know that there was a recent fire incident at one of its plants in Valuj, where this impacted roughly 5% of the top line, and they have replaced the equipment and new ones are also on stream. Finally, the company had mentioned the 9-month outlook, where they said that there is some slowdown in the rural economy, which has been highlighted by many peers as well, which will affect farm equipment as well as the lower CC bikes in which the NRB bearings operates. The second thing is they are very positive on commercial as well as passenger vehicle market, and as well they expect the momentum to continue in the next few months. Finally, sales has improved in the recent month, and they expect that Q4 will report decent earnings. Finally, on the stock, on the year-to-date basis, it's down 16%. But for the past year, the stock has run up roughly 117%, giving good returns to investors. Back to you.
Thank you so much, Puneet, for those details. Up next, we have IFP Industries. Now, this is a company that manufactures parts and accessories to the motor vehicle sector as well as home appliance products. Now, it's off its day's highs, up about 4%, but it did hit an intraday high of 6.5%, and volumes are over 6 times its 30-day average, and sellers are 1.75 times the buyers. Now, the stock is up 18% in the last 5 days itself and 64% year to date. No specific trigger as of today. However, the Q3 earnings were strong, and they have good expectations for the current quarter and the next quarter. Revenue was up 16%. EBITDA grew two times in Q3, and margins were also up 280 basis points. And when you look at the product profile of this company, 2 main segments. One is the home appliance divisions. Now, this contributes to around 82% of the company's revenues, and the AC division is said to be the key to the overall profitability. It contributes 30% to the overall revenue in the home appliance division. Now, material cost reduction is expected to help the profit in the division. They're expecting cost reductions in Q4 FY24 as well as Q1 of FY25. Now, they're running this initiative in the company where they are expecting to reduce the fixed expenditure by 6 to 8 crores. And then secondly, we have the engineer division, which contributes to 17% of the revenue. Now, they manufacture components, tools for 2-wheelers, 4-wheelers, as well as commercial vehicles. And the outlook for these 3 segments is So it's strong. They expect increased volumes for all the three segments and a positive outlook on the domestic market, supporting these high expectations. And lastly, the semiconductor shortage situation has improved, and this is going to help reduce any of the bottlenecks in the OEM production. And they're also increasing the focus on their electrical vehicle segment, and with the company booking around 102 crores worth of business in Q3 itself. But that's all we had for now. But it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back to NDTV Profit. You're watching Large Trades. Let's get a quick market check. Now, the benchmark is up 0.6%, but it's really the broader markets outperforming the benchmarks. We have the small cap 250 that's up 2.5%, and the Nifty mid cap, which is up 150%. But I want to put more focus on the sectoral indices, which are in focus today. Now, we do have the Nifty Realty, which is clearly the top gainer in today's day of trade. And then we have the Nifty Media, but we have the Nifty Metal. Now, it's up 3.5%, and the stocks have been buzzing since the start of the day. We have something like a Hindustan Copper, which is up around 7%. I'd like to get the constituents of the Nifty Metal on the board, please. We have a Hindustan Copper, which is up 9% in trade today. A Wellspun Corp, which is 6.3%. NMDC, Nalco, all of the stocks, all of the constituents except APL Apollo in the green. And they've been buzzing today, but what's the reason behind the buzzing stocks? Our colleague Kanaka joins us with more details. Over to you, Kanaka.
Yes, as you rightly mentioned, the Nifty Metal is currently buzzing today, and the index jumped by 3.4% to a new high, which was mainly led by Hindustan Copper, JSW Steel, Vedanta, NMDC, all being up by more than 4.5%. And the reason here is that China's manufacturing activity expanded in March for the first time since September, and this was rising at the fastest pace since 13 months. And the official manufacturing PMI rose to 50.8 in March from 49.1 in Feb, beating the economist forecast. The key thing to note here for viewers is that a reading above 50 suggests that there is an expansion from the previous month, whereas a reading below 50 suggests contraction from the previous month. And this provides a snapshot of the health of the Chinese economy. The expansion in the manufacturing PMI was largely led by the production component in Feb, and the new orders gauge increased even further, which reflect an acceleration in the economic activity. This is a sign that the world's second largest economy is now stabilizing.
All right, Kanika, thank you so much for getting us those updates on the metal sector and what's really working in favor of that particular sector. But moving on, our colleague Neeraj Shah spoke to Aditya Birla Sun Life's AMC's Mahesh Patil, who shared his views on the top sectoral bets along with his view. Listen in.
Yeah, so I think at least in the medium term, I think we are positive on sectors like, for example, automobiles, especially the four-wheelers. While the stocks are run up, I think we see a reasonably decent volume growth and margin improvement over there. We're constructive on the private banks, where we think that the large underperformance last year, I think, provides a good margin of safety over there. Also in other sectors, like other discretionary sectors, like, for example, aviation. Then on the consumer discretionary side, where we've seen a slight slowdown last year, especially in consumer durables, I think we are getting more constructive there as we move forward. There we think that the valuation correction which has happened is a good opportunity to play from a slightly longer term perspective. We also positive in the telecom sector, where we're seeing that we haven't seen any kind of a price increase, but at the post-elections, okay, there is room for prices to move up, and that will continue to drive earnings growth over there. Apart from that, other sectors which have been underperformers, right, in the last year, like, say, for example, chemicals, because of the slowdown and the kind of inventory which is built up in the system. I think going forward, I think as the inventory correction takes place, one can see improvement in terms of the volume numbers. And a lot of companies have set up capacities in the last couple of years, which will start to now deliver. So these are some of the sectors, where we would be positive in our portfolios or overweight at this point in time. Apart from that, even the industrials and the capital goods sector, especially in the power side, is where we see good demand drivers from a slightly medium to long-term perspective. And that's the area also where we are constructive on.
Got it. Mahesh, last question, because we are at the cusp of the earnings, IT will kickstart this piece per se. Just a slight deep dive there. People are a bit confused because the numbers from Accenture, etc., don't look that great. The hope is that at some point of time, if the US economy, European economy is starting to show green shoots, then order flows will start trickling in. Are you looking at it as a glass half full or a glass half empty?
I think the IT sector has been this is a sector where even a slight change, in expectations or guidance has a larger impact on the stock prices. And it's fairly well researched sector in that sense. But I would still look at this sector as a glass half full, I would say, because while near term there is some amount of challenges, but I think the bulk of the downgrade we've seen behind us in this sector. I think, and going forward from here, it is just a matter of time, probably 1 or 2 quarters, where you will see at least the growth numbers starting to look better than what it was in the last year. And we still believe that structurally, I think the spend on IT and the spend toward digital will only increase. The whole discretionary spend, which have been cut in the back of the slowdown, I think will slowly start to come up. And I think the IT companies, especially the larger ones, right, and which are fairly well positioned and able to execute well, I think they should be able to see a recovery, at least in the second half of this fiscal year. So while the valuations there are not exactly cheap compared to the historical, that's why you might not see a higher return. But I would say this is the sector which one would want to buy in the dips if at all there is a correction, because there's a slightly weak macro on the US side.
Moving on, my colleague Sessa spoke to Sumit Parthi, who is the business commercial manager at IKEA, on the company's B2B segment in India. Here's a slice of that conversation. Let's listen in.
Talk about, we have got 5 running stores, and every store has got a dedicated B2B service point, which is usually at the entrance of the store. We have team of interior designers at each service point, which helps customer with inspiring designs for their offices or their homes or their business places.
So, geographically, in which cities is your B2B service present at the moment, and where more do you plan to take this service forward?
So right now we have presence in stores, cities like Bangalore, Hyderabad, and Mumbai. However, with our expansion plan, Delhi NCR is the region that we're looking or betting big on in the future.
All right. Any timeline that you can share?
We're looking to have a presence in terms of B2B by, say, mid or end of 2025 for Delhi. But yes, we are also exploring other markets.
So that's in line with the B2C business.
Yes.
Okay, you have launched B2B. It's been quite some time. It's been 4 years since you, ventured into the B2B market. So how has been the growth trajectory? And if you could share some numbers on how much the segment is growing and how big you would expect this to contribute to your overall sales?
Yes, first you said right, our growth trajectory has been really, really amazing. And we have been contributing to overall IKEA India business with a business share of 15 to 20%. I would not be able to divulge the right numbers here. But yes, as I said, 15 to 20% of our business comes from B2B. And if you look at the last 4 years journey, we have been growing almost double digit every year. And we want to maintain the same momentum.
All right, and with that, we are at the end of this edition of Last Trades, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Thanks for tuning in to India Market Close and pull up the markets on what has arguably turned out to be a reasonably strong day. We are maybe not at the highest point of the day, but stable above this 22,450 odd mark, in or around those levels. We are certainly off from the highs of the day, but that's not to be worried about. And one of the reasons could be that IT's kind of scaled back a little bit from the levels that it was trading at. So 0.5% up now for IT. When we started off, it was about 0.8%, courtesy what Infosys was doing and some others were doing. Banks holding fort, I would say, in or around the levels that they started off with. And more importantly, the small cap end of the market should come up on your screen, because that is where the real crux of the matter is. 2.6% higher. Mid caps and small caps are back with a bang. The market breadth should be positive. It was very high at the start of the trading day. It's largely stayed stable throughout the trading day. That is some solid market breadth in the session today. Bring up the heat map for the Nifty and show you what's moving and what's not. A lot more red than what was on the index, by the way. So the likes of Titan down 1.7%, iShares down 1.6%. Some of the other FMCG names like Nestle as well as Tata Consumer have come under a bit of a stick. So that is the end of the market, which is pulled off. But on the flip side, metals are roaring. The PMI data and the estimates that have come out, whether private survey or the official Chinese data, both have looked strong, as a result of which this 5% uptick that we've seen for some of the metal names. Adani Port, on the higher volumes that it has handled, is up about 2.5% as well, and some of the economy facing stocks, Coal India, NTPC, Ultratech, Adani Enterprises, L&T, that bucket is doing really well for itself. So no surprise that we've done well yet again on the first day, even if we are off from the highs of the day, and that the broader end of the spectrum is just doing exceptionally well in trade. So lots more to talk about at that mid cap and the small cap and Tamanna, even though the large caps too have their share of newsmakers today.
The small cap and the mid cap definitely are, the stars of the day, so to speak. I don't know. I think it is a bit of a positive surprise that you've sustained momentum from the kind of close you saw last week, and all things considered, you've had a great boost to the day. Look at that small cap index up about 2.5%. In fact, let's just pull up sectoral indices as well before I go into specific stocks to give you an idea of what's working. And Neeraj talked about the small caps and mid caps roaring. Look at the realty index up 4% today. Media is doing well. Metals, of course, are shining bright. Pharma, pretty much everything, even in FMCG and auto, are very mildly in the red, if at all. Now, what's really boosting reality, among other things, is definitely Prestige. So let me pull that up as one of the key stocks on my radar this afternoon in trade, and talk about what Prestige is doing. Look at that, about 8% up. And this news actually broke pre-market that they have tied up with a couple of agencies. It's a landmark deal with ADIA, that's the Abu Dhabi Authority, as well as Kotak AI for about 2,000 crores. But that's not all. They're going to build up to 18,000 crores worth of infrastructure and property and buildings, etc., over the next several years in 4 cities. So you've had Prestige run up in that sense. PNB Housing Finance is another one. Definitely, a lot of contenders today for us for stock of the day, to be honest. And Prestige and PNB Housing Finance on top of that list. So they've had credit rating agencies upgrading them, at least their credit but also brokerages upping the target price, which is why you've seen PNB Housing hitting lifetime highs. That stock absolutely flying. Torrent Power was another one that we talked about this morning. So you're seeing order flows once again getting rewarded in that sense. It's a hybrid project. They are doing a 150 megawatt project, and it's solar and wind. 5% up on the stock. It's come off a bit from the day's highest point, but nevertheless, that stock doing well. Neeraj spoke about Adani Ports. They've hit record highs on the highest monthly cargo volumes that they've ever done. But it's not just Adani Ports. Adani Group stocks today have been having a very, very good day at the markets. And of course, all the standard disclosures with that. But Adani Group stocks have been in focus undoubtedly. Aisha is... Again, business updates have not been great. Their March exports are about down 23%. And you saw Tata Motors numbers coming out, and we'll focus a bit on auto sales and what that means. But these are some of the key movers and shakers, I would say, in the markets today. But if I had to sum it up, Neeraj, the day in terms of news belongs to autos, not too positive, but metals very, very positive.
And oh yes, and in fact, let's try and take forward that very particular thing with Hemen Kapadia of KR Choksi Stocks and Securities. He joins us right now on the show. Hemen, great having you as always. Thanks for taking the time out. Let's start off with whether this move today on the index enthuses you to take any further trades for the April series on the Nifty, Nifty Bank, or the Nifty Metal Index.
A very good afternoon to you. Thank you for having me on the show. It's always a pleasure. Frankly speaking, the dollar index is looking good. Crude Brent is going to cross 87 and go to 90, 95. Those are the things spoiling the move. So frankly speaking, gold is on a tear, and silver is on the verge of a breakout. So something will have to give. But like you said, the Nifty Metal Index has given a breakout. In fact, on last trading session of the last week, you had the auto index and you had the capital goods index, which had posted a fresh all-time high. And today, like you said, Neeraj, is the metal index. So frankly speaking, it's a breakout. So a clear breakout, because we've been consolidating over here for almost 4 months, Neeraj. And now we've poked our heads above it on the first day of the new settlement, new financial year, new month, new week. So it looks good. Now, having said that, we've gone from 7550 to 8548 in a matter of 11 trading sessions. Maybe there could be a small cool off, but if I look at it positionally, Tata Steel, Hindustan Copper, JSPL, they all still look good. So I would say that yes, it's a buy, but if this is so exciting on the first day of the week, I'd wait for some sanity to prevail. I believe that 22,526 is the all-time high as far as the Nifty is concerned. And we've tested that 4 times in the last 2 weeks, 2.5 weeks, 3 weeks. So we haven't been able to take that out. I believe we will. So I believe a small consolidation, maybe a day or 2, or maybe even 3-4 hours. And then it takes out 22,526, I believe it will. The VIX is down to 12 from 15 gradually over a period of time. That is good for bulls. So once we take out 22,556, that's on the anvil. We are heading to 22,800. So coming back to the main question, yes, on a decline, I would, at this point, no, because I feel a minor correction is possible on the Nifty. After that, about 22,526 is a clear buy. And Bank Nifty also, but as of now, I think the Nifty looks better as far as the Bank Nifty is concerned. But
right,
the Bank Nifty has done nothing for the past 4 months. If and when that breaks out, we are taking out 50,000, Neeraj.
Okay. Hemen, in light of this, what are the specific stocks that you're recommending for the day?
Okay. Frankly speaking, a lot of stocks. I think some of the cement stocks are oversold. So that is where one could do something. And the entire railway pack, we spoke about it some time back, Neeraj. So whether it's the IRCON or the RailTel or even something like an NHPC, and frankly speaking, you have Adani Power on circuit, which is great. I believe it is breaking out from here. Adani Port is almost at an all-time high. Adani Enterprises is one which has disappointed. About 3350, it will catch up on last time. So I think the entire Adani pack looks good. Railway stocks look good. PSUs look good. And like I said, metals, yes, Jindal Steel and Power, Tata Steel, maybe even a sale. Sale keeps on coming in band, so one would be slightly reticent recommending it. So it's all over the place. Mid cap, small caps have started recovering. So I guess it looks hunky dory as of now. Yeah.
Hemain, you're sounding very positive. Vese, your tone never changes. So it's not like you're jubilant, but I'm listening very closely to what you're saying, and this is the most positive you've sounded in the last several weeks. I don't know if I'm wrong in seeing that or gleaning that from what you're saying. Are you feeling as positive about a Prestige or any of the real estate players?
Well, frankly speaking, yes, Tamanna, you're absolutely right, bang on, because between the mid cap, small cap fell off a cliff. Okay, they don't impact the main line, but mark to market calls, loan against shares, people book the mainline stocks to manage the losses in the mid cap. So, and that punctured the market sentiment badly. So one was not very sure whether the mid cap will go up or the mainline stocks will come down. But the Nifty showed amazing resilience, frankly speaking, Tamanna. So I believe that that is a positive sign. And if on bad times, certain levels have held rather comfortably, and most of the mainline stocks, whether it's Reliance or the Adani Group, or many of them have shown a lot of technical resilience. So I have a feeling that the storm has passed, and we are set to we are heading into fair weather. So yes, I am positive. I would be, and like I said, the market. Basically the market breadth improves. The VIX is down, and you saw decent rollover in many of the stocks. Delivery markings are good. So everything seems to suggest that the correction has ended or is ending, and Nifty is on the verge of a fresh breakout, which will take it to 22,800, 23,300, and at the risk of sounding overly optimistic, before the elections or before the results, not before the elections, somewhere in May to closer to 24. Tamanna.
All right, specific to auto, let's talk about some of the auto players, and their numbers are coming in. We'll talk about that with Hemain in a bit, but we started the question with Prestige, and that is our stock of the day, Prestige Estates. It's up about 8%. Yeah, nearly 8% there as the company enters into a deal with Abu Dhabi Investment Authority and Kotak AIF. That deal is for about 2,000 odd crores, but the plans are much, much larger. Anushi joins us with more details.
As you mentioned, Prestige Estates has been the focus in today's trading session. Now, this is on the back of the news of it signing a deal with ADIA, which is Abu Dhabi Investment Authority, and Kotak AIF for a consideration of up to 2,001 crore. Now, this entails developing greenfield projects with a culminating GDV, that is gross development value of about 18,000 crore across 4 cities, which is Bangalore, Mumbai, Goa, and NCR region. Now, over here, the focus remains in these 4 cities, which is in line with the company's expansion plans. Also, if you look at the company which predominantly has about a southern focus, is now shifting its gears to other cities, the most recent being the Delhi NCR region. Now, even if you look at the past announcement for the company, it also acquired a land parcel of about 62.5 acres in the NCR region, which has for a consideration of up to 468 crore, which again has a GDV potential of up to 10,000 crore, and is expected to launch in the next 2 quarters. So that remains on the focus for the company. Even if you have to look at the company's overall 9-month financial performance also, let's take some of the key triggers, which is its pre-sales collections that has seen up to 81% and 20% of growth respectively in the 9-month FY24 period. Onto the stock performance of the company has seen about a 195%, that is almost about a 2 times returns in this 1-year period itself. While if you have to look at the analyst recommendation for the company, about 15 have a buy rating, while 3 have a hold and 1 have a sell rating on the Prestige Estates. So this is all that has been brewing for the company in today's session, if you have to look at, and the focus continues to remain on how it grows across the different regions going forward.
Yeah, focus back on autos now, and as I mentioned before we went across to Anushi, the Maruti numbers are out. They have recorded highest ever annual domestic sales. I'm talking about Maruti here, of 17.93 lakh units in FY24. Remember, this is the market leader who seems to have had a pretty decent year. It's recorded its highest ever annual exports of 2.83 lakh units as well. Before that, you've seen domestic sales up 15% year on year. Total sales, though, were up 10% year on year. Exports were down 14% year on year, even though the annual exports seem to be decent in terms of number of units, but revenues have come down. All right, let me go across to Hemen on Maruti and others in this pack. Hemen, anything that you like over here? Has been bad for tractors, but would two-wheelers be your preference?
Oh, Tamanna, two-wheelers, yes and no, because if the auto index makes a new high before the rest of the market, I guess everything looks hunky-dory. But Maruti has gone up very sharply. So even like you said, two-wheelers is not a bad idea. Tractors haven't done well, but if I take a slightly longer term point of view, Tamanna, I think Escort looks very interesting. It hasn't done much, less to lose, and I think it has a propensity to surprise on the upside. Mahindra is supplying by. It was doing well, is doing well. Bajaj Auto has gone through the roof, but Maruti and all, I'd be more comfortable if there was a small cool off coming in. That's why I'm trying to take a slightly contra call on something like Escorts, which hasn't done much, Tamanna, and it's been down for 6 months in a row. So if I were to put my money, I would say buy Escorts Kubota. Looks good.
Okay, well, other stocks that are buzzing in trade because of some approvals that have come in, there are some price hikes as well. Mihika joins in with some of the other key focus stocks today, more so at the small cap end. Mihika.
Yes. So up first we have KPI Green Energy. It hit an upper circuit of 5%. That's multiple news flows. One is that it has received CEIG approval, which is required for any electrical installation. One is for 10 megawatts of solar power projects under the independent power producer segment, means that the company will be designing and building and operating on its own. And then it's also received an aggregate of 54.74 megawatts of solar power projects, under which 6.59 megawatts are under the independent producer segment, while 48.15 is under the CPP, which is the captive power producer, where the company builds and operates for another individual customer. Additionally, its subsidiary Sundrops Energy has also won an order of 2.6 megawatt power solar project, and the order win is again under the captive power producer segment. Then we have EIH. It reached an intraday high of 7.7% as the company's board approved the construction of an Oberoi luxury resort, which will be located in South Goa on a 52-acre site. Now, the resort will have luxury 90 rooms, and the investment required for the same is at 421 crores, which would be funded by internal accruals as well as debt. And the resort will be operational from October 1st of 2027. And lastly, we have MOIL, which also reached an intraday high of 7.7%. Now, it's hiked prices for their ferro-grade manganese ore in the range of 3 to 6% depending on the grade, and have also hiked the fine and chemical grades by 3%, and the hike prices for electrolytic manganese dioxide by 2,000 PMT rupees, and this will be valid for only April, and all the price hikes were effective from April 1st. What the price hikes do mean for the company is higher revenues.
Okay. Mihika, thanks for that. Well, a lot of stocks flying around as we spoke about. Let's take a break though. And stick around. We'll delve deeper into today's market movement, even try and get you a global perspective on the other side. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Back with India market close, and the broader end of the spectrum is doing really well for itself, so keep that in mind. But as we said, we'll give you some global opinion too. I spoke to Robert Sokin of Citi Research on his outlook on global growth with the emphasis on what's happening in US and Europe, and his view on what India GDP is looking like. Listen into this conversation.
Going into this year, we were expecting a pretty substantial slowdown in the global economy. The reasons for that are interest rates still remain high, and we see a lot of lagged effects of that in the system. Fiscal policies likely be less supportive than last year. The momentum within services sectors that we saw power growth last year, we think is fading, and the manufacturing sector was likely to remain soft. But now that being said, what we found is that even though we're still holding on to that view that growth is likely to slow, we've been marking up our global forecast over the last few months. The US has been holding up better than expected, as you noted. We've marked up the euro area over the last 2 months, still looking for soft growth there, but better than we had expected a few months ago. And then if you look at the range of emerging markets, there's a lot of positive news there as well. We just marked up our growth forecast for China from 4.6% to 5%. Korea, a lot of other East Asian economies are showing strong momentum as well. And India closed last year very strongly, and we're looking for a solid year of growth in India for 2024. So even though all those reasons lead us to believe that growth is likely to slow, I have to admit that over the last few months, we've been surprised to the upside, as Q1 data have generally come in better than we've expected.
Would this therefore lead to a slightly higher inflation expectation than otherwise believed? And could therefore the global asset uptake party be disrupted by slower and lower, or both, action from the Fed or the other global central banks on interest rates?
Absolutely. And this is the key question, because as you said, growth has been surprising to the upside. That might also mean that inflation surprises to the upside. And we've seen a fairly mixed inflation picture at the beginning of the year. Now, there's a lot of seasonal volatility issues to deal with in the data, but in general, you're still seeing fairly high services inflation in most major economies around the world. And that's really the key, is can you get services inflation to come down without a bigger slowdown in growth? If you can't, and the history would say it'd be very difficult, then, as you said, this resilience in growth may mean resilience in labor markets and services inflation. And that in turn would probably mean a slower pace of easing from major central banks. Now, that doesn't mean that you can't, this time couldn't be different, and you could get inflation coming down with growth being resilient. We're seeing a lot of improvement on the supply side of the economy. As supply chain pressures have unwound, labor markets are healing. So you still may be able to get that services inflation down without a big cost of growth. But I think that's the big question mark for markets and central banks. And if you're in that world where growth is resilient, but inflation is also coming down slower, that means you're going to get less cuts out of the Fed this year. And that means you're going to get less cuts out of other central banks as well.
So what does that mean, Robert? I'm very inclined to understand from you. What does all of this mean for flows? Hitherto, I've been given a barrage of opinion that unless China growth picks up, flows into EMs will not pick up as well. Now, contrast that with the fact that China growth is picking up, but if the world growth is picking up and if inflation is higher and rates cuts are slower, that may have an impact on flows as well into emerging markets. So how do these two juxtapose in terms of what happens to asset classes by virtue of flows as well as natural valuations because of growth?
Yeah, it's a great question. And I would say, to your second point about natural valuations, this would be a broadly positive story in general if the global economy was able to weather the amount of shocks that it's seen and continue to perform at a strong pace. So I think, that's first and foremost would be good for asset classes more broadly, and risk as the global economy can continue to perform at the solid pace we saw last year. Now, to your point about EM versus DM flows, I think it raises a really critical issue, which is, you've seen emerging markets in this cycle. They hiked a lot earlier, their central banks, and they started to cut earlier as well in some of them, and we expect more to follow. But now you're getting to a point in those easing cycles where it really depends on what the Federal Reserve and other major DM central banks are doing in terms of the amount of easing and the speed of easing that those central banks are able to do. So, if we're in a world that we think where growth slows and the Fed starts cutting around June and continues to cut from that pace, I think that emerging markets can continue to ease policy, and you could still see a fair amount of flows into emerging markets. But it's this nexus of when do DM central banks move and what does that mean for EM that comes down to the extent of these flows and how fast those EM central banks are able to move. So I think it really comes back to, as you were saying, what happens with the inflation picture and how fast are central banks able to ease.
My final question is on India. I heard you say that India, on the base of a very strong growth done last year, you still penciling in strong growth. How resilient to your mind is the EM and the India economy looking? Because Korea has tailwinds because of the whole semiconductor manufacturing and otherwise.
Yes.
China, I've just heard you up this. India is not coming off a low base. So what's your sense about growth in India and whether it can, earlier it was the beacon in a world which was not growing strongly. Can it still lead the growth where growth worldwide is coming back?
Yeah, I think with India, we're looking for growth for this calendar year, somewhere in the mid 6% range, around 6.5%, very solid performance, a little bit of a slowdown from last year, but still very strong. And I think, as you said, what is the tailwind for that economy? As you mentioned, Korea has a rebound in semiconductor demand, but more broadly, I think something India is benefiting from, and you're seeing this in other East Asian and Latin American economies as well, is you are seeing a shift in global production away from China at the margin and to other economies in the world. I think India is a big beneficiary of that and will be going forward. I think other countries in East Asia and Latin America are as well. So I think that's something that's helping now and is going to be a powerful tailwind for India going forward. Then more broadly, there are other factors that we could point to that maybe argue there's some upside for India growth. Right now, as I said, we think the global manufacturing cycle is likely to stay soft for at least a while longer. But there have been some good green shoots where you've seen the manufacturing PMIs moving up around the world. So maybe if the global economy recovers more strongly, that would have a lot of export benefit to India. So I think there are a lot of benefits to India this year and next year, and some potential upside even if the global economy recovers more strongly.
And that would be music to the ears for sure. Upsides if the global economy recovers. So there are, while there may not be rate cuts, there are some positives out of a global economic recovery as well. As we speak, the markets are doing well for themselves, but off the highs of the day, just about 0.45% higher. We dissect the last half an hour of trade with some derivative data, some key stocks to monitor today, some BTST ideas, and get a fundamental guest as well. All of that happening on the other side of this very quick break. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap.
Welcome back. Markets in completely, holding on to their turf. Nifty, though, off its day's highs, about 22,460. Remember, it touched 22,500 and receded. But business updates have started coming in from NMDC. Iron ore sales have been good year on year. Q4 has been a bit tepid, but that stock definitely up. This coming in from Informist right now, 5.5% there. But a lot more happening on the derivative side of things. Agam is standing by to break it all down. Agam.
Right. Well, we briefly hit the life high on the Nifty today. And while we've come off the mark, we're seeing the Nifty maintain the gains. And along with that, well, there has been a lot of traction towards a decline in open interest as far as the Nifty futures are concerned. And once again, where we are seeing a little bit of a resistance when it comes to trades being taken forward into the next, well, perhaps a couple of weeks. That said, when it comes to the Bank Nifty as well, the picture isn't very different. In fact, this is where we are seeing a very sharp knock of around 40% in terms of its open interest. So, and even as the index continues to rise by around 0.9% and advances, so there's a lot of shorts, older shorts being covered here as well. Well, moving on to the options market, at the moment, considering we have seen the markets move higher, which also means that we've seen a little bit more writing around puts. But in terms of your overall open interest distribution, let's pull that up. And we're still looking at a 500-point range. Of course, the Nifty is going to defend the 22,000 mark on the lower end, and on the higher end, we could see just a tad bit of resistance now starting to build around 22,600 and 22,700. So keep an eye on that one. Let's move on and talk about stocks. Of course, we have longs in Hindustan Copper, a strong up move, 10%. In fact, locked in at upper FNO circuit of 10% at the moment. We have seen advances for ICICI Prudential, SRF, as well as Ramco Cement, all of them looking at longs. Coforge looking at a very bit of marginal decline in underlying, so I wouldn't necessarily call it shorts. But as far as the other stocks in terms of unwinding is concerned, we're once again seeing a lot of short covering in your Adani Group company stocks like Adani Enterprises and Adani Ports. Tata Steel, MCX and Metropolis also doing well in today's day of trade. Overall, it's turning out to be a good start to the trading year.
Absolutely. Thank you for that, Agam. It is a good start and, pretty much most sectors are up in the green, but specifically I would say metals having a superb day. Hemang Jani now joins us in the conversation, market expert. Hemang, great to have you on. We're just going through what could be the biggest factors and how sustainable is this sort of up move that we're seeing. Would you say that metals, especially copper, counters like Hindustan Copper will be on your radar?
I think the overall market is showing a lot of resilience. Remember, on Thursday expiry day, we had a big spike and a little bit of cool off, but today it kind of opened gap up and the good thing about the market is that the breadth of the market in terms of participation from the broader market is extremely good, and it is supported by reasonably good volumes. Now, coming to metals, I think given the positive data that we had from China about the economic expansion and the manufacturing PMI being better than the market expectation is helping the sentiment. And within the metal pack, we like three stocks. One is Jindal Steel and Power. The other one is Tata Steel, and the third one is Hindustan Copper. So we think that one can really participate in these three names for another maybe 7 to 10% kind of an upside.
All right, Hindustan Copper definitely on that list. Hemen, do you track Hindustan Copper? Would you still look at it at these levels?
Absolutely, Tamanna. In fact, Hindustan Copper is one of the stronger stocks in the metal sector. We are in a short-term, medium-term, long-term uptrend. We're currently at 307, Tamanna. Over the long term, the stock is going to go to 500 plus. But even now, we've been in this range for what? For the past three months or so, Tamanna. Between 232 on the downside and 305 on the upside. And we are on the cusp. I'm saying cusp because this is not Friday. This is the first day of the week. It's a weekly pattern. But we are on the cusp of breaking out from here. I mean, this breakout looks like coming in. And once this breakout formally comes in, another 15% from here seems to be on the horizon, Taman.
Hemang, the point or the big cause of the rally in steel and copper stocks is a better than expected PMI in China and a China recovery story that is now beginning to pick up steam. I'm trying to understand what would be the other plays on that specific story apart from what we've seen today at JSW, although other reasons as well, Tata Steel, all of these players have been doing well. But where do you see that going?
Really, the steel and even copper, aluminum names are the ones which will have some sort of a positive rub-off of that data point. And in fact, given the fact that the Fed is going to be basically starting to cut down, and you're seeing the gold and silver trading at very high levels, there's a sense that the entire commodity space will continue to do well. So within the entire space, we like Coal India, which has been one of the best performing stocks. Apart from that, some of the ancillary power stocks. So, like say for example, Godavari Power, which is also into power, merchant power. I think these are some of the names which would benefit because of the better sentiment towards the commodity space.
Okay, so that's one view on some of the high-flying pockets. Now, we bring the focus back to autos. Remember, we started talking about autos and how some of the stocks have done. Now, let's talk about the fundamental reasons for some of these stocks to be active today, and that is the monthly sales numbers. So, 4 or 5 companies have come out with numbers thus far, the March auto sales, that is. Puneet, my colleague, joins in to break it down for us as to who's done well and who's not relative to estimates. Puneet, good afternoon.
Hi Neeraj, good afternoon. And as you rightly said, post 2 o'clock, we've seen a lot of results for the monthly numbers come in. Let's start with Maruti now. We did flash numbers. Total sales are 1.87 lakh units, which is up roughly 10%. We're also seeing that it is just a tad below expectation of roughly 12% growth. For exports, the results are around roughly 14%, and it's versus expectation of roughly 10 to 11% by brokerages. Although there are a couple of mentions about Maruti that it has record highest ever domestic sales of roughly 17.9 lakhs, and on an overall basis, it has crossed 21 lakh sales in a financial year. And those numbers are reflecting in the stock price as well. Stock is up roughly 20% from January year to date. Moving on to Tata Motors, on an overall basis, the sales are up just 2% versus expectation of roughly 5%. The PV sales have been one of the key main drivers of sales, for roughly 50,000 sold in this month, which is up 14%, just a tad below the 16% expectation by brokerages. While the CV sales have not done well, they are down 10%. And here is the main thing, because the expectation was roughly 6 to 7%. So it has fallen a bit more than the expectations from certain analysts. Moving on to Eicher Motors, the Royal Enfield maker has reported sales of roughly 75,500. It is up roughly 4.6% versus expectations of roughly 7% growth. So that's a tad negative for that. While exports have been down roughly 23%, and this is also similar to Tata Motors CV also suffering. For VECV, which is the commercial vehicle arm of Eicher, this has been a positive surprise. VECV sales are down 5.6%, whereas brokerages estimated it to be down more than 9%. So that's one of the key triggers. Domestic CV sales down 6% versus expectation of roughly 12%. And although exports are very small, roughly 400 odd units of the total sold, they are up 11%, while brokerages has estimated a fall in this for roughly 2%. M&M we covered in the morning, but just quickly going through the numbers, total sales are up roughly 4%, and this is roughly 10% below the estimates from brokerages. Three-wheeler sales are the ones which are affected. It is down 7% versus a 7% growth estimated from brokerages. While tractor sales have been one of the key problems for the whole financial year for M&M as well as for Escorts. Tractor sales are down 26% on a month-on-month basis compared to last year as well, while the expectation were of a 16% fall. So that's also a key negative. And finally, finishing off with Escorts, tractor sales not doing very well. The total sales are down roughly 16%, which is flat in line with expectation. But domestic sales are down roughly 16%, while exports are down 24%, while on a very smaller base, versus an expectation of roughly 14%. So in all, PV sales have done well for all automakers. We still await numbers from TVS and Bajaj to compare it with Eicher, but commercial vehicles and tractors have been key problems, while PV has done well. Back to you.
Okay, PV has done well, and two-wheelers are supposed to do much better. Let's see how the eventual numbers shape up to be. Hemang, anything that stood out for you from these monthly auto sales numbers? Good afternoon, Neeraj here.
Yeah, hi Neeraj. So I would not be very comfortable playing auto names purely on the basis of monthly sales. But considering the possibility of a very attractive GST rate for hybrid vehicles and the quarterly numbers, I would be more comfortable buying into a Maruti. Also, some of the two-wheeler companies, particularly Bajaj Auto, Hero Motor, these two names, from a quarterly results perspective, we think that they are better placed. So if we see any small correction because of these monthly numbers not being so good, I would use that as a entry point for buying those names for quarterly results play.
What would be your key picks there, Hemang? The ones that you would buy for a quarterly result play?
So we like Maruti mainly because of the GST related benefit for the hybrid vehicles and quarterly numbers. Also, we like Hero Motors and Bajaj purely from a quarterly results perspective.
Hemang, anything you want to add? I know you said Maruti and the levels run up makes you a little uncomfortable right now. But any of the other players that you would look at?
Yes, I'd go for a contra buy call on exports Kubota, Tamanna, because hasn't done much. We've been down for almost 6 months. Downside limited, positive divergence seems to be turning. So I would tractors numbers haven't been exactly great, but I would say Escorts is looking positively interesting, Tamanna.
It's interesting. If you look at the overview on the auto numbers, it's actually your two-wheelers are still trying to come up to pre-pandemic levels. And I think there's a larger story over there that we should look at about why just specific segments of passenger vehicles are also doing well. Your SUVs, your more premium cars or your more premium vehicles, which is the case on a lot of these players. So an interesting story there. But PNB Housing is another one that we have our eye on, isn't it, Neeraj? What a stellar run-up.
Yeah, this is stuff that dreams are made of. 18% higher for PNB Housing Finance today. And two reasons, both reasons woven with each other. There is a Morgan Stanley note which has come out and said that because the credit ratings have been revised by CARE Ratings to AA plus stable from AA negative, both CARE and ICRA, to be honest, and therefore they see that as a constructive thing. But just the way PNB Housing did well, it started off 3.5% higher. It's ending the day 18% higher. It's just the kind of move that makes one stand up and take note.
That you dream about.
Yes, because
you dream about a stock price moving up 20% higher.
I dream about a stock price not starting off 20% higher and not giving chance to investors to get in.
Yeah.
It starts off 3% higher, people can analyze, people have the time, they can put in their money to work if they believe in that, and it trends higher and ends the day at the highest point of the day. It's such a beautiful chart.
Well, that is definitely a very specific dream, which PNB Housing is, reading out today. But also what I find interesting is that once again, slow and steady and quietly how it's this particular brand and this company has built up its space. So on a day when, or at a time when others in the HFC space or BFSI space are doing okay. They've not like lit it out all on fire. Quick word from Hemang on PNB Housing if you're tracking it.
PNB Housing in particular we don't cover, but if you see last few days, there are certain initiating coverage reports on the housing finance names, and we think that this quarterly numbers are going to be quite good. Also, typically in an election year, people do expect that housing stocks will do well, and real estate anyways has been doing so well across, right? So I think within the universe, LIC housing is something that we like. Apart from that, Aavas is something that we feel is extremely well placed. So some of these names I think it would be good to have in the portfolio.
Interesting point that you made there. Why do housing stocks do well or housing companies do well in an election year?
So typically there is a certain degree of excitement and expectation that you would see some positives in terms of either interest subvention, affordable housing related things. Once the government is announced, of course, this is a cool-off period, so you would not see any specific announcements as such. But people do have expectation that if, let's say, a certain government is formed, then probably you will see some, incentives relating to housing because that will become a big theme. Also, budget, as we all know, will be presented post the formation of the government, and typically people do have expectations around housing. So, which is why I think the sector remains in limelight.
PNB Housing anyway has its own story going on. Real estate overall has its own story going on. Quick word from Hemin on PNB Housing at these levels. If you have lived that dream that Neeraj has so, described in such lovely detail, would you now wake up and smell the coffee and make some of that money, exit at this point, or at least take some of those profits off the table?
Well, no compelling reason to do that, Tamanna, because highest single day volume since 2nd January 2023, more than 90 lakh shares. We'd have to wait for the delivery marking to come through at the end of the day. So it is the highest volume in almost 1 year, 3 months. Something is cooking and something good seems to be cooking. So I'd wait. Okay, I don't think this will be followed up. Or I think it would be unreasonable to expect to see another such a move coming in next day. But everything seems to suggest that we were off from a 3-month decline. We've taken support at an important level. So I'd say wait. I'm not sure if buying fresh is a good idea, but if I have a position, I see no reason to sell. I believe this could be a potential turnaround. And if maybe I'm jumping the gun, but if I think what it is, I think this is probably the beginning of something more.
It's definitely the beginning of an exciting day or end of an exciting day, 20% up now on PNB Housing. I quickly just want to pull up the intraday chart for BEL. Their business updates have come in and they've registered the highest ever turnover of 19,700 crores in FY24. A few of those business updates have begun trickling in for the whole financial year, and I keep seeing this highest ever, largest ever. So yeah, maybe that's part of it. That's how you compose those drafts. But
and here's what will happen, Tamanna. We'll see a business update. then we'll see an actual update.
Yeah.
Between those, we'll see the analyst estimate for what will happen in the quarter and then the year ahead. And we'll all be scratching our heads as to how many times we'll be, in a month, we'll be talking about the same stock.
Well, BEL deserves at least a bit of a mention right now. Just let's look at that intraday chart and how that stock is doing. And not bad. That business update is helping it right now. Order book stands at 76,000 crore rupees. But there's another stock that we have in focus, and Madhu Kela has bought a stake in this NBFC stock. Harsh is here to tell us more.
Well, yes, Tamanna, it's a systematically important NBFC, basically assets under management over 500 crore. And we're going to talk about Indostar Capital today. Now, quickly taking it to the company itself, it's transitioned from a lender which was into corporate lending, incorporated in 2009, but outside of that, it's transitioned since 2018 from a corporate lender more towards a retail lender. And we'll see the book in just about a bit. There you go, 74% was corporate in FY18, now just about 5% corporate, and they're selling down fast, especially in corporate. Also, they had a chunk in MSME, the MSME lending that they had, and as the book comes up on your screen, you'll notice even that has tapered. Currently has presence in 493 branches, has around 3,700 employees, and is shifting steadily towards retail, largely CV and housing. Now, you look at the book itself, SME currently at 9%, that is also starting to come off. They were doing SME lending of over 1 crore, which now it seems they're not liking as much, so they're running this portfolio down as well. What they're moving more towards is the smaller SME lending, something in the ticket size of 15 lakhs, which is quite small in comparison to what they were doing earlier, less chunky and therefore less risky to a certain extent. What they've done with regard to NII, therefore, it seems like a turnaround story. NII is actually coming off before it hopefully goes back up. That's the current trend in NII. If we look at operating profit as well, very similar trend, but when you look at profit after tax, you'll see a slightly different trend, and we'll come to the reason why. Your PAT seems to have gotten better FY22 versus FY23, and 9-month FY24 also not looking as bad. It's a profitable NBFC now. It's also because of credit costs. Credit costs have come off quite sharply. At 1,000 crore plus is that credit cost number in FY22, which was hurting PAT. Now credit costs has gone into the negative zone, and they have SRs on their book as well, which they are liquidating. SRs are largely assets which are sold to other lenders, and now recoveries for that is starting to trickle through. Look at the asset quality, and that will suggest 9% to now 6.5% in the last 12 months is how GNPAs have progressed. NNPAs to very similar trajectory, 4% plus was the NNPA number last year, currently sitting at 2.8%. So your asset quality is getting better, and which is why there's possibly some interest in this. Let's also quickly flip it around, look at the kind of opportunity lying ahead. Their housing finance book is growing at 25%. Capital adequacy is very solid currently at 30%. Net worth of roughly 3,200 odd crore on a book size of around 8,000 crore, which is very, very safe. So your debt to equity is quite low at the moment. There is scope for further expansion of this, and therefore ROEs will improve if this were to happen as your debt to equity starts to go up. This is how it's currently valued, around 0.8 to 0.9 times price to book, which is reasonable, which is possibly why there is so much interest in this one. Let's look at shareholders very quickly. We already have something like a Brookfield, which owns around a 50+% stake in the company, but you have Madhu Kela, who already owns roughly 3.5%, increased his stake by another 0.5% or so. So he's inching his stake up, it seems. But let's look at some of the other shareholders. We spoke of Brookfield, 56% holding, and they're going to buy another 450 crore through warrants as well. So there's a fresh infusion which is to happen at 184 rupees a share. That's the key. And now Madhu Kela has again bought around 7.6 lakh shares, roughly 0.6% of capital at 186 rupees per share.
Well, Harsh, that's detailed work. Thanks for doing that. And Indostar Capital is certainly in focus today, not as strong as PNB Housing, but can't be because it's got a 5% upper circuit, of course. Hemang, do you track this one fundamentally?
This company used to have its own sort of issues, and there was a sense that maybe the fresh capital infusion will bring certain amount of stability, but I tend to avoid the smaller NBFCs where the historical track record has not been that great. I think that there are plenty of decent opportunities in the NBFC space itself if one wants to really look at it.
5% higher though. The volumes are not as thick as you can see. It's about, on the NSE, it's about 27 or 28,000, 29,000 shares traded. So the volume's not necessarily the highest, but must say, I mean, the total number of buyers on the BSE alone seem to suggest that the circuit limits or this momentum might last for the stock tomorrow as well. But it's 5 minutes left for close. Hemen, if we had to ask you for the one top BTST, I'm presuming it will be a BTST, not STBT, which would that stock be?
Yes, Neeraj, BTST on UPL.
United Phosphorus.
Yeah, it's 466. One can buy at 466, stop loss for 61, target 476, the risk reward ratio 1:2.
Okay, so that's the disclosure. And Hemen, just one quick word. You were consistently very bullish on Adani Enterprises. It's after a while that we're seeing, I mean, the whole group has done well, but Enterprises has also moved up a little bit. Is it a good time to buy this stock afresh, or would you look at other names?
I think it's a chance to buy, Neeraj. Frankly speaking, it's flummoxing that it hasn't moved. There is nothing wrong with the stock. It looks good. And I mean, look at Adani Port, look at Adani Power. I mean, many of the Adani Group stocks have done well. Why won't Adani Enterprise? I think it's just a matter of time. But when it plays catch up, and this catch up will happen on a close above, Neeraj, the level is 3350. We are at currently 3249. We are 100 points away. A weekly close about 3350. This last happened in January 23 when it was above this. So when we take out 3350, we will go to 3600 and 3885. So I think there's not much to lose. I would buy at these levels.
Okay. All right. Yeah. So just one last take on a Torrent Power, if you have been tracking it, because that's one stock that we didn't talk about today and has had a good day throughout. Hemen, just a quick take from you.
That's for me, right?
Hemen Kapade.
Okay.
It's a 1.5 year up move, Tamanna. Short term, medium to long term, uptrend on all counts. Looks good. Fresh buy? Don't think so. Hold strong.
Ma'am, what about you?
Well, I think the reason why you're seeing such a strong action in Torrent Power is because of the high probability of inclusion in MSCI. Also, it's a relatively illiquid stock. So when you see good amount of buy flows because of the possibility of inclusion in MSCI, you tend to see bigger price action. Also, you can see that typically some of the power names are in action, be it Adani Power and whole host of names. Tata Power also has been doing relatively well. So that theme is something that people have been liking. But the reason is because of the MSCI inclusion power.
Hemang and Hemen, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time. Just keep in mind, the other aspect is that the kind of power wins or order wins that Torrent Power is bagging these days is something that it's an addition to the equity it did have. And I think that is the other reason why the market seems to be rewarding it quite graciously every time it has won these orders. So if you look at the YTD chart of Torrent Power, it'll show you a story which is quite stunning. Amongst all the power names, Torrent is probably the one that has gained the most YTD. So bear that in mind. 52% YTD. It's been a really strong move. Okay, now let's get quickly the heat map up on the screen for the Nifty 50, because we've done well today, you have to admit, despite the fact that we're still ending about 0.6% higher, so not at the lowest point of the day. And while there are losers, specific losers, iShares weak data, Titan correcting a little bit, FMCG pulling back a little bit despite the fact that they did well on Thursday, I think there is enough winners out there to end the day on a good note. one of the probable reasons why divvies would be up about 3.5–4% is because of the Suven Pharma commentary around CDMO and what could come out for CDMO players over the course of the next couple of quarters. So, which is why I think the likes of divvies, Laurus, etc. have done well. But the showstoppers, metals, in terms of percentage gains, HDFC and some of the others have done exceptionally well. But Tamanna, I have to cede it to you that the broader end of the spectrum has done much better than the large caps. So in some sense,
absolutely.
that takes the cake.
You know, the whole story about how this will be the year of the large caps and mid cap and small cap, despite everything that happened from SEBI, mutual funds, etc., they've bounced back and bounced back well. Look at the small cap index, up about 3% there at close. We should quickly also pull up the sectoral indices to give you an idea of where really the boost is coming from, and completely media, reality. Those are the counters which are doing very well. But in terms of weightage and actual heft, I think metals and public sector enterprises would be more on that end. Some sparklers today that we've been talking about since morning, PNB Housing, one of them, and definitely an exciting story. I want to see if it ended 20% up. Yeah, it has. That MS note, its credit rating going up, and like our experts also said, this might be the start of something bigger, a bigger turnaround story, which it would be interesting if investors would catch it at the right time.
Yeah, that and lots of others. Of course, the markets have shut, the broader end of the spectrum doing much better. Yeah. And we'll carry forward, I think, this note tomorrow on India Market Open. We'll try and talk about some of the winners for today. But for now, from Tamanna and me and the team that put this show together, thanks so much for tuning in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company.
Thanks for tuning in to Talking Point. I'm your host, Neeraj Shah. Our guest today is one of the largest, even the CIO of one of the largest equity AMCs, and that's Mahesh Patil. He's CIO of Aditya Birla Sun Life AMC, joins us right now on the show on the first day of the new financial year, on a day when the markets have started off really well. Mahesh, great having you. Thanks so much for joining in. Good morning to you. And is this, I mean, we hit new highs today as well, amidst all the talk of higher valuations, growth concerns, so on and so forth, which have existed for the last couple of months. This market is made in a habit of climbing the walls of worries as they come in. Are you surprised by this up move, or were you always constructive?
Yeah, good morning, Neeraj. And yeah, I think you're right. I think the markets, I mean, there was some amount of correction phase which was there, right, in the last couple of months. And while I think we were still positive on the market, we're still positive on the market, and we think that the market will continue to scale new highs in this calendar year. Our view was more on the large cap space. On the Nifty, we didn't see Nifty correcting much because while the valuations in the broader market, you can say, is slightly ahead. But if you look at the Nifty, there the earnings growth, what we have seen in the last 2-3 years, okay, is in line with the kind of returns what you've seen. If you look at last 3-year Nifty CAGR returns and the earning, they are in line or slightly only ahead. The returns are higher. So I think the actual large cap space is only marginally expensive, and on overall the outlook there going forward also into this fiscal year as we go in is fairly decent, right? While the strong earnings growth what we have seen in the last 2-3 years that is likely to moderate down, but it will still be in the double digits or the low teens or so. And so I think given that, I think the market would continue to do well. Obviously, having run up so much last year, especially in the mid cap and small cap space, I mean, there was a need for some correction. And that's what we were getting into that phase. But I think market seems to have now kind of, again, taken some support and bounced back from those levels. Having said that, I think one would still be cautious a bit in terms of the broader breadth of the market, right? Because that is likely to slightly weaken as we move forward, because the money flow which was coming in, say in the mid cap and small cap, could probably slow down a bit, and if there is any kind of a global markets have also been climbing the wall of worry, you can say, right? Despite concerns about US recession, slowdown in growth, global markets are strong. But if at all we see some weakness over there, I think you will see our markets also possibly reacting to that. But by and large, I think we've remained constructive on the market still. I think we don't see any major big drawdowns in the market. A mild correction or a consolidation phase is what I think one should expect in the near term.
Mahesh, I heard you say that the flows toward the small caps, mid caps may go down a little bit. Are you seeing signs of that? Part one. And part two, would that lead to a, could that, or rather not would, but could that lead to a corrective move, or would you reckon the small caps can, time correct, if you will, because earnings growth momentum might still continue to be strong? Because we were looking at data since March 2020, the earnings growth at the small cap end of the market has been very, very strong.
Yeah, so I think there has been only a slight slowdown in terms of the inflows into the mid and small cap. We're seeing some tilt towards now moving into the large cap and the flexi cap category. But still, I think the overall flows in the mid cap is still fairly decent. So it's not likely you will see a major kind of drawdown or sell off in the small and mid cap space. You are right to say that this is not a scenario where we are seeing what happened in 2018, right? Where we saw the mid caps, there was a sharp correction also, and there was earnings impact also, which was there. I think this time around, it's the only difference is that as rightly said, the earnings growth is still fairly good, and we think that the mid and small cap also will continue to show reasonably good earnings growth. A lot of the sectors which are where the mid and small caps are there on the domestic side, I think should see decent growth. Even sectors which have seen some slowdown in the consumer discretionary side or the consumer side, I think that could also improve going forward. So in this scenario, I would say that these over valuation in certain pockets in the middle, that needs to be some correction. You might see a time correction or even a mild correction over there. But I mean, someone with a longer term view, with the next, say, 3-5 year view, I think mid and small cap can still do reasonably well and can possibly on a risk adjusted basis give similar returns. So I think it's more of a consolidation, you can say, a sideways correction or a mild correction rather than a deep correction, what one be expecting in the mid and small cap. And again, the flows there are not really turned anything negative. They're only moderated down in terms of the large flows. The skewness, what we saw last year, I think is likely to slow down.
Mahesh, if you were not, I mean, if as a mutual fund CIO, your primary objective would be to beat the benchmarks as well. And in some sense, it's very difficult to go completely astray from what weightages might be there, I presume, on the markets. And that's why my question comes in, that would you be constructive on large private banks at the current scenario, not from a weightages perspective, but purely from an earnings and evaluation perspective? Or would you want to distribute that money into other assets if the weightage issues would not hold you back?
So, I mean, if your question is about whether we are positive on the bank sector or whether it'll be overweighted, that's the what you're driving at. I would say that to some extent, I think clearly the large private banks have underperformed, right, relatively vis-a-vis the broader market, and clearly that's one space where I would say the valuations are more reasonable. Again, if you compare vis-a-vis some of their historical value, they'll be closer to that. Or in some of the cases, even it's slightly lower than that. And overall outlook in this sector also is fairly steady. I mean, credit growth could slow down a bit because deposit growth is still a bit of a challenge. But overall, ROAs and the ROEs are fairly healthy. So I would say that, these and there's some of the large private banks look interesting to us at this point in time where the risk reward looks reasonably good. And this is a time where, as I said, we don't want to chase momentum. And last year was a year where we chased momentum, high growth, or even to that extent, market rewarded risk taking. I think going forward, I think one should be slightly, as I said, cautious. We need to kind of curtail risk in the portfolio. And to that extent, I think some of the large private banks provide that opportunity where there is reasonable margin of safety and possibly steady growth. I mean, it may not be very exciting, but we don't see any kind of a concern on the asset quality, which could really impair the earnings outlook. So, I think could be a kind of a counter-cyclical call which can take on the private banks.
Okay, and Mahesh, I'm just extending that argument a bit, or extending that conversation about banks, since we've started on themes now, to the PSUs as well. Long argued to be untouchables, they've proven to be wealth creators since COVID numbers, right, relative to private banks as well. And now the only argument that now starts to come in that the valuations are no longer as cheap as they used to be, and they aren't. But bulls argue that even if the valuations are not as cheap as they used to be, they're still reasonably valued, particularly the larger ones in some fashion. I would love to understand, are you constructive on PSU banks at the current valuations from a, say, 1, 2, 3 year perspective?
So I think the PSU banks definitely last year have significantly outperformed the private banks. Again, as you rightly said, there was a valuation catch-up which was there. And obviously, the earnings growth also was fairly strong. I mean, they've benefited from not only NIM expansion, but also significant lower credit costs, and to some extent also recoveries, right, from their earlier write-off loans. So that led to a very strong earnings growth. I think that will definitely moderate down in this fiscal year, right, in FY25, where the whole benefit of lower credit cost is there in the base now. And so we think that now incrementally here, even the re-rating, what we've seen in the PSU banks, they are under kind of valuation which was there, that has also got corrected. So it will be now more stock specific. I would say from here on, I mean, as I said, we still remain constructive on a few private sector in the PSU banks, which can continue to, which are fairly well capitalized as the most important thing, and which can continue to exhibit reasonably good asset quality, and obviously a strong deposit franchise. So we still not, I mean, as I said, the large underperformance or the large valuation gap between private banks and the PSU bank, I think that is behind us. Now it will be more driven by individual banks, be it private banks or PSU banks. How do they deliver on the earnings side, asset quality side, credit growth side? I think that will determine the kind of a relative outperformance over there. So I mean, to sum it up, I would say that selectively, I think one would now, the macro trade in PSU banks probably is behind us. It will be more stock specific going forward.
Okay. And before we take that break, a question on the macros, Mahesh. There's a Nomura note today, there's a Citi note today, all of which talk about a likely CAD surplus, current account deficit surplus number for Q4. And while it may not extend itself into FY25, but it may still remain within a 1% number in terms of a deficit. Now, how enthused are you with such a development, considering that just 10 years ago, 11 years ago, we looked at numbers which were abysmal, so to say, from there to have come to these numbers? And what are the implications of this, Mahesh, from an investing perspective?
Yeah, so I think clearly the couple of things which have happened, right, structurally, I think, which is leading to a kind of a reasonable or a lower CAD number. See, one is, I mean, obviously, if there is a domestic slowdown, right, your growth slows down, your imports slow down, then your CAD number goes down. But that's not a healthy way of, I mean, one is not too enthused by that, right? But I think what we've seen is that the reduction in CAD is primarily driven by on the export side. On the services exports, we've seen a very strong growth. Again, it's not only the IT services. In fact, IT services have slightly slowed down, but other services which are there, which have, like, for example, the outsourcing work, okay, which is being done in the other industries. There are a lot of GCCs which are being opened up in India, which is the global competence centers by global MNCs, trying to outsource their back-end operations from India. That has seen a very strong, in fact, that amount will, in the next couple of years, 2-3 years, can be equal to what we've seen in the IT services. So that really provides a strong kind of support to reducing the CAD. And also, I think what we are now embarking on a journey where we are trying to reduce our dependence on imports, right? Especially in the whole electronic side and consumer durable side, which has been kind of increasing steadily. Trying to really now start domestic manufacturing. Okay, it's still early days, but I think structurally, I think that would bring down the pressure on the trade deficit side. So I think these are the couple of factors, okay, which can be structurally positive for keeping the CAD under control. And also on the export side, while there has been some step up by the government trying to increase exports and the whole China plus one, but in a weak global kind of a demand scenario, I think that's not really helping at the margin. But I think over a longer term, I think even exports, net exports from India can improve if we're able to get traction in a few sectors where we're trying to displace some of the supply chains which we're importing from China. So I think that is really good from a macro standpoint, from an India perspective, which reduces the macro risk for foreign investors investing into India. And that's what we have been observing, that the volatility, right, on India in terms of the various parameters. For example, the rupee volatility, if you look at last year, okay, would be on the bottom 10 decile, right? If you look at all the currencies developed as well as emerging markets, we'd be the bottom decile. So I think these things are good from a structural macro long-term stability, and that would also probably mean that foreign investors, when they look at into India, I think they would probably look at the rupee depreciation, which normally is around 3%. In the past, would probably be lower, and would also make a case for the risk premium. Okay, what normally India would require. Okay, I think that will come down. So that means the multiples, right? When a macro stability is there, I think the risk premiums go down. I think will mean that the India will continue to trade at a higher multiples compared to its historical average.
Okay, well, the ideal mix of micro and macro conversation. Mahesh, stay on some more things to talk about, but we need to slip into a quick commercial break. We come back from the break and try and talk about some of the specific themes that could be interesting in addition to banks that we've already spoken about.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Back with Talking Point right here on NDTV Profit in conversation with Mahesh Patil. Before we get back to him, quickly get in my colleague Harsh to talk about one key brokerage note that stood out today, because it has got implications for the next set of conversation that we'll have with Mahesh Patil. Harsh, I believe it is a note from ICICI Securities on a defense-led company?
Well, yes, initiating coverage on Dynamatic Technologies. Largely it's what ICICI Securities is suggesting is it's an aerospace driven kind of story. Of course, they have a very strong foothold in the tractor OEM segment. That is obviously set to continue, but outside of that, what is really going to aid the numbers is the aerospace story. So what they're suggesting is that within the aerospace market, recent order wins for flight critical aero structures for the Falcon 6X for the Dassault Aviation, Airbus 220 doors, rear fuselage, all of that is set to aid some of the numbers that the company is posting. That's one. Second is with regard to the hydraulics and metallurgy division, that also is on the cusp of a turnaround. And the third piece that they're talking about is with regard to returns. Returns are set to improve. Why? Your debt is expected to start to come off. Your fresh capex is expected to be decent between the 25 to 35 crore kind of mark. And with regard to a couple of their divisions, one is the Erla division in Germany. That one has seen a restructure. And with regard to wind farms in Tamil Nadu, that also has seen a divestiture. So on both of those fronts, those are positives on the capital side of things, and therefore your returns are set to improve. Around 18 to 19% kind of margin, 17 to 18% kind of margin profile is what they are expecting, and a 19% EBITDA CAGR is what ICICI Securities is penciling in. 45 times FY26 EPS is what they are currently valuing this one at, 37% upside. 10,000 plus is what the kind of target price that they are putting on this one.
Thanks, Harsh. Thanks for putting that into perspective. Mahesh, I want to come to you on this dichotomy wherein there's this belief that value will see buying, and we are seeing the market not necessarily shying away from giving premium multiples to businesses which are poised for strong earnings growth in the next 2-3 years in newer areas, defense, aerospace, green hydrogen, wind energy, etc., etc. How constructive are you on companies which are growing strong but are priced to perfection on FY24-25 earnings?
So I think, there has always been this kind of tussle between, say, growth and value in the last 2 years, right? We've seen the value stocks do well. Significantly, there was a good amount of re-rating which has happened over there. On the other side, even growth stock, which have companies which have delivered strong growth or the outlook is good, I think they also continue to do well, right? Where the traditional growth stocks, which were there, like say in the retailing sector, other sectors, which we have seen, their growth has also got impacted. Their slowdown, I think they have seen some amount of correction. So you're talking about the whole challenge between growth and value, right? In terms of how it's playing out. I think the market will continue to reward growth, I think, going forward. I think the big, large value trade in the market has played out. I mean, at least the re-rating, in some of the value stocks. And I think going forward, as interest rates kind of have peaked out and as interest rate correction happens, I think market will start looking at growth.
Where is it that you have the highest conviction over the course of the next 12 months? Something that you has the highest weightage on your portfolio and you're very comfortable with that weightage?
Yeah, so I think at least in the medium term, I think we are positive on sectors like, for example, automobiles, especially the four-wheelers. While the stocks are run up, I think we see a reasonably decent volume growth and margin improvement over there. We're constructive on the private banks, where we think that the large underperformance last year, I think, provides a good margin of safety over there. Also in other sectors, like other discretionary sectors, like, for example, aviation. Then on the consumer discretionary side, where we've seen a slight slowdown last year, especially in consumer durables, I think we are getting more constructive there as we move forward. There we think that the valuation correction which has happened is a good opportunity to play from a slightly longer term perspective. We also positive in the telecom sector, where we're seeing that we haven't seen any kind of a price increase, but at the post elections, there is room for prices to move up, and that will continue to drive earnings growth over there. Apart from that, other sectors which have been underperformers, right, in the last year, like, say, for example, chemicals, because of the slowdown and the kind of inventory which is built up in the system. I think going forward, I think as the inventory correction takes place, one can see improvement in terms of the volume numbers, and a lot of companies have set up capacities in the last couple of years, which would start to now deliver. So these are some of the sectors where we would be positive in our portfolios or overweight at this point in time. Apart from that, even the industrials and the capital goods sector, especially in the power side, is where we see good demand drivers from a slightly medium to long term perspective, and that's the area also where we are constructive on.
Got it. Mahesh, last question, because we are at the cusp of the earnings, IT will kickstart this piece per se. Just a slight deep dive there. People are a bit confused because the numbers from Accenture, etc., don't look that great. The hope is that at some point of time, if the US economy, European economy is starting to show green shoots, then order flows will start trickling in. Are you looking at it as a glass half full or a glass half empty?
I think the IT sector has been this is a sector where even a slight change, in expectations or guidance has a larger impact on the stock prices. And it's fairly well researched sector in that sense. But I would still look at this sector as a glass half full, I would say, because while near term there is some amount of challenges, but I think the bulk of the downgrade we've seen behind us in this sector. I think, and going forward from here, it is just a matter of time, probably 1 or 2 quarters, where you will see at least the growth numbers starting to look better than what it was in the last year. And we still believe that structurally, I think the spend on IT and the spend toward digital will only increase. The whole discretionary spend, which have been cut in the back of the slowdown, I think will slowly start to come up. And I think the IT companies, especially the larger ones, right, and which are fairly well positioned and able to execute well, I think they should be able to see a recovery, at least in the second half of this fiscal year. So while the valuations there are not exactly cheap compared to the historical, that's why you might not see a higher return. But I would say this is the sector which one would want to buy in the dips if at all there is a correction, because there's a slightly weak macro on the US side.
Got it. Okay. Mahesh Patil, such a pleasure talking to you. Thank you for your time and your insights. Much appreciated.
Thank you, Neeraj.
All right, that's the view from Mahesh Patil of Birla Sun Life. And with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on
Markets close higher on the first day of FY25 as benchmark indices extended gains to third day, but broader markets fare better. Prime Minister Narendra Modi exudes confidence about coming back to power for his third term at RBI's 90th year celebrations. Says there will be lots of work starting the day after they take charge. Gross GST collections for March come in at 1.78 lakh crore, grows 11.5% compared to last year. Passenger vehicle sales outshine in March. Maruti Suzuki records highest ever domestic sales in a financial year. Tata Motors and M&M show PV growth on expected lines. Tractor volumes suffer for Escorts and M&M. Delhi court sends Chief Minister Arvind Kejriwal to judicial custody till 15th of April in the liquor policy case. ED says he's uncooperative and that they may require further custody at a later date. The second phase of housing eligibility survey begins in Dharavi. Surveyors will visit all the structures with unique identification numbers to collect and scan the documents related to the buildings. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, this show aims to bring you the market insights along with national and international news. But before we move on to the show, it's time for a quick market wrap because it's naturally the first day of the new financial year. We have our colleague Harsh Saita joining us to share the quick wrap and all the insights of all the market action.
Well, absolutely. Fantastic day of trade as we close that first day of FY 2025. You have the Nifty 50, which was up just about 0.75%. And if that wasn't enough, we had a very, very solid showing, especially in broader markets. If we can pull up the mid cap as well as the small cap indices, what you'll largely see 1.8% gains on the Nifty mid cap and the small cap indices. In fact, index was up, in fact, 3+% in trade today. Let's, before we go across and speak about the broader markets, let's look at the texture of the market itself. Let's pull up the heat map, try and see what was the key gainer and loser. And what you'll see, steel stocks were in focus. You had CDMO, Divis having some CDMO business also in focus. But look at those steel stocks, up roughly 5% on the back of a very strong set of numbers coming from China. That also, along with JSW Steel opening its new or commencing new facilities, as well as lastly iron ore prices coming off. So you'll see the Nifty metal has done very, very well today. But what didn't do well was probably some consumer names, Nestle, Titan. You also had auto names in focus, some of those in the bottom rung of that bracket. But let's quickly switch focus, look at some of the sectoral indices, how they've done in trade today. And media obviously gaining. In fact, media has been the worst performing sectoral index for FY24. It started FY25 on the strongest note possible. You also have realty and metal, which were in focus. We spoke of metals, realty doing very, very well today, led by something like a Prestige Estates, which has done very, very well. Let me also try and focus in on auto, which was the top sectoral loser for the day, 0.5% lower on the Nifty auto. So keep your eye out on the auto pack for tomorrow as well. Let me also switch focus to the mid cap and small cap indices, the BSE 500 if we can, on the top names, both on the which made the most gains as well as which made the worst performing names for the day. You have the likes of a CG Power, Sona BLW, Eureka Forbes, which hasn't done well today. But the likes of a PNB Housing, 19% up, that one on the back of a rating upgrade as well as a slew of notes coming through. Delta Corp, Welspun have done fairly well in trade as well. Back to you.
Right, Harsh, thanks so much for bringing us that market check on the first day of the financial year. We also had Aditya Birla Sun Life AMC's Mahesh Patil sharing his outlook on the IT sector and what exactly makes him bullish on it.
I think the IT sector has been this is a sector where even a slight change, in expectations or guidance has a larger impact on the stock prices. And it's fairly well researched sector in that sense. But I would still look at this sector as a glass half full, I would say, because while near term, there is some amount of challenges, but I think the bulk of the downgrade we've seen behind us in this sector. I think, and going forward from here, it is just a matter of time, probably 1 or 2 quarters, where you will see at least the growth numbers starting to look better than what it was in the last year. And we still believe that structurally, I think the spend on IT and the spend toward digital will only increase. The whole discretionary spend, which have been cut in the back of the slowdown, I think will slowly start to come up. And I think the IT companies, especially the larger ones, right, and which are fairly well positioned and able to execute well, I think they should be able to see a recovery, at least in the second half of this fiscal year. So while the valuations there are not exactly cheap compared to the historical, that's why you might not see a higher return. But I would say this is a sector which one would want to buy in the dips if at all there is a correction, because there's a slightly weak macro on the US side.
Well, we also had Prime Minister Narendra Modi exuding confidence on Monday about him coming back to power, and that too just weeks ahead of the Lok Sabha elections. Now, while addressing the gathering at the 90th anniversary of the RBI in Mumbai, he said that a day after taking oath, there will be a lot of work to do. Here's what exactly he had to say on this.
जो देश में नए सेक्टर्स बन रहे हैं, हमें उनमें अभी से एक्सपर्टीज डेवलप करनी चाहिए और उनको हम कैसे सपोर्ट करेंगे, इस पर भी पहले से मंथन होना चाहिए। अभी 100 दिन मैं चुनाव में बिजी हूं, तो आपके पास भरपूर समय है। आप सोच के रखिए, क्योंकि शपथ लेने के क्योंकि शपथ लेने के दूसरे दिन ही धमाधम काम आने वाला है। बैंकों का जो ग्रॉस एनपीए 2018 में 11.25% के आसपास था, वो सितंबर 2023 आते आते 3% से भी कम हो गया। आज ट्विन बैलेंस शीट की समस्या अतीत का हिस्सा हो चुकी है। आज बैंक की क्रेडिट ग्रोथ 15% तक हो गई है और मैं इन सभी उपलब्धियों में आरबीआई की सहभागीदारी और प्रयासों की भी बहुत बड़ी भूमिका रही है और वो बधाई के पात्र हैं। साथियों, आरबीआई जैसे संस्थान के बारे में चर्चा अक्सर फाइनेंशियल डेफिनेशन और कठिन टर्मिनोलॉजीज तक ही सीमित रह जाती है। आपका कार्य जितना जटिल है उसमें ये स्वाभाविक भी है, लेकिन आप जो काम करते हैं उससे देश के सामान्य मानव का जीवन सीधे तौर पर प्रभावित होता है।
That was PM Modi at the 90th anniversary celebrations of RBI in Mumbai this morning. Now we also have the second highest GST collection recorded in March at 1.78 lakh crore rupees. Let's go across to our colleague Janani for more details on this. Janani, can you
That's
hear
right,
us?
Pragati. As the end of the year nears, and yeah, that's right, Pragati. As the end of the year nears, as is the GST collections for the month of March, we're looking at the second highest monthly GST collections in the month of March at 1.78 lakh crore. This records 11.5% annualized increase on a YOY basis. But why is this figure really important? Because this puts the total GST revenue collected in this year at over 20 lakh crore. Now, net of refund, this comes to 18 lakh crore, which is already a significant milestone for the authorities. Let's get a breakdown of this number. Now, SGST, which is the State Goods and Services Tax, came at 43,746 crore. Central GST came in at 34,532 crore. Integrated GST, of course, which is the IGST that's settled between states, came in at 87,947 crores. Almost 40,000 crores of this is through imported goods. Cess charges, of course, cess collections came up to 12,259 crores. 996 crore of this was again on import of services. I want to leave you with one last figure, which is what has been driving this month's collections. Now, the authorities state it is domestic transactions, which have in fact risen by over 17.6%. We'll continue to bring more details on this particular story, but as of now, these are significant numbers and a good GST collection for the year so far.
Thanks, Johnny, for bringing us those details. Let's also shift our focus to the auto space. Maruti, Tata Motors, Eicher, M&M, Escorts, all have come out with their March auto sales figures. Now, to bring these more details and to break down the figures exactly for us, we have Puneet joining us with more.
Post 2 o'clock, we've seen a lot of results for the monthly numbers come in. Let's start with Maruti now. We did flash numbers. Total sales are 1.87 lakh units, which is up roughly 10%. We're also seeing that it is just a tad below expectation of roughly 12% growth. For exports, the results are around roughly 14%, and it's versus expectation of roughly 10 to 11% by brokerages. Although there are a couple of mentions about Maruti that it has record highest ever domestic sales of roughly 17.9 lakhs, and on an overall basis it has crossed 21 lakh sales in a financial year. And those numbers are reflecting in the stock price as well. Stock is up roughly 20% from January year to date. Moving on to Tata Motors, on an overall basis, the sales are up just 2% versus expectation of roughly 5%. The PV sales have been one of the key main drivers of sales, for roughly 50,000 sold in this month, which is up 14%, just a tad below the 16% expectation by brokerages. While the CV sales have not done well, they are down 10%, and here is the main thing, because the expectation was roughly 6 to 7%, so it has fallen a bit more than the expectations from certain analysts. Moving on to Eicher Motors, the Royal Enfield maker has reported sales of roughly 75,500. It is up roughly 4.6% versus expectations of roughly 7% growth. So that's a tad negative for that. While exports have been down roughly 23%, and this is also similar to Tata Motors CV also suffering. For VECV, which is the commercial vehicle arm of Eicher, this has been a positive surprise. VECV sales are down 5.6%, whereas brokerages estimated it to be down more than 9%. So that's one of the key triggers. Domestic CV sales down 6% versus expectation of roughly 12%. And although exports are very small, roughly 400 odd units of the total sold, they are up 11%, while brokerages has estimated a fall in this for roughly 2%. M&M we covered in the morning, but just quickly going through the numbers, total sales are up roughly 4%, and this is roughly 10% below the estimates from brokerages. Three-wheeler sales are the ones which are affected. It is down 7% versus a 7% growth estimated from brokerages. While tractor sales have been one of the key problems for the whole financial year for M&M as well as for Escorts. Tractor sales are down 26% on a month-on-month basis compared to last year as well, while the expectation were of a 16% fall. So that's also a key negative. And finally, finishing off with Escorts, tractor sales not doing very well. The total sales are down roughly 16%, which is flat in line with expectation. But domestic sales are down roughly 16%, while exports are down 24%, while on a very smaller base versus an expectation of roughly 14%. So in all, PV sales have done well for all automakers. We still await numbers from TVS and Bajaj to compare it with Eicher, but commercial vehicles and tractors have been key problems, while PV has done well. Back to you.
That was the auto sales numbers. We also have an update in the liquor policy case. Now, the Rouse Avenue Court has sent Chief Minister Arvind Kejriwal to judicial custody in the liquor policy case till April 15th. Now, this also comes after Kejriwal's custody with the ED already ended during the day. I am joined by my colleague Aishwarya Jain to tell us more on this. Aishwarya, what are you picking up and what are the latest updates?
Well, it's a big setback for sitting Chief Minister of Delhi, Arvind Kejriwal, as he has been sent to the judicial custody for next 15 days. He had to spend several days and nights now at Tihar prison from here on. But interestingly, during the arguments, it was for the very first time names of Saurabh Bharadwaj and Atishi came up, as ED stated that while recording the statements of Arvind Kejriwal while he was in the ED custody, it was said by him that it was Vijay Nair who used to report to Atishi and Saurabh Bharadwaj, and this clearly had broadened the entire investigation as to whether Enforcement Directorate will summon more Aam Aadmi Party leaders from here on or not. But it was also Enforcement Directorate who stated in the court that Arvind Kejriwal was uncooperative in the last 10 days of interrogation. He was not providing passwords for the mobile phones that were seized from his residence on March 21st when Enforcement Directorate raided his residence, and therefore perhaps for more interrogation, for more confrontation with different people who had been already arrested in the alleged Delhi liquor policy case, and those people who had been further summoned in this case needs to be confronted with Arvind Kejriwal. Enforcement Directorate also mentioned today before the Rouse Avenue Court that they do not want ED custody as of now, but because the investigation is taking a larger shape, they wanted to send him to the judicial custody, to which the special judge today had granted 15 days of judicial custody for sitting Chief Minister of Delhi, Arvind Kejriwal, and whether CBI in all affirmation who wanted the custody of Arvind Kejriwal in next few days, that will happen or not, that certainly remains to be seen. But it is Arvind Kejriwal who had to spend 15 days in the judicial custody. Now all eyes will be on the Delhi High Court on April 3rd when the bail plea of Arvind Kejriwal will be heard, and whether he gets some sort of relief from the Delhi High Court on April 3rd or not, it remains to be seen.
Thanks so much for bringing us those updates. We'll come back to you as we have more details on that. Now, the second phase of a comprehensive door-to-door survey in Dharavi, which is Asia's largest slum, commenced during this morning. Now, in this phase, surveyors from DRPPL will visit structures with unique IDs, and there they will collect building-related documents from the tenants. These documents will then be scanned on-site, put in a centralized system, and then given back to the people living in Dharavi. Now, the goal is to create a comprehensive library of the vast informal settlement and all the details of that. Here's a special report by my colleague Pooja Bharadwaj to tell us more about this special survey.
धारावी रीडेवलपमेंट प्रोजेक्ट जो सबसे चुनौतीपूर्ण प्रोजेक्ट कहा जा रहा है, पुनर्विकास योजना, उसकी शुरुआत हो रही है। सबसे अहम पड़ाव सर्वे जो शुरू हो चुका है। 18 मार्च को पायलट प्रोजेक्ट के तहत इसकी शुरुआत हुई थी। घरों की नंबरिंग की गई थी। धारावी के इलाके कमला रमन नगर में इस वक्त हम मौजूद हैं, जहां कुल 395 ग्राउंड स्ट्रक्चर्स हैं और आज से यानी कि 1 अप्रैल से सबसे अहम दस्तावेज जो यहाँ के नागरिक हैं उनसे इकट्ठा किए जा रहे हैं। 600 एकड़ में फैली वाली धारावी। जल्द ही इसकी सूरत बदलेगी। ये झुग्गी बस्तियां जो आपको नजर आ रही हैं, यहाँ पर आलिशान इमारतें होंगी। अडानी समूह सरकार के साथ मिलकर धारावी रीडेवलपमेंट प्रोजेक्ट पूरा कर रहा है और ये जो सर्वे है वो सरकार की तरफ से हो रहा है। सरकार ही दस्तावेज इकट्ठा कर रही है, उसे सरकारी ऐप पर अपलोड किया जा रहा है और सरकार की तरफ से ही इन दस्तावेजों की जांच होगी। तो इस तरह से घरों की नंबरिंग 18 मार्च को से शुरुआत हुई थी। घरों की नंबरिंग की गई है। 395 यहाँ पर ग्राउंड स्ट्रक्चर्स हैं और अब अहम पड़ाव है लोगों के दस्तावेज इकट्ठा करना। तो कौन पात्र है, कौन अपात्र? पहली बार ऐसा हो रहा है कि पात्र अपात्र दोनों को ही घर दिए जाएंगे। जो पात्र हैं उन्हें 350 वर्ग फुट किचन बाथरूम अटैच्ड घर मिलेगा और जो अपात्र हैं उन्हें सस्ते दर पर किराए पर घर मिलने जा रहा है। तो कौन पात्र है, कौन अपात्र, उसका जो डेटा है वो इकट्ठा किया जा रहा है। सरकार की तरफ से ही ये सर्वे पूरा हो रहा है और सरकार ही इन दस्तावेजों की जांच करेगी। ऐसे ही एक घर में इस वक्त हम मौजूद हैं जहां पर टीम, आप देखें यहाँ पर दस्तावेज किस तरह से इकट्ठा कर रही है और इनकी स्कैनिंग हो रही है। इनको स्कैन करके एक ऐप जो डेवलप किया गया है इस धारावी रीडेवलपमेंट प्रोजेक्ट के लिए, उस पर अपलोड किया जा रहा है और ये दस्तावेज उनको वापस कर दिए जाएंगे और इसकी जो जांच है वो सरकार की तरफ से होगी। तो डिजिटल सर्वे हो रहा है और टीम की तरफ से जो लोग यहाँ पर मौजूद हैं उनसे बात करते हैं। सर, अपनी पहचान बताएंगे।
प्रकाश मोटकटे, समाज विकास अधिकारी, धारावी रीडेवलपमेंट प्रोजेक्ट में काम करते हैं। आज एक कमलारामन नगर में जो नंबरिंग पूरा हुआ है उसके बाद अभी डोर टू डोर सर्वे चालू हुआ है। ये डोर टू डोर सर्वे जो चालू है, हर रूम में जाके इनका पूरा डेटा अपन कलेक्ट कर रहे हैं। उसमें उनका जो भी प्रूफ है घर के, सर्वे स्लिप 2000 की, उसके बाद लाइट बिल है, अगर ख़रीदा है रूम तो उनका सेल परचेस का ये है, आधार कार्ड है, ये ऐसे डॉक्यूमेंट अपन कलेक्ट कर रहे हैं, वो स्कैन कर रहे हैं और उनका एक एक जेरॉक्स जो है उसका हार्ड कॉपी अपन ले रहे हैं। और अगर ओनर मिस ये है तो उनका भी थंब इम्प्रेशन भी ले लेंगे, बायोमेट्रिक भी कर।
कोई यूनिक आईडी नंबर भी उनको दिया जा रहा है?
यूनिक आईडी जो रूम पर जो नंबर है वही उनका यूनिक आईडी है, लास्ट तक यही रहेगा इनका।
ठीक है। तो कितनी टीमें सर यहाँ पर आज काम कर रही हैं और एक घर में कितना समय जा रहा है?
5 टीमें हैं और जैसा पहले टाइम पे ज़रा टाइम ज़्यादा गया नेटवर्क इशू और लाइट के इशू की वजह से, मगर अभी जैसा प्रैक्टिस होते जाएगा वैसा वैसा टाइम कम होते जा रहा है।
Well, that was a special report from Dharavi. It's also time to slip into a short break, but please stay tuned because we have lots more lined up for you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching The Reporter on NDTV Profit, and as already mentioned, we are bringing you the entire news list of all the top stories of the day. Now, while speaking to a Tamil channel, NDTV, Prime Minister Modi said that the centre does not control ED and the PMLA code. He added that the ED's action against violations had helped bring in 2,200 crore and that the money was used for the welfare of the poor.
ईडी के संबंध में जो आप कह रहे हैं, क्या ये ईडी हमारी सरकार आने के बाद बना है? नहीं। पीएमएलए का कानून क्या है, हमने आकर के बनाया? नहीं, पहले से था। अब सवाल ये है कि ईडी ने काम क्या किया है। एक स्वतंत्र एजेंसी है, वो स्वतंत्र रूप से काम कर रही है, न उसे हम रोकते हैं न उसे हम भेजते हैं। उसको स्वतंत्र रूप से काम करना होगा और कोर्ट के तराजू में उसको सही निकलना होगा। हम इसमें हमारा सीधा संबंध हम आना ही देना नहीं चाहते। अब देखिए क्या हुआ, हमने ईडी के पास करीब 7,000 केसेस है, 7,000। उसमें से पॉलिटिशियन से जुड़े हुए केस में मात्र 3% से भी कम है। 7,000 मैटर्स, उसमें पॉलिटिशियन से जुड़े हुए 3% से भी कम।
That was PM Modi once again. Now, the Swedish retail giant IKEA is also looking to strengthen its presence in the B2B segment in India. My colleague Sesha Sen spoke to Sumit Parthi, who is the business commercial manager at IKEA, on the kind of businesses it is targeting now in India.
Right now, if we talk about, we have got 5 running stores, and every store has got a dedicated B2B service point, which is usually at the entrance of the store. We have team of interior designers at each service point, which helps customer with inspiring designs for their offices or their homes or their business places.
So, geographically, in which cities is your B2B service present at the moment, and where more do you plan to take this service forward?
So right now we have presence in stores, cities like Bangalore, Hyderabad and Mumbai. However, with our expansion plan, Delhi NCR is the region that we're looking or betting big on in the future.
All right. Any timeline that you can share?
We're looking to have a presence in terms of B2B by, say, mid or end of 2025 for Delhi. But yes, we are also exploring other markets.
So that's in line with the B2C business.
Yes.
Okay, you have launched B2B. It's been quite some time. It's been 4 years since you, ventured into the B2B market. So how has been the growth trajectory? And if you could share some numbers in how much the segment is growing and how big you would expect this to contribute to your overall sales?
Yes, first you said right. Our growth trajectory has been really, really amazing. And we have been contributing to overall IKEA India business with a business share of 15 to 20%. I would not be able to divulge the right numbers here. But yes, as I said, 15 to 20% of our business comes from B2B. And if you look at the last 4 years journey, we have been growing almost double digit every year. And we want to maintain the same momentum.
Well, we also have some big news in Turkey. The Turks dealt the current president and his party through a big electoral blow on Sunday. Now, in a nationwide mayoral vote, in fact, the election has reasserted the opposition as a political force and reinforced the Istanbul mayor as the president's chief rival. With most of the votes now counted, the Istanbul mayor by 10 percentage points was leading the race in the mayor race in Istanbul, while his Republican People's Party retained Ankara and gained 15 other mayor seats in other places across the nation. We also have another update from the Supreme Court of India. Now the top court has refused to grant interim relief to the Kerala government on a plea seeking to direct the central government to relax the state's borrowing limits. Varun joins in with more details on this.
Rightly said, the Supreme Court has refused to grant an interim relief to the state of Kerala on a plea seeking to direct the centre to relax its borrowing limits. Now, the case pertains to a plea filed by the state of Kerala against the central government, accusing it of imposing a net borrowing ceiling which limits the state's borrowings from all sources, including open market borrowings. Now, according to the plea, the reduction in borrowing limits will have an extremely damaging impact and cause long-term economic damage to the state, which will be irremediable in the short and even the medium term as per the plea. Now, while refusing to grant an interim relief to the state, the top court said that at this stage, the balance of convenience lies in the favor of the union. And the court said that during the course of the hearing, the union has already made an offer for an additional borrowing to the tune of Rs 13,608 to the state. In addition, the court remarked that even if we assume that Kerala's financial hardship is due to the actions of the union, its concerns have been relieved to some extent so as to bail out the state from its current financial hardship. However, the court clarified that all these observations have been made only for the purposes of adjudicating on the aspect of an interim relief, and the court said that the main dispute which pertains to Article 293 of the Constitution, which deals with borrowings by the state, has not yet been substantially adjudicated upon by the top court. Now, as a result, it has referred the dispute for a final adjudication to a bench comprising of 5 judges of the top court.
Well, that's all the time we had for you on The Reporter, but please stay tuned to NDTV Profit for all the latest news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures.
Old tax regime or new tax regime? The new tax regime is default, so does that mean I won't have a choice? And if it gets chosen for me, how do I shift to the old tax regime? Which deductions should I claim? And how should I plan my taxes if I'm a senior citizen? And I have to manage my returns as well and advance taxes. Hello and welcome to this special broadcast. It's the start of a new financial year, and frankly, it's the best time to get your tax planning out the way because it means lesser headaches down the road. And this is something that a lot of people find a little challenging. What we're going to do on this broadcast is to break down some of those trickier issues so that you can make your decisions with confidence. I'm Alex Matthew. I didn't mention that earlier. Now, let's introduce our guests for the day. We've got Arnav Pandya, founder of Money Edu School, and Arvind Rao, founder of Arvind Rao and Associates. And they're going to answer all of the questions that I have mentioned and a few that I have not yet mentioned. Thank you so much, gentlemen, for taking the time. Now, I'm sure that a lot of people tuning in will be wondering at the start because the new tax regime is the default regime now, which means, as I understand it, that if you do not send an intimation to your employer, the person that pays your salary, then by